somewhat higher prices. So what are you seeing there?
Yeah, well, we carried a record 119 million passengers in the first half of the year. That was about 3% up on the prior year. A bit slower than we would have liked. There were some delays in Boeing aircraft coming in early in the year. They're doing a great job. They've caught up completely now since then. Fares, as you said, up 13% in the first half of the year. We had a really strong Easter in Q1. We'd weak prior year comps in the first quarter, and we recovered all of the 7% fare decline that we had in the second quarter last year in the quarter just ended. And of course, as CFO, I was particularly proud of our performance on costs. Costs up just 1% on a per passenger basis because we had very strong fuel hedging in place, which helped offset double-digit increases in air traffic control charges and environmental costs.
And in terms of projecting ahead on passenger traffic and things, it seems like you're being maybe a little bit more cautious. What are the elements that are going into the next half?
Yeah, well, on traffic, we expect to finish this year at about 207 million, which is marginally up from where we had originally planned.
Okay.
We were targeting 206. Boeing, as I said, have done a great job getting aircraft through the summer, and we took 10 aircraft in September, for example, 5 last month. So we've been able to tweak up that number to 207 from 206. That's about a 3.5% increase. We are a bit more cautious on fares into the second half of the year. Don't expect to see 7 or 13% fare increases. The comps are more difficult. The online travel agent issues that we had last year annualized in September just gone, so it's more normalized kind of comps into the second half. And I don't have visibility, so Q3 is going to depend on how Christmas goes. Q4, don't have any bookings in the book to talk about at the moment.
You say Boeing is fully caught up. So where does that leave you in terms of the forward delivery expectations and everything else?
Yeah, we've an order book of 206 aircraft for what we call the game changer, the Boeing MAX 8-200. We've 204 of those as of the end of last week. The remaining 6 will come this side of the back end of February next year. So we're now, for the first year in many years, looking into a summer where we'll have a full complement of aircraft. That will enable us to grow by about 4% to 215 million passengers. And then more importantly, the MAX 10. We've 300 of those on order, and we're very much planning with Boeing now to get the first 15 of those in the spring of 2027. And that's what's going to enable Ryanair to grow to 300 million passengers per annum by FY34. So we've got a decade of profitable growth coming at us.
So that seems like you're presenting it as it's strictly a supply question in terms of your growth meeting that target. Is it all kind of market share won from elsewhere? You see the economy being that much stronger in the next year or two?
Well, capacity is hugely constrained in Europe,
Yeah.
despite the fact that Boeing are getting better and Airbus are getting better. They're still way behind in their order books, and it's going to take them a number of years to catch up. We've still got the Pratt & Whitney engine issue on the GTFs. That's probably going to take about another 2 years to go through. We've got consolidation happening in Europe at the moment, with SAS being taken over by Air France. We've got TAP up for sale, and we've got weaker carriers who just don't want to compete with Ryanair because our cost per passenger of €35 is some 80% lower than our next nearest competitor. To put it in context, over here in the United States, Southwest are about 400% higher. So we've got a really strong cost base. Airports are scrambling for growth. They know Ryanair is going to be able to deliver the growth to them. So we're growing in places like Sweden, we're growing in Italy, we're growing in Morocco, and lots of other jurisdictions across Europe. At the same time, we're pulling our scarce capacity out of airports and regions where they're putting up taxes, environmental costs, and we're delivering it to lower cost regions for ourselves.
All right, I appreciate the update. Thank you very much.
Pleasure.
Andrew.
Okay. Now to the Fed and what investors should expect from the central bank. We've been talking about the Fed all morning. Senior economics reporter Steve Leisman joins us with the latest. Hey, Steve.
Hey, good morning, Andrew. Friday brought out a chorus of Fed hawks and some doves, with Fed communications sounding increasingly chaotic. Beth Hammock from Cleveland, Lori Logan from Dallas, Jeffrey Schmidt from Kansas City, all three opposed that October cut and cast doubt on whether they would support a December reduction. Only Schmidt is the voter there now. Their basic argument: the economy has plenty of momentum, inflation is running above target, Schmidt says it's spreading, and there's no signs of tight Fed policy anywhere in the markets. Meanwhile, Fed Governor Waller, a leading contender for Fed chair, and Governor Stephen Myron, on loan from the Fed to the Fed from the Trump administration, both spoke in favor of further cuts, while Powell said the Fed would slow down in the fog. Waller responded in an interview, the fog doesn't tell you to pull over to the side of the road, advocating there for a December cut. And Myron, who has now dissented twice in favor of 50 base point rate cuts, said the U.S. risks recession if the Fed doesn't cut.
Recession.
Lots of Fed speakers this week. I count 11 of the 19 Fed members
Recession.
talking. Not all of them talking directly about the economy, monetary policy, but it seems like sometimes they've been stepping out of their regularly scheduled topic and making some comments about it. So just about every day this week there's somebody talking. Wednesday, though, maybe the most important day of all. We get the ADP data, and many Fed observers think it's going to take definitive jobs data either way to bring the
Jobs data is not
in order to
correct, idiot.
Comments on.
Whoa. That's high.
What did you make, by the way, separately? We were talking to Tom Lee earlier just about some of this repo action recently that the Fed's been pursuing with some of the banks. Should we be anxious about that at all, or no?
A little bit of tightness in the markets. The Fed's trying to feel its way, Andrew, into what the right level of reserves is, and they're going to be stopped.
They're behind the curve. Won't you say it, you Russian idiot?
Putting a little liquidity back into the markets. It's not QE, but it will be some increase of the balance sheet to go along with the increase of the economy. Not sure when that's going to happen. You get to quarter ends and month ends and things like that, and you get some action out there. It's an interesting time to watch it. Powell kind of played down the importance of this, and we haven't seen too much example of that. We had a flurry a couple weeks ago, so it's something all we can do is watch it, Andrew.
And then, Steve, if your betting line on December, I mean, I know the betting line, but I'm curious about the Steve Leisman betting line.
I'm not going to make a bet. Sometimes you watch the odds till they say there's the horses are in the gate. I really want to see the jobs data.
That's not correct.
This idea out there from Schmidt and others that the economy has plenty of momentum. And
You look at the odds before the horses in the gate.
If you were in the office when we had that special weekly.
By the time they get to the gate, the race is on.
Yep.
We get the regular.
You don't have time to make the bet.
We'll get a series of weekly ones.
I'm going to argue with this guy forever. He's a Russian diplomat. He's a communist. For I'm Washboardjim. I'm a capitalist. We need the government data.
They're showing weakness that will cause the Fed to do that. I want to see that data, and if you don't mind, then I'll make my bet.
Yeah.
Fair enough. Steve Leisman, the professor. Always great to see you. Thank you, sir.
Steve Leisman.
Mike.
All right, coming up, more on what the markets are watching between earnings and starting a second month with no government economic data. And a major gambling scandal hits the sports world. The CEO of Fanatics Betting and Gaming will tell us if he's seeing any impact on demand. Squawk Box returns in just a moment.
Dun 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 dun. Me and my drum. Okay, I'm glad he's gone. I can calm down and go buy some Reese's for the IRS people. La-dee-da. Today's resistance will be support. If we break 686.51. I'm finding an equilibrium. I don't know, but we'll do this. For I'm Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about a head and shoulders. Boom. boom, boom. And support to stay bullish is right here at 683. Yeah, for right now. To stay bullish, we need to hold 683.40. To break resistance, it'll be between 685.42 and 686.57. Any questions? Yeah, Jim. Is it true that you use soap when you take a shower? Only on my hair. I do not use body soap, but I have started using some of this. Let me go. Let it be for today's commercial. I'll go get it. Today's infomercial is brought to you by Washboardjim. It will be Dr. Teal's body wash. This is a lavender, oh, excuse me, no interruptions. This is a lavender essential oil to help calm the mind, promoting better night's sleep. So every night when I take a shower, I use Dr. Teal's body wash. This is 24 full fluid ounces. They also have it in bath bubble soap, if you'd rather prefer that. But I just take me a cloth, rub some of this on that cloth, and then rub it over my beautiful body. It soothes my skin, leaves me smelling fresh and clean, and I sleep much better. Dr. Teal's body wash.
Is there any reason you're seeing out there to kind of overthink it and believe that maybe the odds might be defied this year?
Good morning, Mike. Great to see you today. I think that the market is holding up quite well. And to your point, November tends to be a good month. You know, we're coming into this up 17% or so. And when you get a year like that, you tend to see November and December picking up another 3 to 5% to end the year. And with consumer balance sheets strong, corporate balance sheets strong, earnings looking pretty good, 80% beats more or less top and bottom line. Single double or lower double-digit growth on earnings. I think we have a good setup here for year end.
Yeah, the last couple of years, toward the end of the year, everyone trying to formulate their strategies for the turn of the coming year. Last year felt like it was very popular to say, yeah, sure, it's been a really concentrated market, and maybe the most highly weighted stocks in the indexes are a little more expensive than the average one. So maybe go with the equal weighted version of the S&P 500. It seems like you're still involved, but maybe not taking as much concentration and valuation risk. Well, that's been wrong this year. I mean, you're down something like 8 percentage points.
You're down 8%.
S&P versus
Jim, have you ever thought about selling?
So how do you think about that? Whether it's a matter of just sticking with the winning strategies or looking for mean reversion somewhere?
Yeah, I think it depends on how your portfolio is positioned, right? If you have a heavy exposure already to the Mag 7 and the or the $1 trillion winners here in the market, then I think it's reasonable to hold those positions. And when you add exposure, diversification, whether it's something like an X-Mag ETF or an equal weight product, it's not the worst idea to diversify your portfolio. But I think in the near term, there's so much focus and investment opportunity in everything that has to do with AI infrastructure, AI power spend. And that's really what you're getting from earnings now. And that's really where you're seeing dollars going. This massive build out of CapEx spend is thought to be in the trillions by recent McKinsey report. Goldman came out and said, 165% increase in energy and AI infrastructure is needed to support all of these build outs that we're hearing from the Mag 7 companies. So I think, it's hard to give up on those names when the future is very much leaning towards AI and AI build out. But you have a second and third derivative that you can expand to there in some of the power and infrastructure names.
Yeah, and just to be clear, ex-MAG, of course, one of your funds. It's all stocks in the S&P besides the MAG 7. Now, you also have a lot of these thematic ETFs, right? So AI and power infrastructure, as you mentioned, as well as quantum, drone tech. Now, that's been some of the wildest, kind of most speculative and exciting parts of the market. Let's just put it that way. So, I know you're a beneficiary of the excitement in those areas, but how do you evaluate whether things are getting overdone in some of those?
Well, look, it depends on the play, right? So AIPO, which is an AI power play, that's a fairly new ETF, and it's gathered tens of millions of dollars overnight because I think investors are looking for what is the next NVIDIA? What is that next second, third derivative? We're talking about CapEx going 100% to powering this and building out this infrastructure. And I think investors are seeing that as where the puck is going. That's happening right now. We heard it this morning, right? You have Google going out to raise debt for AI power and infrastructure. You had the Iris Energy deal come out this morning.
Well, I don't know if that's a good idea, honey.
Much happening and active, and so those are very tangible opportunities. Then I think that there are opportunities that are positioned for the future. So quantum computing is something that's going to play out in the next 5 to 10 years, and it's it's where AI was in its infancy, right? So that's a longer term hold. You have to expect that choppiness, that volatility. You have some of those smaller players in there. Could be lucrative as quantum becomes more commercial. And to your point with the drone play, Jedi, that's just the future of warfare, right? It's changing. AI is changing the way that you receive information from targets. Drones are changing the way you have unmanned systems, things like this. It's really the future of military is AI, and that's playing out in that type of sector.
Yeah, people are noticing it for sure. Sylvia, thank you.
Thank you, Mike.
Sylvia, you're on
Coming up,
fire.
Big competition and big controversy in the world of sports betting. The CEO of Fanatics Betting and Gaming, Matt King, will give us an update on demand and how his company deals with suspicious wagers. SmartBox returns in just a moment.
To know when to hold them, know when to fold them, know when to walk away, know when to run. We've got the support channel. Ooh, why didn't I go? I'm going to bring it on down to here. Yeah, that's what I'm going to do. That was a good idea. That was an excellent idea. Support channel. Support channel. Support channel. No, that don't work. Jim, I'm going to go to Walmart right after I get out of trading today and go buy your body wash, because I heard you smell real good. It's correct. I do smell good. There's the support channel. Okay.
Congress is now awaiting answers from the NBA on that gambling scandal that shook the sports, its fans, and the sports books. And joining us now with more, Matt King, Fanatics Betting and Gaming CEO. And it was immediately apparent to everyone, Matt, that this could be a really big problem for the NBA, for gambling and everything else. I don't see it really exploding into that. Can you tell from demand, or where are you right now with this?
Certainly from consumer demand, the NBA season's off to a great start. NFL has been an amazing season so far. I think if you look at this kind of the issues that came out overall,
I don't care.
First, you got to take all the poker stuff out, right? Poker had nothing to do with the sports betting side. And then from my perspective, when you look at the sports betting side, this is the legal market working, right? So the way I look at it is, this is an issue very much like insider trading.
It's corrupt.
Right? You have a stock market, people are always trying to get an unethical edge or a criminal edge. Same thing in sports betting. This stuff, it has happened in the past. You know, the reason that you got caught was because there is a legal market, and we were able to see it quickly. Those bets got reported the day that they happened, and then the investigations kicked off.
The Fanatics, DraftKings, it's so easy to see how you could get someone to, I don't know, miss a free throw or not. I mean, I can see the way, but, so it's much easier, but with the algorithms and the way it's happening, immediately, almost, from the weird things that happen with it. So it might be easier, but it's much easier to detect it and to get caught.
Correct. That's exactly right. It is very easy to get caught. And frankly, I think what you're going to see is that when this gets enforced, the deterrence effect will start to come into play. Because I think, frankly, a lot of people don't appreciate how serious of an issue this is if you get caught. And I think what you're going to see is people go to jail for this.
What will you immediately say, okay, we see that there's certain prop bets that, I mean, it's fun. I mean, to bet instantaneously on whether something's going to happen in the next 10 seconds on a game, but what is problematic where you get rid of what we're not doing?
So the market offering is always evolving. So if you look at the two-way contract players after Jonte Porter, as soon as the NBA asked us to stop offering those, we stopped offering.
What do you mean? How does that work?
So there was basically a class of player that's on a 10-day contract. So very short term in the NBA. They don't get paid a lot of money. And so you're in a world where those types of players that aren't getting paid a lot, you would argue are kind of some of the ones that are most.
But we now know you can make $20 million a year and still be screwing around.
That is true.
Right.
But so to answer your question, we're always evolving the product offering. I think you're going to continue to see an evolution around props where things like fouls or missed free throws get restricted further, and we're good with that. From our perspective, this is still a very nascent market. It's one that we're looking to always be a good partner to the NBA, and so we'll continue to evolve the product offering.
Corruption.
Hey, Matt, I'm curious what you make of prediction markets, because I don't know if you saw last week, a very interesting thing happened. The CEO of Coinbase did his conference call, his earnings call, and during the call, at the very end, he mentioned a whole bunch of words. He actually said, I just want to add here the words Bitcoin, Ethereum, blockchain, staking, and Web3 to make sure we get those in before the end of the call. He did that to troll all of the folks on the prediction markets because $84,000 had been bet effectively that he would use those words on the call. Meaning people are betting on these things happening, and then he decided to affect
sounds like corruption.
by actually saying those words. And so I wonder, I mean, we're talking about in the sports context, I mean, that's where you're going here with free throws and the like, but how all of this sort of metastasizes and just how and whether these things can be manipulated or not.
DraftKings earnings this week.
So I think prediction markets absolutely can be manipulated. I think that's one of the reasons why you need to actually have robust integrity in place. I know there's a lot of conversation with the leagues around, from their perspective, and frankly from our perspective, prediction markets are simply a parallel regulatory regime. It's the Fed stepping in to provide a regulatory regime that really authorizes sports trades, if you will. But you're going to need the same investment in time and money and effort with the leagues to make sure we get integrity right in those places. And then you get the right surveillance in place. And then from there, you also actually have the right enforcement of any issues that come up. Because I think you're exactly right, Andrew. Markets are subject to the same types of manipulation as any others, but it's the same type of manipulation that any financial market is subject to.
You always have illegal betting competition. I guess.
Right, exactly.
You've taken a lot of the business away. Did you know those 4 New York crime families were still powerful and involved in this stuff? The same ones.
I did not know that, actually. So
You did not know that?
I did not know that when it was that it was those specific families. So, but you're exactly right. The first step in all of this is when the market is legal, you can actually monitor trading activity and you can catch stuff like this.
Hey, Andrew, you know what I bet on this morning?
Yeah.
That the words 1929 would be mentioned on Squawk Box today.
Really? Really?
I got no
What-
odds on that.
parlay?
I got
What's
no
the
odds.
parlay? What's
I
the
got no odds on that. I bet like $10 to make like $10.20 total. Because it was just, I guess the people
That's
knew
pretty good.
it was gonna happen, probably. Like it was a no-brainer.
I think it's a good bet. I think it's a good. But let's see what happens tomorrow, and the day after that, and the day after that.
Thank you. I mean, is that possible? Could you bet on that?
Okay.
I wonder if you could. Is that possible, Ender? Maybe it'll be
You Sure.
That's
I mean,
funny.
Be low volume. Probably just you and myself would be the.
All right.
When we come back on the other side of the break, we've got bring you an update on the crypto complex as prices dip, and we have a lot more on the big deal of the morning. Kimberly Clark's deal to acquire Kenvue. It is moving the market in a big way. You can see it there. Kimberly Clark off now, about 15%, 16%, but Kenvue up about 20%. Squawk Box, be right back.
That's funny. We all know it's a scam. If we go into a recession, which we're not, Walmart should bounce. Okay, well, I'll be back.
And welcome back to Squawk Box. I'm Dominic Shim with a check on your morning movers. We're going to start with what's happening with cryptocurrencies. Moving generally lower today and continuing that slide that we've seen over the course of the past month. Bitcoin's now trading right around $108,000 per coin, but it's about 14% off its all-time high that it reached just last month. So crypto prices generally lower. If you take a look at the crypto-related stocks like Strategy, like Coinbase and others, they're also lower, while names like Mara Holdings and Riot are just edging higher. So a bit of a mixed trade in cryptocurrencies with those cryptos themselves down. Then you got shares of Berkshire Hathaway climbing just about maybe 1% or so after the conglomerate reported a sharp rebound in profits for the third quarter. Operating profits rose 34% to roughly $13.5 billion amid a surge in insurance underwriting income. Buffett once again did not repurchase any stock during the quarter, despite a pullback in the shares of Berkshire since he announced his upcoming retirement back in May. So keep an eye on those Berkshire shares. And we're going to finish with a check on shares of Palantir, higher by just about maybe 2.5%, ahead of the defense tech company's third quarter report after the closing bell today. Analysts are expecting earnings to grow by roughly 70% compared to last year. Those shares have been on, of course, a tear, up over 170% this year. Options are implying right now what could be a move of roughly 8.5% to 9% up or down post-earnings report, and that's a lot less volatile than what Palantir shares have done on average over the last 8 quarterly earnings reports. So, Mike, Palantir, the stock of the day, after the closing bell, we'll send things back over to you.
All right, Tom, thanks. See you again in a bit. Coming up, a closer look at the economy without the help of government data. Plus, a battle between YouTube TV and Disney is leaving users out of the ESPN games and possibly Monday Night Football. Squawk Box returns in just a moment.
Welcome back to Squawk Box. Joining us now, former Biden Treasury official Natasha Sarin. She's a professor at Yale School and president and co-founder of the Budget Lab, and former economic advisor Stephen Moore. He's now with Unleash Prosperity. Stephen, you still have ears with people that are in charge doing all these things. What is your best guess as to what's happening behind the scenes right now? Do you expect what Chuck Schumer's wanted all along, some type of backroom deal with Thune and President Trump mediating that somehow gives Democrats a a guarantee on extending these subsidies? Is that what finally happens? Or does Trump hold firm and say, you just got to open the government before we do anything?
Well, I hope the latter. Look, this is a fight about some important issues. We're running a $2 trillion annual deficit. We've got a debt. When I first came to Washington 40 years ago, the debt was $1 trillion. Now we're at $38 trillion. Everybody knows that this can't continue. And the Republicans have these tiny little cuts in the budget, $1.5 trillion out of $80 trillion over the next 10 years. And Democrats don't even want to do that. So I think it's really important that Trump stick to his guns here and say, look, these are important cuts in programs. Most of it is trying to just get rid of fraud in these programs. You don't have to believe me, by the way. You look at the government's own auditors that Medicare and Medicaid have over $200 billion of fraud per year. That is people who are not eligible for the programs getting it. So this is important if we want fiscal discipline in Washington.
Natasha, I know that most Democrats just feel that it's an inalienable right for people to have health care. So someone's going to pay for it one way or another. Others point out the Affordable Care Act has been anything but affordable, really been unaffordable, and maybe has exacerbated healthcare inflation. But one way or another, if the government's is that your argument? The government's gonna end up paying, whether it's eventually single payer, which some people think that's where Democrats want it to go anyway, but is that basically what they're saying? You know, people deserve this, you gotta pay for it.
No, I actually agree with Stephen about the importance of taking seriously fiscal discipline. And we're in a situation where we're running a 6% deficit to GDP by the end of the decade as a result of, in part, the tax package that was passed this summer. We're going to be closer to 8 or 9%. And so these are really, really important issues. But what I can tell you as an economist is we know that the Affordable Care Act and access to affordable insurance has been hugely important and impactful for the people who have access to that insurance. Work that academics like Bruce Meyer have done has shown that the cuts that were legislated this summer, which Stephen thinks are small cuts, are going to lead to something like 100,000 excess premature deaths over the course of the decade. So these things are big deals and they have huge, significant consequences, which is why I suspect they're tied up in the types of political battles we're seeing at the moment.
Yeah. Predicting deaths, I don't know. Bill Gates we'd all be supposedly frying in the heat right now, and there have been millions of deaths already, and now he totally backed. That was a total exaggeration and pipe dream. I mean, I don't. That's what we can't use that.
But we can use we have some estimates about exactly what's happened over the course of the last few years as people have gotten access to insurance. And we know that we've prevented a lot of deaths, so it's not crazy to suspect that as you take away that insurance, you're going to have more.
It would be nice to cover everyone, but we also, there are obviously, Stephen, flaws in the way Obamacare is administered that Republicans probably need to come together with Democrats to fix it because it's not going away at this point. Is that what we should be doing right now, before the government reopens or after?
Well, you made an important point that, you know, I remember debating this bill in 2010, I believe it was. It's been 15 years since we passed the, quote, Affordable Care Act. And since that time, the cost of health care has almost tripled. It is a huge detriment to our economy that we keep pushing so much money into healthcare. We could have better healthcare in this country for almost half the cost. And so I think the people who support Obamacare expansion have to explain to America why they defrauded the American people and said that this would save money. You saw probably just the other day in the Wall Street Journal that the average family is now paying $35,000 to $40,000 a year for healthcare. I mean, Joe, nobody can afford that.
Should we just acknowledge that? I mean, we don't want, and Republicans look at the midterms coming up, you don't want premiums doubling or tripling. We know health care is expensive. I mean, Natasha, what do you want? Single payer? Is there any way that would help? Is that the holy grail for the left?
I definitely don't. I definitely don't think that that's the holy grail. And in part, I think what you and Stephen are discussing is like a bit of the challenge. Like, we all agree that healthcare is too expensive. We all agree that surely there are sensible reforms to make, but actually getting from where we are to what those sensible reforms should be is just a harder task than one might hope. And so I agree with you, Joe. Like, do you really want at the end of this year to be looking at American families and telling them you need to pay twice as much as you're paying, which is already a lot, for health insurance? I think that's just a pretty difficult thing to be telling people, especially at a moment when they're seeing thousands of dollars in price increases as a result of tariffs that this administration is pursuing as well.
Let me respond to that, because the real problem in America today is not too little health insurance, but way, way too much health insurance, Joe. I mean, if you look at the situation today, people have basically first dollar coverage. Nobody is paying any attention to what anything costs. By the way, the people who are in on this scam, the people who have made the most money on Obamacare, have been the big health insurance companies. I mean, it's robbery. If we have this expansion of Obamacare that the Democrats want, 80% of that money is going to go right into the hands of the big insurance companies. I mean, I don't want to sound like Bernie Sanders here, but I guess I am. I mean, why do we keep funneling?
It's not an expansion of Obamacare, though. It's what people are already experiencing with respect to the premiums.
Except it was supposed to be an emergency. It was post-COVID to get us through COVID. COVID ended 5 years ago.
Again, I think you're good. I think it's a hard thing. Just as an economist, these are families who have budgeted for the fact that these premiums are what they are today. To go and tell them that they're going to pay twice as much as they are for health insurance coverage, many of them won't get that health insurance coverage and will have adverse health consequences. And I just think that that's a hard thing to be doing.
The reason people are paying so much for the premiums is because Obamacare was a huge failure. It was a fraud. I mean, at least the Democrats should admit that.
I would be so keen to spend some time with you. By the way, this is just one of many problems that are on the horizon as our demographics shift, right? We have the Social Security trust funds that are set to expire, the Medicare trust funds that are set to expire all over the course of the next decade. So I would be so keen to spend time with you to hash out exactly how to solve these efforts, but it's a harder task than you're laying out.
I know you, and those are 3, 4, 5 words you never hear really from anyone, do you? That I mean, that's very nice, Natasha, for saying that.
By the way, there's more tax revenues now than ever before, so you can't blame this big deficit on tax cuts when we're collecting more revenue right now than ever before in American history.
I want to spend some more time with both of you on an equal opportunity basis. I was only kidding, Stephen. I want to spend more time with you. And but that was nice, Natasha.
Well, I'm excited to talk tax with you all too, because with this terrorist court case, it'll be interesting.
I just want to mention one word, Joe. One word: 1929.
That is chaos. Oh, there's it. Andrew's clapping. He's clapping because of book sales, and I think you're not allowed to bet on that, Andrew. That is insider trading. You're not. Natasha, you'll be back. I don't know if the Democrats want you. Way too reasonable for that side most of the time. But thanks for coming.
Always good to be with you.
Okay, you too. See you, Stephen. Thanks. Coming up, a mega tie-up in the consumer health sector. Details on Kimberly Clark's deal to acquire Kenvue. That's next. Squawk Box will be right back.
Kimberly-Clark reaching a deal to acquire Kenvue for more than $40 billion. David Faber joins us with the details, although I guess, David, we've been watching the way Kimberly-Clark shares have been trading in reaction to this news. There is an equity component of this proposed transaction, so maybe that brings it below the $40 billion number, but what can you tell us about some of the ins and outs here?
Yeah, sure, Mike. You know, it's something I've been tracking. We've been discussing for quite some time on Squawk on the Street, given Kenvue's issues, certainly in terms of its organization. Got rid of its CEO this summer, for example, has an interim CEO. Just, you know, really since its spinoff from J&J some time back, had never been able to really get it together, despite what is an incredible portfolio of brands that includes, of course, Tylenol, which we'll get to in a moment, Listerine, and you know, many of those other Johnson & Johnson brands that people know well from in the consumer aisles. Kimberly-Clark's been talking to them since June, so it has been going on for a while, is my understanding. And it does bring together an enormous group of brands, of course, that conceivably will rival the likes of P&G. At least that's what the intent is here. And of course, the hope is that at some point you start to get a multiple in the stock market that that comes close to that of P&G. Not happening today, and probably won't happen for some period of time. But as I said, Kenvue is a company that's been in sort of a state of transformation or a need for it. Now it's going to be done within the merger context, and the fact that they at least identify as much as $2.1 billion in cost synergies gives them some room here to figure things out, both at Kenvue and then overall for Kimberly-Clark as it brings the company in before the close of the deal, which is not expected until next year, close of the second half of next year. As I mentioned, $2.1 billion in revenue run rate synergies. I'm sorry, not revenue, mostly cost synergies, $1.9 billion. There are revenue synergies as well, and then they see it being accretive over time. Mike, you know, you mentioned the consideration here, and it is largely stock. It's $3.50 a share in cash. The rest is in stock. It is, as you said, it's a ratio 0.14625. And given that decline in Kimberly-Clark shares, of course, the overall value of the deal is going to be significantly impacted. That said, at a 50% premium, you're still going to see Kenvue up a lot. But the hope is here, certainly, of both Kenvue and agreeing to the deal and Kimberly-Clark as well, is that you're going to have 46% share of the shares owned by Kenvue shareholders now. They're going to get the opportunity to participate in significant upside over time as they take in these synergies, as they reorganize the Kenvue business to a certain extent. And one day you may actually reach that promised land of getting a multiple closer to that of P&G or Colgate. Kimberly-Clark's been interested in acquiring this company for a long time, guys. In fact, they tried to propose a reverse Morris Trust deal to take it out of J&J before it got spun off. They weren't there. They weren't successful then. They were this time, and getting it at a price that is significantly depressed in part because of that linkage that is claimed by this administration between Tylenol and autism, which significantly impacted the shares, and my understanding as well is took down what was the original cash portion of the deal, a commensurate amount to account for that decline in the stock. We'll have more in the 9 o'clock hour. Andrew, over to you.
Hey,
Actually,
David, my
go ahead,
question
go
to
ahead.
you, though, is we've been looking at the way the stock is moving. This is not a classic arbitrage play in terms of just how much damage seems to be happening to Kimberly-Clark's shares at the same time, obviously, Kenvue's up.
No, I mean,
Is
listen,
it
Andrew,
the
there's
risk?
a litigation risk here, right? That's got to be what in part what is, and they believe that given the $2.1 billion in synergies, the fact that they are buying it at a price while at a 50% premium is still well below the multiples we've typically seen in this group. It's around 14.5 times versus a median usually of around 18 times. They believe that more than makes up for any risk they may be taking on. And they clearly, obviously, do not believe it is significant litigation risk. But that's got to be one of the reasons, Andrew. We all remember Monsanto and Bayer, for example, and the headaches that, not headaches, the incredible disappearance of value as a result of the litigation that took place there. And so that is something that's got to be in people's minds, in addition to risk arbs who do set it up by shorting the shares of the acquirer.
All right, fair enough. David, thank you for bringing us that news. We will be looking forward to seeing more of your analysis of this transaction and more in the 9 o'clock hour on Squawk on the Street. Thank you, sir. Coming up on the other side of this, no deal between Disney and YouTube TV, so customers have no access to ESPN, nor to other Disney-owned networks. Which side needs a deal more? We're going to get into that with media analyst Rich Greenfield. We're going to do it after the break. Do not go anywhere. Squawk Box returns in just a moment. It is 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Andrew Ross Sorkin in London this morning, where it is 1 p.m. Right here, GMT time. That is Joe Kernan and Mike Santoli in New York. It's a transatlantic broadcast. Becky is off today. We've got a lot of news for you this morning, though. Among our top stories, President Trump saying U.S. companies should be the only ones who have access to NVIDIA's most advanced AI chips. The president making those comments on 60 Minutes. And Berkshire Hathaway reporting a sharp rebound in earnings in the third quarter. Operating profit at Warren Buffett's company rising 34%. And energy giant BP has agreed to divest stakes in U.S. shale assets to 6th Street. Price tag $1.5 billion. This is part of BP's efforts to cut costs, sell assets, and improve profitability as it faces pressure from activist investor Elliott Management. Joe?
All right, thanks, Andrew. Let's check the futures this morning. Still solid, especially the NASDAQ. Dow was up a little more earlier, and as was the S&P. Treasuries have not been surprising anyone with what's happening. Been right around 4%, just above, just below on the 10-year. And we would do this whether you were here or not.
Yeah.
Mike Santoli has been looking more closely at the markets. And if you've prepared something,
I have.
well,
Yeah.
thank you for
All
that.
set to
And
go.
while you're anchoring the show, you prepared your normal. That's incredible. That's
Yeah.
above and beyond. Thank you, Mike.
Try to have peripheral vision as well. So here you go. Look, first of all, the market made its way through October in pretty decent shape. Even last week, there were some wobbles. It was a more uneven response to big tech earnings, you could argue. You had obviously Meta punished. Microsoft didn't get much. some concern about how it's become a little more of an uneven and highly concentrated and narrow rally. Again, you see the NASDAQ 100 versus the equal-weighted S&P 500 on a year-to-date basis. Clearly, NASDAQ 100 type names have lifted off relative to the median stock out there, really outperforming. Although the equal-weight S&P is still up more than 7% year-to-date, so still in an uptrend. That's a net positive. Below the surface, some of the sectors that are more tightly tied to the consumer, to housing, to the economy in the here and now have taken on a little bit of water. So that's the equal-weighted consumer discretionary ETF, as well as regional banks and home builders. That's where the concern comes in relative to that hawkish Fed rate cut we got last week as to whether the real economy is softening up right here. Two-year note yield, let's take a quick look at that, because after Jay Powell's comments last week sort of not guaranteeing a December rate cut and some of the other Fed rhetoric, just a slight lift in the two-year note yield off of the recent lows. So the market has not completely repriced its expectations for what the Fed's going to do. So in theory, that general thesis that the Fed's going to be easing into a still decent economy, it still prevails for now. Of course, that's in the absence of government data, Andrew.
Okay, thanks, Mike. Meantime, the government shutdown now in its second month, day 34 to be exact. Emily Wilkins joins us with the latest from Washington, D.C. Good morning.
Good morning, Andrew. Well, yeah, the pain caused by the shutdown, it is building as lawmakers are hoping that this could be the week for a breakthrough. So a couple different factors here. Number one, you got the 42 million SNAP recipients. They're still without their benefits. The Trump administration is looking for options to fund the program after a federal judge ruled on Friday that SNAP is required to be funded. Meanwhile, some Americans signing up for health care next year through the Affordable Care Act marketplace are seeing their premiums skyrocket as insurers factor in the end of the tax credits that have been keeping prices low. And there are more delays at airports as they face a shortage of air traffic controllers. Newark saw major delays yesterday, and New York's emergency management warned that they could spread to LaGuardia and JFK. Transportation Secretary Sean Duffy tweeted yesterday that we have to reduce flight volumes to maintain safety, then added this is exactly what Senator Chuck Schumer and Leader Hakeem Jeffries want, to inflict maximum pain on the American people. In addition to that, there are two bellwether races in New Jersey and Virginia tomorrow that are going to give voters a chance to make a statement on either party. Most lawmakers who I spoke with on Capitol Hill, they were skeptical that the shutdown is going to impact either of those elections or vice versa. Several told me, though, that they are feeling more optimistic that everything combined could begin to bring a breakthrough in the negotiations that we saw pick up last week. And guys, we'll just have to wait and see if this week does bring about some sort of NRAM or if this shutdown is going to wind up breaking the record as the longest shutdown to date.
Emily, we talked to Jake Sherman in the last hour about all of this, about whether somehow, tomorrow's election somehow gives an opportunity for Democrats to come to the table or Republicans to come to the table. Is there anything that you're actually seeing beyond this sort of just speculation that somehow it changes the calculus that something could actually happen this week?
Andrew, to be honest, I don't see a lot when it comes to elections, at least, that's going to have a yes or no impact. Now, obviously, if these elections go in a drastically different way than everyone is expecting and the polls are showing, I think that is going to mean something on Capitol Hill. We'll have to just wait and see what those results are going to be. I think another big pressure point was SNAP. Of course, now that a federal judge says it has to be funded, that does take that off the table. But you are hearing warnings from the White House saying, look, we've been able to find funding so far to cover a number of things like the military, but we don't know how much longer we're going to do that. And as we've seen in past shutdowns, as the pain ratchets up, that really does put the pressure on lawmakers to find some way out of this.
Emily Wilkins in Washington this morning. Appreciate it. Thank you so much. Meantime, I want to tell you about this story. Millions of YouTube TV subscribers remain without access to ESPN and really the other Disney-owned networks as well, as a high-stakes standoff between Google and the entertainment giant dragging now into another week with no resolution. Joining us right now is Rich Greenfield, LightShed Partners. What does it mean, Rich? I don't even want to know what you think just of this particular fight. I want to know what you think that this fight represents in a larger way at this point.
Well, I think what's really interesting is that we see carriage battles all the time, Andrew. I mean, your parent company. I mean, we've all lived through carriage battles for years and years, so they're not new. And typically, they don't even go dark, but when you do end up in a blackout situation, usually within a few days, a week or two, these things are resolved. This probably gets resolved, but I think what's the important point for all of your viewers is there is something different here. For Disney, this is, the run rate. They probably get paid $18 a month by YouTube TV for all of the Disney suite of channels. So with 10 million subs, that's like $2 billion of revenue. That's 2% of Disney's revenues. Google, and they reported earnings last week, they do over $100 billion of revenue in a quarter. And certainly YouTube TV, I don't think there's any investor that's ever bought or sold Google based on YouTube TV. It's completely irrelevant to the Google story. So you have really different relative importances, and that's just different than how this is. Like when a Charter loses ESPN, everyone goes, how can Charter survive? There is not one investor going, God, is Google going to survive this?
Well, I think what you're saying there for it, Rich, is that Google has a lot more leverage over Disney than Disney does Google or any other cable outlet or a cable operator, that is. And therefore, what does that mean? Meaning, is Google going to be able to really, damage the margin that Disney has? And what does it say about future carriage deals, if that's where you're going with all this?
Yeah, look, I'm not sure this is purely over dollars. I mean, I think it's always about the money, to be fair, Andrew, but my guess is this has to do with more than just money, meaning this is, hey, can we create smaller bundles? Disney's working on now that Disney owns and has merged Hulu Live with Fubo TV, which just reported earnings this morning, they've created a sports bundle, a skinnier sports bundle. I have to believe YouTube TV wants the right to offer a sports-focused package that has a lot less of the other Disney networks included, not to mention other companies' networks, which has implications for the whole, media universe. I also have to believe they're focused on ingestion. So when you watch YouTube TV, can all of the content of ESPN be watched inside of YouTube TV, or do you have to still download the ESPN app in order to watch certain ESPN Plus or ESPN Unlimited content? These are all the complexities that go far beyond the specific dollars and cents.
Right.
And
So,
I
Rich,
think
here's
that's
my
what
question.
Google's fighting for.
Rich, I happen to be a YouTube TV customer, as it happens.
So am I.
I think it's
So
actually
am I.
a tremendous product. And frankly, it would be easier, I would imagine, to be able to watch some of that Disney programming inside of that app rather than have to go off to Hulu or go off to ESPN or whatnot to go find, programming that wasn't live, if you will. What is the implication of Disney doing that? Meaning, if they go that route and were to allow such a thing, it, I assume, means that everybody else will have to allow such a thing. And then does it effectively all of a sudden disintermediate once again the consumer relationship? And how valuable is that relationship or not anymore?
I mean, look, Comcast struck a deal recently, or NBC Universal struck a deal recently, where a lot of the Peacock sports content is now being launched onto a NBC Sports network and then carried and ingested into YouTube TV. That was part of the NBC skirmish with YouTube TV last month. And so I think the implication, though, to answer your question, Andrew, is, YouTube is putting the consumer first. They want to have the idea, they believe they have the best product. It's why you have it. It's why I have it. It's why my team has it. Like, it is a great product. They are trying to provide and put the consumer first, especially when it comes to sports, so that all of your sports, if you're going to take a big bundle, you're probably a sports fan, and they want to have a one-stop shop where you watch everything sports in one place. That obviously isn't great for standalone sports applications like ESPN trying to build a standalone D2C business. But from a viewer's standpoint, the consumer and actual getting eyeballs on content, I think it's great. I think more people are going to watch NBC sports content inside of YouTube TV than if they had to go to the Peacock app. And I think the same thing would be true for ESPN if all of that content was ingested. So this is a really important, battle in terms of how it plays out and what rights and packaging YouTube is able to get. And my guess is they're willing to really go to the mat because the relative importance is very, very different between the two companies.
But Rich, that now come back to me on one other side. How much of this is a dollars and cents story versus a consumer story, which is what the product ultimately looks like? And interestingly, the other last piece of this is Google, I would think, has an incentive to try to keep the bundle together, right? They want to support all of these content players, I would imagine, because that's the product that they are offering folks.
I think they want to keep the bundle together, but Andrew, they also want, my guess is, flexibility. So Disney's now offering, right, ESPN, Hulu, and the ESPN app for $30 a month on discount. They're offering a sports tier for $55 a month as a promo as part of Fubo's new packaging. And that Fubo packaging actually ingests ESPN Plus and ESPN Unlimited content, something they don't offer with anybody else outside of the assets owned by Disney. And so my guess is, yes, it's about the dollars, but it's the structure. So it's how do you package this stuff? What do you get? And all of that contributes to the profitability. I mean, Google doesn't like losing money. So my guess is Google wants to create packages that are more compelling and more profitable. And that's where the pressure is versus Disney. I mean, YouTube now, remember, they're 15% of ESPN subs. This is the fourth largest distributor in the country now for cable and like cable and satellite, but they're now the fourth largest, YouTube TV, and they're growing rapidly. And so I think you have line of sight to within the next 2 to 3 years, YouTube is the #1 MVPD, vMVPD distributor in the country.
Rich Greenfield, always breaking it down for us. Thank you, sir. Nice to see you.
Thanks.
Mike?
All right, coming up, how much power is too much when it comes to big tech? A former top antitrust advisor in the Biden administration will join us with a warning next. And later this hour, the shutdown and its impact on air travel. Transportation Secretary Sean Duffy joins us with an update at 8:30 a.m. Eastern Time. Squawk Box will be right back. Our next guest is sounding an alarm on big tech's power and its impact on the economy. Joining us now, Columbia University professor Tim Wu. He is known as the architect of the Biden administration's competition and antitrust policies. His new book is out tomorrow, The Age of Extraction: How Tech Platforms Conquered the Economy and Threaten Our Future Prosperity. It's great to see you.
Yeah, great to see you too.
I guess just frame out big picture, why now you sound this alarm on big tech? Is it just a continuation of their dominance, or what's changing in terms of their position in the industry?
I think about 7 years ago they started becoming this dominant position. But I think usually in an economy, you start to have some serious challenges. I think they've really locked in, entrenched their power, in particular in the AI age. There's a sort of urgency. Is it just going to be them? Are they going to have such a take on the rest of the economy that nobody else can really make money?
That's an interesting piece of this, because on one level, only those companies could invest on the scale they're investing in right now.
Yeah.
But the desperation and urgency that's implied and how fast they're going on that, I wonder if that suggests they believe that their core businesses are vulnerable if they don't do this. So therefore, maybe competition is working.
I mean, I think that's the question. I think the big question right now is whether AI is actually a threat to the tech platforms, or whether they manage to use artificial intelligence. They're some of the big investors to insulate themselves in perpetuity. I mean, OpenAI is not one of them. OpenAI is a challenger. So that sort of behind the scenes, people aren't paying attention to the fact that we may have the establishment of a dominant sort of global monopoly that lasts a really long time and I think extracts a big price, or we could have a real challenge from AI and a new prosperity based on that.
It's interesting, OpenAI, you mentioned that they're the challenger, but they're also creating this web of relationships with all of the kind of incumbent players, right? As one way or another, cloud services relationships, they're investing on the processor side with NVIDIA and all the rest. What does that mean in terms of how this evolves from here? And what are the costs that you're really looking at that average people might pay ultimately?
I mean, the costs are the typical costs of monopoly. I think every company looks good at the beginning, but these, Amazon, Google, so forth, they've been there a while. They're starting to extract more and more. They extract more from everybody else. Look at advertising prices, look at what Amazon sellers sell. I think it's getting more and more. I think the key question, and I keep saying it, if you have these big giants, you want them fighting. If I was still in government, I'd want to sort of provoke it. I think government needs to scrutinize more carefully the efforts by the big tech companies to control AI, so there's a fight and we see a renewal of innovation and progress.
Okay, so what, I guess, in a tangible way, could government do to kind of instigate these fights?
Well, they could take a closer look, for example, at some of the deals. There's these reverse acquisitions that they've been making of Microsoft made one recently of an AI company. The OpenAI, Microsoft was careful not to completely buy OpenAI, but if anyone gains control, Anthropic, Amazon is trying to get control of them. I think the government should be watching and try to prevent the AI challengers from being controlled by big tech and insulating their monopolies.
Is there, I know there's a debate out there about whether some of these businesses are to some degree natural monopolies, or whether, because of the network effects, because, the benefits of scale, and just, Google has dominance in search, maybe for decent reasons ultimately. Now what you see is a company like Alphabet feeling vulnerable on its search franchise. So I guess I keep wondering whether, in fact, even if all this money is being spent well, it might create these sort of parallel players as opposed to one big one.
It's a good question. I mean, I'm always afraid that natural monopoly is a self-fulfilling prophecy.
Right.
You just say, oh, so nothing can happen. I believe in challenge. I believe that that's the path to greater prosperity and more innovation is companies challenging each other. So I wouldn't count everything out. I mean, I think it is an uncertain time, but I think we should have our thumb on wanting to be more uncertain. I'm very concerned the main reason for these giant investments in AI is to try to insulate the monopoly, as opposed to actually make products better. And I think we're these are middle-aged monopolies. They're due for a real challenge.
And there's been a lot of attention on what has been referred to as sort of the circularity of some of these investments. I don't know if this is something you would directly have addressed, but NVIDIA, with all of its excess cash, it's pulling from all of these cloud players and such. They're kind of reinvesting it and seeding some of their customers, more or less, and having those come back in revenue. Now, they say there's no stipulation on how it's spent, but how does that work into all of this?
I think it's under-examined. I think we're in an era where, particularly the antitrust enforcers have an older tool, but they're not looking at how these web of contracts may inhibit competition in new ways, and I think it's something we need to be better with.
Andrew?
Hey Tim, can you just speak to the pure scale of capital that's required to really fund a huge large language model, especially those that are on the frontier? And the reason I ask is because ultimately, and I think we're seeing it, some of these folks ultimately are turning to these circular deals because there isn't even enough cash as it is. So then I think to myself, how is it that we would fund all of this if in fact we didn't let some of these bigger companies engage themselves and get involved?
I mean, I'm not saying bigger companies can't get involved. I'll say two things. First, I'm not saying they can't get involved. I just want to make sure that the bigger monopolies do not completely buy off the threat to them from AI. I mean, for example, if Google could have somehow bought OpenAI 5 years ago, they would have. Maybe OpenAI wouldn't have sold, but there's a real danger of that happening. But also moving away from non-frontier. I mean, AI it's not quite commodified yet, but there are lower cost versions of AI that also make important challenger products. And I think we're going to see more of that in the times to come. Whether it's the Chinese competitors, whether it's just people using non-frontier but still good AI to try to challenge some of the major players.
We were just talking, obviously, about...
Hey, Tim.
Yeah.
Oh,
Sure.
Go ahead, Ed.
I just have one more, which relates to you mentioned China.
Yeah.
One of the things that all of these tech companies say is we're in this, race with China, and that is so critical. And I just want to understand from your perspective whether we should be even taking that piece of it into consideration or not from a sort of national security resiliency perspective. Now that a lot of this investment, and by the way, even the tariffs have been sort of, put in the flag of national security and resilience, where that sort of plays in your thinking.
Yeah, I mean, when I was in government, we spent a lot of time trying to slow down China. I think we had some success in that with some of the semiconductor measures and so forth. But I think this is really important. I think the most important industrial policy for the United States at home is competition. In other words, what we want is a big fight at home so our companies are stronger when they face the Chinese companies. And I think if we just say, well, everything's being invented by 2 or 3 big guys, it's like putting a huge bet on IBM in the 70s or AT&T in the 70s. Actually, it was other companies who ended up being the most important. And we sacrifice if we end up worshiping monopoly, we sacrifice our own competitiveness.
Tim, thanks a lot. It's been a pleasure coming in. Good luck with the book.
Thank you.
Okay. When we come back, President Trump weighing in on the pardon of the co-founder of Binance. We're going to show you what he said about all of this on 60 Minutes. And then Transportation Secretary Sean Duffy, he's going to join us to talk about the impact of the government shutdown on air travel. Do not go anywhere. A lot more of Squawk rolling on right after this.
I'm back.
President Trump commenting on his pardon of Binance co-founder CZ, Changpeng Zhao. Here's what he said on 60 Minutes.
In 2025, his crypto exchange Binance helped facilitate a $2 billion purchase of World Liberty Financial's stablecoin. And then you pardoned CZ. How do you address the appearance of pay for play?
Well, here's the thing. I know nothing about it because I'm too busy doing the other.
But you got a pardon?
I can only tell you this. My sons are into it. I'm glad they are because it's probably a great industry, crypto. I think it's good. They're running a business. They're not in government.
Yeah, there's been a lot of crypto sort of discussion. Andrew, this was obviously
What
one
do you
of the.
think? I mean, I think he's directly saying, look, my sons like it, and they're involved in it, and involved with him to some degree. I mean, the thing about him is he's open, in that he's just saying that's how it happened. But I don't think that makes it any better, in that I think that it still undermines the credibility of this whole issue.
It's different than. I mean, we've had I think both sons on talking about various ventures, and separate and distinct from what goes on with the president, but it's the quid pro quo, or at least the appearance of quid pro quo, or or buying a pardon, basically, with the investment in World Financial. I don't know how you prove that in a court of law. But
no, and also the net effect of all this is that it's sort of gone back and decriminalized most of what had been considered to be improper behavior within the crypto world, right? Not just this part, but a series of them. Where it's basically saying it's a free for all.
Right. But that's the question. And how much should we be concerned about,
Shouldn't be
bribery and other
concerned.
things taking place, and money laundering taking place on these systems if it's been decriminalized?
what did we think of? I was torn on whether CZ, or whether the punishment fit the crime in his case in the first part. But then whenever he came on, Andrew, and we would sort of drill down on the specifics in terms of audits and everything else. We never got really satisfactory answers there, and it always seemed like there were question marks. Remember?
Yeah, I remember.
But
Well,
then
look, in fairness to the president, the truth is that CZ was not engaged himself in money laundering. They were using his platform for money laundering. The question is, what kind of restrictions and other things was he putting on or not putting on, and how much of this did he know was happening and effectively disregarded it? There are folks out there who say to themselves, that there's terrible things that happen on social media platforms.
Oh, shut up, Shorgum. It's nonstop. This channel is just nonstop. It's so annoying. See, they don't. How can I explain it? One minute they were pumping crypto and Bitcoin, and now they're bashing it. Every day you get on here, crypto's up, Bitcoin's up. I don't know. Part of me says that Trump should have never come out with a Bitcoin of his own, or where he made a bunch of money on it as president. But then there's another part of me that says you just can't question. So I don't know. I've kind of also have mixed feelings in a way, but you can do that with Wall Street. All these new IPOs that come out, and they just raised millions, hundreds of millions of dollars and blow it, or government giving money to big corporations without any way of having to pay it back. I think that government should only be here to do one thing, and that's protect us. Okay, you ready for this? Good morning, retail traders. I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. I know you all love it. Your introductions, Jim, are the best. Out of all the chat rooms I've ever been in, when you talk sneaky snake, it arouses me. Am I correct? Someone say yes. Just for the record, we gotta know when to hold them. I hope everybody got to watch my videos this weekend. I talked about falling wedges and gap fills. Now here's something I want to show you. I went from that body to that body, and then the wick was a confirmation. It'll be an interesting week. I agree. So right now I'm going to create a watch list with earnings. Oh, 3 notifications. Mr. I love stocks. Yeah. First, we'll start off with, so we've got Fubo's on the watch list. And that's this morning. FUBO. And we got HIMS on the watch list. HIMS. And we got PLTR on the watch list. And we've got Uber on the watch list. And we've got Shopify on the watch list. And we got Pfizer on the watch list. And we got AMD on the watch list for earnings. We got Kava. What else do we have? Upstart. Upstart and Humana. This week, we got McDonald's. And we got I don't eat at McDonald's once a year if I'm lucky. Fake meat is on the watch list. I got Upstart on here twice. So we got Hood on the watch list for earnings. Snap. Don't snap at me. It's not my fault. And we got D-Dog, Datadog. And we have, I think, Open. Earnings. What is this, 11? Today, 3rd. And we have Fubo. I'm gonna go make me some coffee. Yay. Oh, dollar sign ain't gonna work. I put a duplicate. How'd I do that? That was interesting. Shop. PFE. AMD ought to be a good one. China. Kava. Last earnings didn't go too well. So it might bounce up this time. If they did anything to correct whatever was problem. And Humana. Obamacare sucks. And we got McDonald's. dog. Open the door and let me in. 777. That's a good luck number on the doors. Okay, watch list has been made. Fubo this morning. And it pulled back. Got solid support just above 350. We got HIMS on the hour time frame. Now this one might be a good reversal play. Now what the fuck happened here? Yeah, HIMS might be a good one. We break 47.99. At or above 200 EMA on the hour. How does he do it? I've watched that man over year, and I just asked myself, how does he do it? PLTR, we're up $6, $5. We had a breakout of $6, $5.40. This could go higher. They got a deal with NVIDIA. We have a rising wedge. So we'd have to respect where we are right now at open. I'm going to walk into the kitchen, make my coffee, and come back and do this watch list. And we got Uber. No, 100 is a hard one to break on Uber. Shopify's had a bounce. We're off the 200 on Friday with 3 black crows on the hour time frame. We got a symmetrical flag. We got an inverse head and shoulders, so it's getting ready to squeeze. Shopify, not sure which way, but it's bullish looking. We got Pfizer. Now this one seems like it just can't hold a breakout. So if I was to trade it, I'd jump in it and then sell it if it broke out. AMD, another. I wouldn't mind seeing this pull back about $20, and then jump in the trade at 230. Just looking at the chart, and I think it's all going to be about guidance. We got AMC, I think, coming out this week. Am I right? Am I right? I don't see it. I thought I saw it. Oh, we got Airbnb on here. How did I miss that? This was one of my favorite. Airbnb, what's the signature on that one? AR Airbnb. Airbnb. I don't think it's ABNB. Or is it? Yeah, it is. By George. Looks like it had a bounce already too. Might be good for $4 to a double top. I think Airbnb is a good, if you're into houses and you have a few houses, it's good to be, you could have a little private business if you keep up your house and rent it out, especially if you're in a bigger city where there's business attraction, people have to come work for a few months, or if you're by the coastline, like one in Hawaii would be a good spot to have an Airbnb, or Florida. So yeah, Airbnb is on the watch list. I just added that one. And we got race on here. That seems like it just like hits one little clientele. Plus, I think they went woke. We got hymns after hours tonight, so that should be an interesting one. See if there's any news on hymns about the fat drug. I guess AMC, I thought AMC was on here. I had a flashback. Nancy, would you do me a favor, baby? We got Spotify on here too. So I'm going to add, is that SPOT? Oh God, that's expensive. But it's pulled back. And 666 is a resistance level to break. Meta. It's not on earnings, but damn, that thing had a pullback. That's one we got to watch for scalping. If it's not already bounced. And we're at the 200 right now. At 656. So we have a little bit of $5, $4 breakout to resistance, triple top, or a quad. It could be a quad. The quad top. Meta. They were pumping that up too. Johnson Controls got earnings Wednesday morning. So tonight, PLTR and HIMS are my two top ones. In the morning, we got Uber, Shopify, and Spotify. And the homosexual stock race. Tuesday evening, we got AMD. Oh, what is this? Super Mice? Can't hardly read this son of a bitch. Beyond Meat, Upstart, and Kava. That's Tuesday night. Wednesday morning, we got McDonald's, Humana, Johnson Controls. Wednesday evening, we got Robinhood. There's AMC. Wednesday evening. Now this one's pulled back quite a bit, so I think you get 20, 30 cents out of it. And it's only going to run up on guidance. They're in debt. But if I was to call this trade out, which, unfortunately I haven't called a put on it for years. I think this gets pumped enough to where if we break 270, it could go to 290. Pay attention. Do you understand? I act like the judge. QCOM Snap Wednesday evening, but the big ones are going to be AMC and Robinhood, and Robinhood's already had a bounce. So we'd have to break 150.37. Jim, my grandma's watching you right now and she thinks you're very attractive. She does. Tell her I'm flattered. We got Snap. Snap might have a little bounce to 810. And Wednesday morning, Datadog. Thursday morning, Datadog is the only one I see. And then we got Open Door on Thursday evening. Open. DraftKings. Is it DKNG? DKNG. Yep. So, been controversy with DraftKings. That's why it's pulled back. This could bounce up off earnings. I never was an online gambler. I took it to the track or been to the casino once in Vegas, but I like the races. I like the dog track and the horse track. I can bet that pretty good. I got a strategy also. What is your, okay, hello? Yes. We're with the mob, and we would like to ask you either that or you get your legs broke off. Tell us your strategy, because you seem like you constantly win about every 2 out of 3 races. I said, yeah, I'll give you my strategy, but tell Fuba that I want to kick his ass, because he ripped me off down there at Eureka Springs when I was down there betting on the horses. My strategy is I like to look for a horse or a dog that has gone down a grade. If it was like an A and then it's racing in the B race, I like to average the time of their last 5 races for speed. And I like to look to see if they break out of the box and they get up in front, especially on a muddy day. And I like also number 4 step, if I see one taking a shit or a piss, I'll put him in the top 3 as they're walking to their box. And then I have my favorite kennels. And it's not so much about the jockey, but the jockey more about the kennels. How many number 1 races do they get with the kennel? Is it rated number 1 or? So those are my 5 steps. And I used to like to pick the box that they're in. You know, does this horse or this dog like to run from the outside, or is he an inside dog or likes to run the rail? But basically, I love taking the one. If I see one taking a dump on the way to the box, especially a dog, those are the ones I like to put my money on, because I know how it feels once you let one go or you have to piss. You feel like a whole new person. That's the same thing with dogs. I hope you all took notes on that, because it's a winning strategy. We got Wendy's this week. out of all the fast food, Wendy's is one of my top, but still, I go in there and eat salads. But sometimes I get turned off by the filthiness of the stores. I mean, if I come into a management position and I'm going into a new store, the first thing I do is inspect the cleanliness. True with any of my businesses that I've run. Organization, you know, I watch the employees, see if they like picture framing, if they have a good desktop, clean desktop, how often they change the blades on the mat cutter. I used to have one that thought speed was all about speed, but she never. I had a friend that brought in a record one time of Nirvana, and it was autographed, and that bitch glued it to the mat board. And I said, "What the? Why did you glue this to the mat board? I mean, this is." I specifically wrote a note, said, "Come to me, and I'll show you how to mount this record." And she fucking glued it to the mat board, man. I was so mad. The customer complained. So I go over the employees, I interview them all. I remember one time, what time is it? One time I was in charge of hiring employees I was in a management position and I had to hire a new employee. This one guy shows up and he's got hair all the way back down to his crack of his ass. And I knew my boss didn't like long hair. But the guy was persistent. You know, he came back. And after the third time he came back, he says, why don't you want to hire me? And I wanted to say, well, it's your hair. You know, I don't need it cut in a saw or. And I just felt like, God, I wanted to hire him, but then I don't think he was a stoner either. He just had real long hair. And then I had one girl flop her titty out at me when I was interviewing her. I said, oh, this is going to go well. She didn't mean to do it. I don't think she didn't mean to do it, but she did it. So cleanliness is my number one, even the outside, you know. The windows, the doors, you know, is the door clean? Am I walking into a germ trap? I wash pots and pans for a cafeteria. And I was real good at it. And sometimes I'd get a little upset when I come in and there'd be a bunch of pans waiting for me when I knew that they were from the night before. And I remember one time where I was having a party, a keg, and everybody left me there alone to close the place up. And I was washing dishes and I had so much to do, and I knew I had to get to this party. And I got mad, and I threw a pan across the kitchen and ended up busting a water line. I got fired the next day. I could have said I just broke it, but I said no. I threw a pot across the counter, and it hit the pipe and busted it. You're out of here. So that's where I learned about no matter what you do, try to be in your best behavior when you show up to work, because it affects other people and yourself. You make mistakes. And I loved working at this place. I mean, Calvert's Cafeteria. Kava's below my support channel. And we got, GMC, what was it? CMG. Chipotle. We got a triple bottom on Chipotle today. I'd expect this to come back up and try to break resistance. 33.41 be your first one. Up about $3. Bind had that big run last week. It was a pump. It got the deal with Walmart. So this would be worth watching this week. We got Humana. Oh, what happened here? Had a fat finger to 252. That's not a good sign. I'm gonna go make my coffee. Monday kickoff song. Amazon's popping. Amazon got some kind of news. AWS and OpenAI announces $38 billion partnership. Price upgrade of Amazon to $300, $289. So this has got a lot of room to run.
Stingy with his grades, we got a lot to prove. Patience is the key for gamma moves. Buying the pullbacks, riding rockets and rips. Protecting our assets, pouncing on the dips. Market maker shakeouts. Standing our ground, waiting on our setups to catch our crown. Open the bell is the sound of me.
Thank God. Ugh. Oh. Oh.
November 19th is when we hear from NVIDIA.
I love you,
but
Jenny.
We also got, GTC last week ended up being a massive catalyst for shares. It wasn't even an earnings event. So we still have earnings to look forward to. And mind you, with all of the commentary from President Trump regarding China,
Mind me.
right now we're anticipating zero impact, zero footprint into China from the biggest company in the world. So any degree of flexibility or a trade workaround or even just, some loosened
Being in the now.
That would be a massive catalyst for NVIDIA, which right now is anticipating zero impact from China and their forward-looking revenue. So I tend to see the China headlines as basically it's a geopolitical fray that NVIDIA has been caught in the crosshairs of. And if we have any revenue from China in the next coming quarters, that is nothing but an upside benefit because we're not anticipating that right now at all, and shares are still at levels they've never pretty much been at before. I know we've pulled back now about 4% and some change, but this is still the most valuable company in the world for a reason, Nicole.
Yeah, understood. We also have a Microsoft story today. Let's hear a little bit about that, Jenny.
Yeah, so Microsoft is getting busy in the world of purchases, and I think that this is fascinating because this also ties into, very fittingly so, NVIDIA. So Microsoft is going to be expanding now its cloud infrastructure in the UAE, per reports we got initially from the Wall Street Journal, but now pretty widely reported here, investing a total of $15.2 billion in the UAE, again, as part of this AI and cloud infrastructure push and expansion plans for the country that they have laid out from 2023 through all the way through 2029. So the investment does include around $7.3 billion that was already spent in 2023, including roughly around $1.5 billion in their equity stake in a various firm that is focused on AI, another $4.6 billion in building out data centers in the UAE, and will invest an additional now $7.9 billion from 2026 through 29 to expand its AI and cloud infrastructure, as well as cover some of the local operating expenses. They did also say that they've secured export license to ship GPUs to the UAE, which enables the deployment of more than 80,000 NVIDIA and AI equivalent chips for, again, the exports. That's also huge. So in addition to that, we're also seeing now this massive deal with Iran, of course, which is also another major development in the world of AI. We're seeing right now Iran actually soaring as it seems like it's hopefully trying to be the solution to Microsoft's capacity problem. What does that look like? We'll have to see how the cards obviously fall, but the Australian company has agreed to this $9.7 billion deal to sell AI cloud capacity to Microsoft. And this is really interesting because this is something we heard over and over again on earnings calls last week, where it's not so much that these companies do not have the demand right now, but it's that they cannot keep up as far as supply is concerned. And so cloud capacity expansion, I think, is huge. And again, something that Microsoft needed to avoid, that was needed to be filled, but it's also a wide felt concern across these AI companies where, again, capacity needs to be stretched or capacity needs to be expanded, and that's going to be expensive and also could take some M&A. And so this is a major deal, $9.7 billion. I think signaling that Microsoft has been, of course, very busy and right now shelling out cash to solve some of its shortcomings in the world of AI.
Yeah, understood. It's really good to see you. Thank you so much, Jenny. Really appreciate it. And I know you've been following all the breaking news. So listen up, folks. We do have breaking news involving OpenAI. Company has signed a $38 billion deal with Amazon Web Services. OpenAI will immediately begin running workloads on AWS infrastructure. Gives them access to hundreds of thousands of NVIDIA's GPUs in the United States. The partnership gives OpenAI the flexibility
this Washboardjim, may I help you?
Through 2026 and beyond. So this really allows them to do advanced
This is the FBI. You're being monitored right now. May I help you?
And Amazon's up about 4% today because of it in the early going. So we'll watch for that. Coming up next, we'll get you ready for the trading.
How dare you?
We're just standing by from Freedom Capital Markets. So we'll be right back.
Do 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 do. Take the Fibonacci from the bottom of the breakout to the top. There are 3 little pullbacks right here. We want to get it in this off the 21. We're at around 253.78. Do you hear me? And do you understand? Doo-doo. And that'd be a double top.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
And chart patterns.
To earnings, to volatility plays. We bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead.
That's correct.
Fast Market weekdays at
George.
noon Eastern, live on Schwab Network at schwabnetwork.com.
Hi.
Hi.
I'm Alex.
I'm Jean.
Nice to meet you.
And I'm his mom.
Oh God, your mother?
You know,
Are you kidding me?
Same goes for where you invest. Level up and invest smarter.
I'm his mom.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more.
Looks like the SPY hit my resistance level. Support. VWAP.
Get ready, get set, go! It's Monday, and we are so ready for this trading day here on Wall Street. Joining me right here.
Damn, you look hot today.
Chief Global Strategist, Freedom
Whoa,
Capital Markets.
cleavage.
And look, we've been here a long time, Jay. What do you make of the action that we're seeing now?
Yeah,
I love your action.
Positive. We keep
I'm seeing
getting,
it.
The leaders rotating. You know, when
Come
I
on,
say
hey,
leaders,
you could help keep his eyes off of
we
him.
see one falter like Meta last week, and then you
He
get
just keeps
news
looking
like
down at
Amazon
her breast.
breaking out above
How dare
240,
you.
And then news today, just as I'm sitting on the set, that they have a relationship with OpenAI.
He's nervous.
Causing a 4% rally to keep that streak going. So, to me, good times are here, and then you
Yes,
focus
they
on
are.
seasonal factors. We're riding a 6-month winning streak, and where are we now? We're in November, the best month historically, going back to 1950, up 1.9% on average, up 12 of the last 13 times. So, yeah, it's hard not to be optimistic.
I think now that it's November, we can start talking about the Santa Claus rally.
Yeah.
I mean, we can openly discuss the question. Tell me your thoughts.
Well, as a technician, the Santa Claus rally is the last 5 trading days of this year and the first 2 of the next year. But yes, technically, we like to throw that headline, Santa's coming to town, and people are going to be out there and they're going to be spending. Those that are involved in the market are seeing a lot of optimism here, and that's a good thing. And those that, have not been in the market and are focused on the government shutdown, those headlines are scaring us as we're about to go to a record level. I mean, if we get to Wednesday with the shutdown, congratulations, we're at a record. I don't know if it's the one we want, but
It's the one I
it will
want.
eventually have an impact on the Fed and Fed policy. So Santa will come to town, but I think we have to get through the shutdown, get some data, and focus on that December meeting, the last one of the year. 4 more for Jay Powell before he sails off into the sunset, and then see where the next few months go. But November, yeah, I think we're looking okay right now.
There's talk the government shutdown's going into 2026. I mean, I've heard a lot of that there is no reprieve and that it's not.
Thank you for your business, and I really appreciate it.
Seems crazy,
And happy
but
Thanksgiving.
that seems to be the case.
At some point, I think as we get to the travel season around Thanksgiving, people will be so fed up that they're going to have to end it. That's when it makes noise. When holiday travel and people's plans, they can't go see family, gets disrupted, they'll start to, finally realize, all right, let's, sign the CR, we'll get back to the table, and we'll go from there. There is chatter about this going on. If you watch a 60 Minutes interview with the president last night, it doesn't seem like we're even close to a deal. But right now, let's focus it from a market's point of view. It has not upset the markets, and what we want to watch is what data comes out. Friday, we're supposed to get unemployment data. it's not going to happen.
Right.
That is, key to that dual mandate, why we started cutting rates. So if Powell doesn't get the data, we are interpreting data, and we're not relying on, hard data like the CPI, the PPI, and the PCE.
Do you feel that there are merited worries and or headwinds, or is there a lot of fear-mongering going on about a market that is run up and we're going to have a crash or a big sell-off or AI's not real? Or there's been a lot of people are getting nervous for some reason. Why do you think that is?
I'm not.
How merited
Tends
is that?
to fuel the bull rally as a contrarian, but no, there is merit. If you're at home and you're watching, and you don't follow
God,
day-to-day
shut
like
up.
we do here on the set, you hear these headlines and it doesn't make sense to the average investor. But what are we focused on? We're focused on earnings.
It doesn't make sense to the average investor that we have a government that is business orientated and gives you the free will and doesn't pick and choose winners like the last administration did. It makes perfect sense.
So the market is not what you want to, poo-poo, because that's doing
So you're
fine.
in. It sounds like you're more in than out.
Well, I'm worried about the shutdown. I'm worried how that's going to affect Americans every day. I'm worried about the election results, what impact they
Are
can
you
have.
pulling money off the table because you're so
I
worried?
am selling rallies. I am taking profits. Yes, when I buy a stock that tends to go well, some of the stocks, like in Amazon, which I own, and Alphabet, which I own, the percentage in my portfolio as they rise continues to get bigger and bigger. So yes, I scale back a little bit and I put some cash out for a rainy day. I just don't have my umbrella out because I don't think it's going to rain anytime soon.
And then you have picks for us today. I know you have Uber, Palantir, and Shopify. Tell me about those three names.
Yeah, these three names are very important to watch because these are three stocks that have done phenomenal going into this earnings cycle. And then as a technician, and then you put the fundamentals together, I still think there's potential upside. Uber's fascinating because it's gone nowhere for the last 3 months. Yes, it's up 60% for the year, but the last quarter, it's kind of chopped. 94 is where we're trading coming into today. 92 support, 85 bigger support if we do falter. I think that would be a great entry point. It's a name I've been in and I've liked for a long time. But it's not going to give that explosive growth like a Palantir. Now, Palantir is the interesting one. That's up 160% year to date. It's breaking
It's up more than that, buddy.
In the pre-market. Once it broke above 190, it broke out of a nice triangular formation. You probably had it on one of your many great chart shows here. It has an upside target of 230.
Year to date, it's up 500% from the from. This is where we kind of go into. They don't seem like it's. They look at the year. They don't look at. I don't think they broaden out. Because if you broaden PLTR, look at this stock. It's amazing how much it's up. $584 all the way up to $200. $5.84 in 3 years, up to $200. $206. Is that 160%? If it is, someone correct me. That's what I thought. Had the perfect pullback this year, the double bottom, higher low. Boom. This 220, I wouldn't doubt it if we hit 220 tonight. the momentum. Maybe one day I'll talk about momentum. See, I went from a hate relationship to a love relationship with this guy. We had a run. Let me show you here. We had a run back here. It's been 1, 2, 3, 4, 5 years ago to $40. And I had targets on this thing to run up to 60. So he got on the internet. He was being interviewed, and I don't know what he was thinking, but he said, and this got me turned off by the dude. I really liked the company. And it was cheap. I mean, it was like $1, $2, and it run all the way up to $40. And I'm going, yeah, this is going to be $100 trade. And he got an interview, and he said, and he told the audience, he said, there's much better plays out there than mine. And I'm going, what did he just say? What? And I got turned off. I shorted it. I told everybody else was still pumping it for years, for a couple good 3 years. Then it would just go down, 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 down. It was at $20 they were pumping it to go up, and it went down, 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 down. And I got bashed and mocked, and I said, the dude said his stock wasn't worth buying. Why you want to buy it? He got on national TV on Squawk Box and said that his stock was not worth buying. And then, with this war, he started becoming a Trump fan. He was Jewish. And he didn't like the slaughter that happened in Israel. Genocide. And all of a sudden, man, I said, I like this guy. I mean, he's got everybody against Wall Street against him now because he's actually standing up for something good. He was calling it out. And now look at it now. This is one I wish I'd have bought on my feel good being in the now. I should have bought it. I should have just went 20% of my portfolio into his. I'd have like $4 or $5 million off his trade. And you don't get that kind of golden opportunity. This lady mentioned earlier about quantum stocks. They've run up pretty good too. They could probably run up a lot more. Okay, we're getting close. So now you got all the fat cats crying, short the market. We're overbought. If you ever see this 200 again, load the boat on all your favorite tickers. On the daily or on the weekly. I called this bounce, I called this bounce, I called this bounce, I called this bounce. But this is the one that I really liked. The Biden pullback off the 200. That's where I got into Tesla and Boeing and whatever, another one that I run up. So your favorite tickers when you get down to the 200. I mean, everybody and their mama, nobody called this bounce but me. And I got very little credit for it. Nobody called this one either. I wrote a song about it. If you ever get down there again. We got a Head and Shoulders right now is the next pattern on the weekly. I'd probably take it off that Head and Shoulders or take it off the 50 if it pulled back and hit the 50 or even the 21 because we bounced off that 21 quite a few times. And then if it got nasty, I'd load the boat here. Oh my darling, set up your trading platform. You got less than a minute. Let's go run it out. We're going to watch the SPY. And we're off at the races. The 686s or the 685s if it knifes. And we got the VWAP coming up, and that's going to be my first trade. That'll be a Head and Shoulders off the VWAP, right shoulder line. Damn it. Here we go. Prepare ye in the name of the Lord, for I am a Mormon. Fat cats are very bearish. $6.86 at $1. We hit the VWAP. $0.98. And we could come down and hit the 200. This is a risky trade. We're at 90 cents right now. $87. $85. See if we hit the 200 and I'll add. Probably right about now. $81. Okay, reversal. Reversal. Come to me, please. Damn. $98 and $81. God. Coming down pretty hard. I'm at my inverse head and shoulder support line. Left shoulder, right shoulder, right shoulder, right shoulder, right shoulder, and right shoulder. So that should hold. Tempting to double down. I'm at my first support. Support channel 683.40. .52. Damn, this ain't going out good. About ready to take a loss. I'm down 600. It ain't working. Tesla's moving. Come on, I need a reversal, please. At least back to the VWAP, and I'll probably get a little green in this trade. Apple 266.73. Apple, they were really pumping Apple big time. New low. Tesla, $470 by Deutsche Bank. Not good morning for me so far. Big old fat candle on the 30-minute on /ES. Huge. And we're coming close to pre-market low on the 1 hour with a tweezer bottom on the /ES right about now. See if we get a reversal here. This is the 1 hour right at support right now. Let me look at the SPX calls here. We're at the 200 on the SPX, right to almost to my support level. See if we get a reversal here. We got a triple bottom too that breaks below this. That's a pretty good drop. Okay, we're at the 200 on the SPX. And we kind of went down below it a little bit. This was Friday's support. I might have charted it this weekend. They're at 590. The 6870s. We could drop more too. With a quad bottom. I got one contract at 590. Got PMI data coming out in a minute. God darn it. Uncle, we're at support. This got to hold here or we're going to be in big trouble. Has to hold here or more big drama coming. It really has to hold here. So far I'm down 600. I got stopped out, that first one. About even on SPX. I was. Stopped out of the SPY. I was in calls. Took $600 loss. They got down a lot cheaper than that. And see if it reverses here. We're at a major support level. SPY hit my second support. SPY hit my, well, now we're below my support. This is gonna go over here. Looks to me like we're hitting a day low. Hitting yesterday, Friday after hours low. This was my stop out point right in here. $681.50. $681.50. God, man, I'm telling you what. I'm gonna have a $1,000 bad day if I don't get my shit together. What's PLTR doing? Back to my second entry on the SPX. We're back about where I got out at, Randy. On SPY. It could get back to the VWAP at 683.68. Or at least back to that low support that I had. 683.40. VWAP, yep. VWAP or 683.40. We're above the 9. We're a little bullish. We're above the 9 now. We're above the 9. And you got the 63 in the VWAP. And maybe the 200 if we get lucky. I'm even on the SPX. I'm up $100. I need this thing to go to $1,000. That or keep scalping and working on it. We're at the orb. Well, the gap downs are heavy today. Bind at 141. IWM's coming to a double bottom. I'm about ready to say sit it out today. Wait. It ain't working. China's got a triple bottom. Baba. Well, well.
Over 1%, and as is Intel this morning, down just above 1% right now. So we're looking at a little bit of a mixed picture across the chip space. Welcome back to Morning Trade Live. It's time for the big picture now. So let's welcome in Lizanne Saunders, Chief Investment Strategist, Schwab Center for Financial Research. Very good morning to you, Lizanne. So we're kicking things
Intel
off
down 39 bucks.
month of November.
39.60.
Note, typically November is a good month for stocks. What's your outlook for this month?
Yeah, it wouldn't surprise me if we continue to see a bit of rotation under the surface. We had kind of a brief broadening out phase.
Brief.
That, helped, at least in relative terms,
Yeah.
equal weight. It helped small caps. I think that was very much driven by the shift toward easier monetary policy. That may have come to at least a pause, if not a halt, as of last week, which I think has moved money back up the cap spectrum, and we've redeveloped kind of a concentration problem on somewhat weaker breadth. I think at least until the point where we start getting government issued data, it wouldn't surprise me if you continue to see these rotations under the surface, but still a bias toward the mega cap names.
Okay, and certainly that's what we've been watching as far as some of the concentration risk out there. As we think about sort of year-end positioning with just a couple of months to go now, there certainly seems to be a lot of question marks on the horizon. First and foremost, when this government shutdown might actually end, and then, obviously then what Fed Chair Jerome Powell and co are going to do at this next meeting, and then also with regards to all the other sort of geopolitical sort of cross currents that we're dealing with. How are you and the team sort of thinking about that as far as some of that year-end positioning with a lot of these sort of moving parts in mind?
Well, I think in terms of the Fed, in our view, it's maybe slightly biased toward the Fed for now anyway being on pause, meaning no cut in December. That was maybe one of the most interesting things that came about with last week's meeting was the double dissents, one in the direction of more aggressive policy, one in the direction of not cutting at all. And unless we either get government data coming in and it's supportive of an additional cut, i.e. weaker employment trends,
yes,
I think the bias might be toward the Fed not giving us a rate cut in December. As far as positioning is concerned, retail traders are still dominating this market.
Yeah, it's perma bulls. Well, I've been kind of talking about how the fat cats are wanting to pull back bad. And so far it's been playing pretty good for us, but today's not the day. I had 681.50 on the SPY. Now it's almost 681. Intel just dropped another dollar and a quarter right there. Oh no, it didn't. Drop 25 cents. Those 686s I was in are 11 cents now. Gnarly.
Network.com.
Whether you're an experienced investor or just getting started, Charles Schwab.
We do have a wedge on PLTR.
Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Don't miss our one-on-one interview with Strategy's Michael Saylor.
It's not open to the public.
Digital money, digital.
There are some employees in there. You want me to run down there and open the door for them? Give them my number.
The digital form of everything is 100 times better than the analog form.
The need to know info on crypto.
The United States wants to be the crypto capital of the world.
Catch my full interview with Michael Saylor here on Schwab Network. On Morning Trade Live, let's focus on Palantir. The company reports earnings after the closing bell today. This stock has been a rocket ship over the last 3 years, trading around the $6 level in January of 2023 before hitting an all-time high today of $206. Shares are up more than 165% this year and more than 380% over the last 12 months. So that is the focus of the morning trade. Joining us for a closer look is Alex Coffey, co-host of Next Gen Investing. So what's at stake now for Palantir going into this report card today? Good morning to you, Alex.
Yeah, I think a lot's at stake. I think it's a bit of a sentiment gut check for the overall market. So far, earnings haven't necessarily been a boon to the market, even though +% beat rate. The average price reaction negative. That said, Palantir a high bar once again as this company continues to grow at a rapid pace. EPS is expected to grow on an adjusted basis 67.5%, Sam, to about 17 cents per share. Revenue expected to grow 50% to $1.09 billion. One of the things that the company's leadership really touted recently was this concept of the rule of 40, in which you take a growth metric like revenue growth and you add it to a profitability metric like
There's one girl in the back that has a huge asthma problem with any kind of smell.
Pretty good for investors. This one's expected around 95, which would keep pace with where it's been recently. Really impressive stuff out of Palantir and the company's trajectory as of late. From a segment-by-segment breakdown, we know this company splits its revenue sort of into 4 camps, both U.S. and international, and then the subsets of that, both government and commercial revenue. U.S. government revenue is expected to grow about 47%. International government revenue expected to grow about 44%. U.S. commercial revenue is expected to pace the growth at 91%, where international commercial revenue is only expected to grow around 5%, but that would be a bounce back from the negative print last quarter. Now, what I thought would be interesting is to quickly go through just the recent reactions around earnings, because the market's only pricing in around 9% in terms of where options are currently suggesting that one standard deviation range. Last quarter was the only time in the last 8 quarters or 2 years where it would have been less than that amount, where we were up about 7.85% the next day. Over the last 2 years, though, the other 7 are all over 10% in terms of market movement, with 6 of 8 of those being higher. And then over the last 3 quarters, if you were to actually extend out over 1 month, the stock was down 2% 1 month later post-earnings, up 7.5% post-earnings, and then roughly unchanged. So sometimes, at least in the last 3 quarters, there can be a big move.
Couple of weeks or so. I mean, you know, you mentioned the government and also some of the commercial contracts. I mean, Piper Sandler, for instance, is saying that they have tremendous visibility on the future revenue here, and basically they don't see any catalyst to stop this momentum in their tracks. This was a couple of weeks ago. I'm just wondering, as sort of a preview, what analysts are actually saying about this as far as price targets and their thoughts about what we might hear in this report card.
Well, in many ways, Sam, this company has become very Tesla-like in its analyst coverage. What I mean by that is, throughout Tesla's history, it's been a stock that seemingly has a fair amount of healthy debate about what it should be worth. Similar has emerged for Palantir. The stock has been on an incredible run, but it has its fair share of doubters and those who are waiting and seeing what happens. About 14% of analysts are in a sell equivalent camp, 55% in a hold equivalent camp, and then 31% in buys. But what really stuck out to me, if you just went out back to last week and you went to, let's say, October 27th till now, there's been just a handful of analysts that have adjusted their price target. But for example, Citi's Tyler Radke is a neutral with a $190 price target, so sort of your hold equivalent camp. RBC Capital has an underperform at a $45 price target. Well, that's your sell camp. And then, of course, Dan Ives brings up the bull case with a $230 price target and an outperform rating. 3 analysts in the last week, very, very different outcomes expected. So it just goes to show this is a company with a fair amount of disagreement and healthy debate.
Absolutely, and remembering throughout the course of the quarter, I mean, it was subject also to that Citron short report too, which caught a lot of attention as well. So, that's an interesting part of the story. But thanks so much for giving us a bit of a preview to what to expect and what the analyst community thinks of Palantir, Alex Coffey. I'll check with Let's Trade It now with Charles Moon, stock strategist, Prosper Trading Academy. Very good morning to you, Charles. Happy Monday. How are you approaching your example trade content?
Well, especially with stocks that are trading at all-time highs that are really frothy, expectations are through the roof, both by Wall Street and, of course, by retail traders. So usually in these instances, we tend to see a larger than expected move based on implied volatility. I think it's around $18 of the expected move after hours today, but it's very possible that if they disappoint, it could come down much, much more than they expect. So I'm looking at playing this with the strangle. This is how I normally play these high beta type names with high expectations. I'm looking at the November 7th 225 calls and the 177 half puts. Now that strangle spread is going to be around 5 1/4. Maybe if you could get it a little less, that'd be great. So the risk is pretty wide. It could be as high as 80% here. But the beauty of trading on a Monday is that you have the rest of the week in terms of getting the follow-through movement that you may need to either cross through and get into the money or be able to take that money and run. Certainly, we have to be a little concerned about valuation. But, expectations are so high. And this stock in the last 3 quarters, they've made really explosive moves, not only on earnings, but following after earnings. So that's where that projected upside move to 225. I believe they could get as high as 235 by the end of this week if it's really bullish. And in the worst case, I believe that they're going to try and bottom out at 175. But if they don't hold that level, this could really come crashing back to earth and really start testing somewhere between 160 to 150. Even though Palantir is only projected for an $18 move, I expect something to be more of an outlier on a larger than expected move just because of the elevated price.
Okay, we'll be watching, currently trading at 202 and change right now. Charles Moon, always appreciate it. Thank you so much for getting us across your example trade on Palantir this morning. Stock strategist, Prosper Trading Academy there. Coming up, we will take a closer look at the sectors on the move this morning and the news moving markets overseas. Morning Trade Live will be right back after this.
PLTR is bouncing off that support that I have at 202.18. What was that? What was that I just had up there? SPX bounced off my support. They're back to 240. Damn, I wish I wouldn't have got call. I would have jumped in on that. Right to the penny. IWM bounced off my support of that trend line that I had. Double bottom here on the QQQ.
Morning move.
Pre-market low.
Find out what's shaping early market.
That'll get the attention of a lot of people. Why? Because can the growth of this company catch up to the valuation? Because the valuation right now is pretty absurd when you look at some of the numbers. So even if you compare, a company like Palantir to CrowdStrike or some of the other names in this segment, they are valued. Their valuation is so much higher than theirs. So can the growth put up video numbers enough to keep the valuation up where it is, Sam? I think that's interesting. That's what's coming up after the bell. And then Uber and Lyft coming out with earnings on Tuesday and Wednesday. I think that's a big one. AMD tomorrow after the bell. That'll be another big one as they look like they're starting to compete in chips with NVIDIA. So yeah, I think there's a fair amount to keep us busy throughout the week, even though we will get ADP data on Wednesday, not much else to judge the labor market by, Sam. But yeah, there's plenty to keep us busy for sure.
Oh, absolutely. Thank you so much for that, as always, Kevin Hinks. I'll speak to you a bit later on. Let's widen our scope and take a look at global markets now. Another record for the South Korean Kospi to kickstart the fresh week and the month. Adding to October's strong gains for the index, the rally helped by the country's technology giants on continued optimism.
SPX just hit the 200 EMA.
The likes of Nvidia, OpenAI, and
/ES hit the
Hynix
63.
those HBM products to Nvidia, taking the charge, jumping over 10% in trade, while Samsung also surged over 3%. Asian markets also digesting a bunch of regional manufacturing PMI surveys, starting with the most notable, and that is China. Factory activity there slipping in October. The private gauge, which captures a greater share of exporters, showing new orders and output actually coming off for the month. The reading missing expectations, although still managing to hold above the boom or bust line of 50. New export orders also weighing on South Korean manufacturers, with factory activity there contracting last month. Manufacturing in Southeast Asian countries like Vietnam, however, faring better in October, as they are seen as taking advantage of higher tariffs on China and the diversification of supply chains. India also seeing factory activity accelerate last month. Coming up, it's time for Inside Out, and we'll take a closer look at Uber and bring you an example trade for that name when Morning Trade Live returns.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's markets.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand.
Think I'm gonna go make my lunch.
schwab.com/coaching and start learning today.
Hymns tonight. Yeah. I haven't had a red day in a while, but I'm gonna have one today.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live.
Hymns pulled back pretty good too.
SchwabNetwork.com.
God. That music starts out real loud and I just can't, not when I'm not having a good day. Hymns had a double bottom. It's got earnings tonight. We got a head and shoulders on the SPX. So this is actually the first setup that I'm seeing. We hit my support, my lowest one.
Less than half the width of it, and that's because you're buying about a 55% implied volatility level in that October or November 14th weekly options where you're buying the 97 call, selling about a 78% implied volatility in that.
You had more confidence in him.
You're selling the 103 strike call on aggregate. So that vol dispersion lowers the price entry point in this. You will have that opportunity to roll or adjust that short call, but you definitely need to move to the upside, setting up with about that one standard deviation move if the stock can hit.
I didn't jump into SPX down there. It was at 150.
Look at Uber there in an example trade for us. Tom White, thank you so much as always. I really appreciate
That'd be up
it.
100%.
Really head to that all-important report card out tomorrow before the bell. It is a very, very busy week once again here. And so let's just check in with the markets where things stand right now, because we've seen a little bit of a mixed start to the fresh week and fresh month of November. The S&P 500 pretty quiet on that front, sort of flip-flopping there. It's on the line to the upside at the moment. It's a good day again for tech, 0.4% higher. The Dow is lower, and the Russell 2000 is the underperformer on the session, down 1%. But as I said, a very busy week here with Palantir, AMD, Uber, McDonald's, just to name a few. Thanks so much for joining us here on Morning Trade Live for this
I need to go get a key made.
The Schwab Network app available in the Apple App Store and tune.
I need to go get a key made. So I'm going to make a hamburger and then go do that. And
But not the same rate of change on each
George.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Spy at the VWAP.
I'm Sam Vitus, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
minutes into the trading day, and welcome to Trading 360. I'm Jenny Horn in for Marley Caden on this Monday, and we're coming to you live from our Chicago headquarters. Here's what's coming up on today's show. For our 360 Spotlight, the CFO of Vontier joins us to discuss the company's recent third quarter reports and what's ahead for the company. The disruptor today is ON Semiconductor after the semiconductor maker posted third quarter earnings that topped the consensus estimates. And for our 360 roundtable, we'll be looking at the Mag 7 winners and losers from the last year or so, following, of course, the last week's slew of earnings from the bulk of the Mag 7. Of course, 5 of those 7 names reporting last week. Now let's take a quick look at the markets as we do check in on the 4 major averages. We are slightly higher in the S&Ps. NASDAQ is our big green shoot of the group, up 0.4%. The Dow's down now about 0.5%, and the Russell as our major laggard down almost 1 full percent. Now let's check in on some of the future products as we do see Bitcoin actually with a pullback to start off this week. We're down about 3 3/4% in those futures products. Crude oil pretty much unchanged on the session here. Gold actually leading out front, up 0.6%. The dollar unchanged on the session here, and right now the 10-year yield sitting up about 0.2%. So mostly green, a fairly quiet way to start off this trading session. And of course, this trading week we'll get a lot more earnings to parse through. But we'll start things off here with a look at one of the top moving stocks in today's market with a fresh all-time high hit, at least earlier today. I'm now joined by Alex Coffey, senior equities contributor here on the Schwab Network, and of course my co-host on Next Gen Investing, which we've just done a great flip of seats, which is a fun change for this Monday. But we're discussing today the major deal with Amazon, OpenAI. I mean, $38 billion. More importantly, I think, though, tied to NVIDIA as well. So walk us through the story.
Yeah, another AI headline to kick things off. You mentioned the $38 billion price tag, but also a 7-year timeline in this agreement, as well as the Amazon Web Services, AWS, as we often shorten it to, is going to basically allow OpenAI to access hundreds of thousands of these NVIDIA GPUs, which is, I think, important because it marks a major shift as well away from the reliance on the Azure product that Microsoft puts out. We also had that, of course, deal in sort of the reworking last week with, I think it was $250 billion deal still with OpenAI and Azure. So it allows OpenAI to immediately utilize this AWS infrastructure for both real-time AI inference and training of future models, with whole targeted capacity available by the end of next year, and options to expand this further if necessary. It's centered around NVIDIA's GB200 and the GB300 advanced AI chips, providing AWS is going to provide these clusters to optimize some of these accelerators to support OpenAI's growing compute needs. But the big story here from the OpenAI standpoint, Jenny, I think, is that it's seen as diversifying, again, as I said, away from just Azure. And if it's going to be a company that ultimately does sometime down the road prepare for an IPO, it's going to help in that process, where it's not just relying solely on Microsoft and is almost an extension of Microsoft. This goes to show, I mean, they recently have signed deals with Microsoft, as I mentioned, but Oracle, Google, CoreWeave, and so they're setting up a strategy in which they're relying now on several of these major tech players, not just one.
And that's a really good point, too, as far as OpenAI, and hopefully its eventual come to the public markets. I'm excited to finally put a ticker on that name, but for now, the enthusiasm is, of course, tied to Amazon, which is up. I mean, having a pretty decent day, up 4.5%, and, of course, touching those all-time highs earlier today. But appreciate it to Alex Coffey, senior equities contributor, and my co-host for Next Gen Investing, for that breakdown on one of the top moving stories today. Now let's get some further insights on the news that's shaping the overall market. And for that, we'd like to welcome in Anthony Siccaro, president of Providence Financial and Insurance Services. Anthony, thanks so much for being with us on this Monday morning. And you highlighted the market has done an excellent job, I think to many surprise, of really brushing off major concerns regarding inflation, geopolitical tensions. What do you think is really driving that resistance?
Well, thank you, Jenny, for having me here. First of all, it's amazing to me that the market has actually continued to grow to the level that it has. You look at all the tariffs that are going on, and Trump has used them as a negotiation tool, but that certainly hasn't hindered the growth of the market. Now you look at the government shutdown, right? That you almost think that whenever there's a government shutdown that's going to hurt the market, but the market really has realized that there is some noise there that's just not going to come to reality. I think the last time we had a market shutdown, a government shutdown was 18.
I bet you weren't saying that 3 months ago.
So the holidays, government doesn't work anyway for the most part, so it wasn't that big of a deal.
I was.
But tomorrow, I think we're going to hit the longest streak that this government has been shut down, and you would think that the market would react to that, but that's not what's happening. And the reason that it's not happening all boils down to this AI craze that's going on. And
you're wrong.
When did OpenAI came out? I mean, I think it's been at least a year, but that's when it started. And now with companies trying to jump into AI, the research, the development, that's what's causing this drop.
No, it ain't. It's because we got a president that's business orientated, you idiot.
I think about a third of that index. But when you go back and you look at October, the index was up, I think a little over 2%, if I'm correct. But almost 2/3 of that index were down over October. It was the tech companies and the tech trade that lifted the entire index. So you got to be careful. You really have to be careful now too, because it is bifurcated.
Okay, to speak to that exact point, because that was, I think all of our concerns when you look at actually even some of the lack of earnings growth that we.
I had no concerns, none.
What do you say to those that have the broad-based concerns that we are in a bubble right now? I mean, companies are having major debt. They're spending huge amounts for AI. I mean, just really, what do you say to the skeptics that say this AI hype could be a bubble?
Well, it does feel a little bit like 2001 all over again, and I've done research on both sides. One of the biggest factors that I think is a difference between 2001 and now is the PEs on a lot of these tech companies are in north of 60. And now they're north of 30 or somewhere in that range. So PEs are generally half of what they were back then. But on top of that, you have now companies that are spending a lot of money on AI, and you've got companies that are spending cash flow, and you've got companies that are borrowing. And you really got to be careful when you're starting to borrow money to finance hundreds of millions or billions of dollars into AI. That's when you have to really be careful. But depending, how do you want to treat it? I think that depends on the type of investor that you are and the age range that you're in. If you're still heading towards retirement, you're still 20 years away from retirement, I don't think you make a lot of change. I think you can even go more tech heavy, and I think in 20 years you'd be glad that you did that. Keep dollar cost averaging, and if we have a pullback in the market, or worse, a recession, or even worse than that, which is not off the table, you're going to benefit from that because you're dollar cost averaging. If you're retired, though, or you're close to retirement and we have a major crash right before you retire, right after you retire, that could really dramatically hinder your situation. I think you probably want to pull some chips off the table, start focusing on things that are going to give you good interest and dividends that you know you can count on so that your retirement is not tied to what the tech industry does.
Okay, and so even outside of the AI conversation, although I think it does play into some of the Fed's recent moves, I mean, we've seen, of course, further rate cuts that seem kind of difficult to imagine, as we've already seen interest rates cut a few times this year. I mean, what do you make of the Fed's next move? I know we all speculate it's very difficult to gauge, but employment, or unemployment, I should say, has been still, I mean, just sort of a lagging, lingering concern right now for investors.
Yeah, it's amazing to me that they cut it all. In my opinion, there's really no reason for them to have cut. And I don't think they're bowing to political pressure. Obviously, Trump wants them to cut. I don't think that's it. I think they're just trying to be ahead of the curve. But you look at the two mandates that they have, inflation and unemployment. Inflation has been sticky. Inflation, depending on how you measure it, it's been hovering around 3%, somewhere in that range. It's been like that for a long time. And there's been some commentary that I've read and studied that seem to point to, they make a good argument that if it wasn't for tariffs, inflation would be like 0.5% less. So you're thinking like maybe 2.5%. And it's heading towards the target of the Federal Reserve, that 2%, but it's stalled. It's been stalled for at least a year, maybe only 9 months, but somewhere shy of a year it's been stalled. And they want to keep it moving in that direction. So inflation hasn't given them a reason to lower rates, and unemployment, that's at what, 4.3%. It's stuck in the low fours now for well over a year. That hasn't given them a reason to lower rates as well too. So why they're lowering rates, I think they're just trying to get ahead of the curve. I don't think they want to be too far behind, and there's so much going on in the market right now that one little thing could spook the market. I think lowering rates just helps give that extra little bit of extra cash flow into the market so that investors can take that money, put it into stocks, and keep that market at levels.
Okay, and given, of course, the uncertainty, as you just laid out, even regarding the Fed, macro pressures, I mean, the geopolitical tensions, you did mention healthcare as well as real estate as these more
geopolitical tensions.
So right now, what makes those perhaps more attractive than, say, just going all in on big tech? As
8 wars have ended, honey.
Yeah, a lot of people are going in on big tech, and the challenge with that is that it's going to outperform, but when something happens and somebody spooks the market, it's going to underperform as well, too. That's been the history of big tech. Because at Providence Financial, we focus on retirees, I tend to be more conservative and focus on things that are going to give you, that are going to be more value plays, things that are going to have less volatility, and things that are going to pay you some type of income. Healthcare is something that you're always going to need. It doesn't matter what happens with big tech, or it doesn't matter what happens with the tariffs or with Trump wars. None of that matters because people still
Trump's wars.
And healthcare tends to rise more than anything else. And with the baby boomer generation getting
fuck?
older and continuing to get older, I think 10,000 a day, turning 65 every single day, it's going to happen for the next dozen years. Healthcare is not something that we're ever going to have a shortage of. So I think it's a good, stable play if you want to be a little more conservative. Real estate, but with interest rates as high as they are, you would have thought that when interest rates went up several years ago that the real estate market would have crashed, would have had some major problems. There was a lot of predictions that was going to happen. That didn't happen. A lot of it's because the people that had refinanced previously that are paying 3% on their 30s or less than that on their 15s. They're not going anywhere. So it's clogged up. But what's going to happen, I believe, is that as the interest rates start to drop, it's going to free up a lot of the housing market. It's going to allow those sellers that really kind of been wanting to move but don't want to give up their lower rate to move into places that they want to. It's going to give new buyers the opportunity. So I think those are two more stable. You're not going to get the returns that you're going to get in IT. But at the same time, if you can't afford to take that risk, then you shouldn't be chasing those returns anyway, because they might not all be positive returns.
I mean, especially to your point, as you are very much top of mind, keeping your retirement at the central of pretty much your thesis here. I think that's such a good point, especially those that don't have the duration to work with some of the volatility in tech right now. I can totally understand taking a more stable approach. So really great points, and so appreciate your time today. That's Anthony Siccaro, the president of Providence Financial and Insurance Services. Thanks so much for being here today. Now, plenty more to come, though, on Trading 360. Next, it's the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat goes through the technicals, and Scott Bauer will take us through the trades for IMQ, Datadog, and Seagate. That's next on Trading 360.
Oh, excuse me. Well, I'm going to go do my thing.
most iconic trading floor in the world, this is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange, the countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach.
We got the right shoulder one more time.
Finest. Tune in live or watch on demand. Head
For
over
support.
to schwab.com/coaching.
On the /ES. So it pulls back and hits that. That'll be the second time, and then it should come up and break the VWAP on the triple top. So I'd wait. I'm gonna go make a key made, get a key made. I gotta get a key made to meet this guy.
Schwab, a modern approach to wealth management.
I hate to do that because I just have a feeling a good chance I'm gonna come in that I can make a little bit, get my money back.
Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading.
Fat cats are very, very bearish right now.
You can trade brilliantly.
But it could just be a lot of crap.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
Carl's Way is the best way.
Is the best way.
Is it?
Yes.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
We're back to the orb. $2.60 to $3. No, he's already here. Hello. Yep. Oh. Yeah. Yep. Yeah. I got to put on my shoes. Okay. Yep. Damn, I'm glad I didn't. Well, gotta go do my duty. We'll be back. I'll be right back. Green machine.
Welcome back to Trading 360. I'm Jenny Horn filling in for Marley Caden today, and it's now time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. Scott, it's so good to see you, as well as, of course, Rick Ducat, and we're talking first and foremost IonQ sitting at its 50-day moving average. We know quantum stocks have been under this bubble scrutiny. So walk us through how you think through trading this name, especially given, of course, its high levels of implied volatility.
Oh yeah, and great to see you as well, Jenny. Yes, IonQ, they have earnings on Wednesday. The stock is down at critical support at the 50-day moving average, and quantum has been the rage. And there's lots of questions, like you said, whether these stocks are in a bubble now, but many of them already have working products, paying customers, and this company, it's lofty. It's got a $22 billion market cap and a PE ratio that is absolutely crazy. Nonetheless, I'm bullish. I'm buying a diagonal call spread. What does that mean? That means I'm selling this week's 65 strike call. I'm buying next week's 60 strike call. Pay about 3.5 to 375 for that. If this critical support area holds, we could see a really nice pop here. But like everything I do, Jenny, if I'm wrong here, I know what I have at risk. I am always risk defined.
Okay, especially because important to be risk defined here as we do approach earnings that would be on Wednesday after the closing bell. So now let's walk through the charts here, because again, a name that's falling pretty substantially today actually, but we approach that critical test of earnings.
Right, and you know, if we were to look at kind of that 60 to 65 level that Scott was focusing on, kind of right here is where that would shake out. So we do have some of these levels highlighted in our chart. I had my eye on the same point here. 65.50 to be more exact right here was our intraday high that we saw after our more notable decline here. You can see we hit our intraday highs for the year. We had our high close near 82.09, and then a swift fall back down to some supportive areas here. 54.74, if we were to backtrack all the way here, was an old high point here that then became supportive in terms of our closing price. So about 55 to 65, kind of broadly speaking, is the range that many traders may have their eye on. If we were to add some of our other studies here, our moving averages, 21-day, 63-day exponential moving averages, not exactly the same as the simple moving averages here, but lining up pretty closely with the high and the current price for today right now. So around 63 and 58 would be some even more short-term, more granular support and resistance levels to consider. RSI potentially on the verge of breaking out here along with price, but the price breakout so far has kind of fizzled. We're back and sitting on that trend line once more here. Finally, if we were to look at our other studies, volume profile shows a small node right about where we are now. Things really start to pick up all the way down here near 41.50. So those would be some areas to consider as well.
Okay, now we'll shift gears to another name with earnings actually still ahead. That would be on Thursday before the market opens, Datadog. And so Datadog also has seen some levels of major resistance, also implied volatility fairly elevated. So Scott, how do you manage your risk again for trading this name, especially if we could see an earnings surprise to the upside?
Sure, and yes, implied volatility is very expensive, and earnings are Thursday morning. The stock is up near some pretty large resistance. So I'm actually going the other way on this one. I'm buying a diagonal put spread on this one, which is bearish. It does take advantage of the extreme implied volatility for this week's option. So I'm selling this week's 140 strike put, buying next week's 145 strike put. Pretty inexpensive. Just have to pay around $1, maybe a little bit more for that. If the stock goes up here, that's my risk, Jenny. It's $1. If the stock kind of stays here, moves down even to that range there, this should explode the value of this position.
Okay, and so all that to be said, as we now, of course, look through the chart, Rick, what, technically speaking, is sticking out to you?
Well, 140 to 145 down right about here. And we can see that in the shorter term for our price action, we had our upside breakout that took us above some important levels here. This green line was an old high point from back here, kind of a low point and a stopping point as well. General area around 153 stood out. It was also our recent floor here. We had a bit of a triangular pattern here, symmetrical triangle, where price was consolidating. We had two increasingly narrowing trend lines going across the highs and the lows there in our short-term trading activity here. We touched on that 153 level again. Now we have made our way back up to the top of the range, but now we have taken a pause once again at 164. So that was our best closing price that we saw from that area. A push above that could lead to 168.65, those old closing highs that we saw from almost a year ago or so. Finally, if we were to look at our moving averages here, our 21-day near 156 is fairly close to that supportive level that I mentioned here, but our 63-day EMA lines up pretty well with our trend line here. So that could be another important boundary to the downside if things do start to break toward that level here. Also pretty close to where Scott was mentioning as well.
Okay, now last but not least, we're talking a name that, of course, already had earnings last week with a stellar move post-earnings, and actually now one of our best performing stocks in the S&P 500 this year, Seagate. And so Seagate has seen, I mean, again, some huge momentum to the upside, but Scott, say you were looking to take advantage of maybe just a brief pause in some of the really phenomenal rally you've seen for this stock.
Absolutely. Just over the last several minutes, 15 minutes or so, we've seen Seagate actually break out once again. But it has had an incredible move since last week, strengthened by great earnings. In my opinion, though, this is too much, too far, too fast. And this is just a short-term trade looking for a little bit of a pullback. And what I like about this one is that implied volatility, which we usually see come crashing down after earnings, has actually stayed pretty elevated, making options pretty expensive. So I am selling a bearish iron condor, which for right now, actually, the call side is just slightly in the money. But I'm selling this week's 240, 235 put spread. I'm also selling this week's 260, 265 call spread. I can get about $3.25, $3.50 credit for that, which is a huge, huge amount. If I got $3.50 for that, Jenny, the most risk I have, no matter what the move in Seagate is for this week, is $1.50. So this is a bearish trade for this week only.
And of course, you did mention the fact that we have seen actually a decent pop today to start off this session and this week, which is no surprise. Seagate has been on a run as of late. But now, last but not least, when we do go through this chart here, Rick, I mean, there's pretty much few and far between stocks that look as strong as this one has on a yearly basis. Yes,
storage space in general has been very strong as part of the tech sector. 235 to 265, right about here is that range in focus here. We had our highs near 280.35 recently. Before that, we had this shape, a falling wedge here, where after our explosive move to the upside, we were treated to this 210 level here, some old lows. From there, we bounced, we broke above that short-term trend line, Now, one area to consider to the downside, our old highs and subsequent lows near 240 stand out. When we look at some of our other studies, we can see that RSI is still trending downward. We broke out of that overbought area here. So what the bulls would want to see is for this bearish divergence to resolve, for RSI to make new highs along with price in tandem, and also push back into that overbought area here. So 265 old highs, resistance point potentially. 280.35 was our highs beyond there for this particular stock. When we also look quickly at our volume profile study, the most important volume area is down here near about 225 in terms of recent price activity. +1 and +2 standard deviation channels could also come into play, 252 and 302 respectively.
Okay, yeah, and a nice 2.5% pop, of course, to start off this week, but appreciate it too, Rick Ducat, our chart master, and Scott Bauer from Prosper Trading Academy for both of your help today. Now, coming up next, we're going to spotlight Vontier after they just posted their third quarter earnings. We'll be joined by the company's CFO to walk us through the results next on Trading 360.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Don't miss our one-on
is digital capital, digital money, digital intelligence.
The pioneer of Bitcoin treasuries is on Market Overtime.
The digital form of everything is 100 times better than the analog form.
The need-to-know info on crypto.
The United States wants to be the crypto capital of the world.
Catch my full interview with Michael Saylor here on Schwab Network.
Stay connected to what moves the markets. Download the Schwab Network app and stream anytime wherever you are. Welcome back to Trading 360. I'm Jenny Horn, live in our Chicago headquarters. It's now time to spotlight Vontier. And joining us now is Anshuman Aga, CFO of Vontier. Thank you so much for taking the time to be with us today. And really, congratulations on an excellent quarter. We've seen, the various tools from Vontier that clearly supported the growth in convenience stores. How are you helping the retailers stay competitive, as right now it's a fairly difficult market to navigate the consumer expectations in?
Thanks, Jenny, and thanks for having us. We are very uniquely positioned to provide our convenience retail customers with integrated technology offerings. When you think about how the industry has developed, there were a lot of good individual point solutions, but really moving towards more integrated offerings, which allows our customers to drive productivity, drive automation, but also drive consumer engagement is where we are leading the space and driving benefit for our customers.
Okay, so can you share a bit more on how Vontier's unified payments infrastructure is now aiding stores to capitalize on this shift towards EV and mobility services?
Yeah, when you go to a convenience store, you might be interacting with the gas pump to get gas or the EV charger, then going inside the convenience store to buy something, going to the car wash, and all of those have payment devices to transact. Typically, when you have a payment device, you have to get that certified every time there's a change to your system, to the network. So when you have all these different payment terminals across your network, getting certification is a constant ongoing battle for our customers. By having the same device across the network, which allows them not only to improve their uptime in terms of certifications, reduces complexity in terms of having spare parts, but also allows them to have consumer engagement, whether it's bringing advertisements to the customers to engage them, to bring them inside the store, or to provide order at the pump where you could be outside getting gas or charging your vehicle. And basically it gives you the option to buy a custom-made sandwich, and by the time you go inside the store, the sandwich is ready. So bringing these offerings, integrating it with loyalty, is where we are really differentiating and bringing value to our customers.
Okay, and to speak to that, your third quarter results landed at the high end of guidance. So is this really driven by loyalty, or what other operational strategies have helped deliver that outcome, which has been frankly rare in this very difficult consumer environment?
Yeah, so our convenience retail business, which is roughly 2/3 of our revenue, continues to be very strong. There's secular drivers to this business. Our largest customers, the 7-Elevens, the Circle Ks, the Wawas, the Sheetz, are continuing to invest in the space. They're expanding their offerings with bringing in fresh food. The Wawa sandwiches have a cult-like following. Same thing with Sheetz. Casey's is the 4th or the 5th largest pizza seller. So all of the ecosystem is very vibrant, and we're continuing to see investment in the space. And our technologies are helping our customers drive productivity, drive automation, but also drive the consumer engagement that I talked about. And as a result, we're seeing good demand for our products and our offering, which allowed us to hit the higher end of our guidance range and provide good results both on the top line and the bottom line.
Okay, so as far as now going into the rest of this year and of course into next, what really specific innovations or demand trends are driving your confidence into say 2026, and what right now is perhaps still a lingering headwind that you're facing right now to hopefully ease the overall difficulty of just frankly a macro environment that has been very much punishing some and rewarding others?
Yeah, as I mentioned, for 2/3 of our portfolio, which is tied to the convenience retail, we're seeing a lot of positive trends in the market in terms of secular demands. When you start off with, while you can talk about the form of energy or fuel that's going to be used by vehicles, the underlying fact is that the demand for energy or fuel is going to increase over time. And we're very well positioned, regardless of the fuel type, whether it's traditional gas, whether it's biofuels, whether it's compressed natural gas, whether it's electric charging. We are the leading provider with the right profit pools, so that adds to our growth profile. Also, the challenges around consumer engagement, productivity, as our convenience store customers continue to grow bigger, drive more consumer engagement, all are leading to good positive trends for the business. On the flip side, our Matco business, which is our repair solutions business, that we're expecting to be a little bit slower, more in flattish versus this year, given the fact that our customers out there are the end technicians, and they're feeling it with the macro headwinds around higher inflations, higher cost of living, and just the general economy.
Okay, so last but not least here, walk us through this 80/20 initiative and the VBS framework, which have really continued to help drive a margin expansion. I know that we saw adjusted operating margin expansion by about 30 bips this quarter. So how can you continue to, make this now a trend going forward?
Yeah, our one-tier business system is a culture of continuous improvement, and the 80/20 is just one of the tools that are embedded in there. It's really a culture of breakthrough performance that we're driving within the organization, and it's something that's embedded at multiple or all levels of the organization. 80/20 is a very simple principle of where we focus 20% of our customers, 20% of our products generally lead to 80% of our revenue, 80% plus of our profit. And it's really, how do you serve these customers? How do you serve these products better? And making sure we're investing and simplifying the organization to serve our large customers with better products and invest in those products.
Okay, well, appreciate your time today, and really congratulations on what has been a difficult macro and consumer environment, and your results have been, just so strong, being able to achieve higher guidance, of course, than even anticipated, at the high end of your guidance, I should say. But appreciate it. Anshuman Aga, CFO of Vontier, thanks so much for joining us today. Now, coming up next, Kevin Green will join us for the Disruptors to take a look at On Semi after earnings, giving back some of its initial strength. Trading 360 will be right back. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques, like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Trading 360. I'm Jenny Horn here in our Chicago headquarters. Let's now head out, though, to the New York Stock Exchange for a check on the markets and welcome in Nicole Patalides, the host of Opening Bell and The Watch List. Nicole, really, what sticks out to you today as far as these markets, which I will say we haven't improved much from where we started the show about 40 minutes ago. We're basically in a pretty mixed picture here for the four major averages.
And it's the climbing of the wall of worry. It's been a slow climb. We're not too far off record highs. You've had the S&P 500 6 months in a row higher. The NASDAQ has been up 7 months in a row. And while we do go back and forth on the major averages, it's been a slow climb. And most of the guests I speak with still think the path of the least resistance is to the upside. For example, the guest I spoke with today, Scott Ladner, did say, look, I see 8,000 on the S&P by the end of next year. So while we may have some pullbacks, he wasn't sure if we see 7,000 this year, still saying, look, I'm feeling pretty positive. So did Jay Woods. That doesn't mean that they're not cautious, and that is because we have run up. The big picture here is you do have so many names reporting of 135 S&P 500 companies reporting. Last week we had over 170. It was a lot of fun with the Mag 7 names and a lot of key names to watch. I mean, even today you'll have AMD, Kava, Match, Live Nation. There's so many names reporting. So those are key. You have had a couple of deals. You've had Amazon, OpenAI, Microsoft, IREN. We'll talk about Kimberly-Clark and Kenvue. But overall, the market seems to be in a wait-and-see mode because we're also in day 34 of the shutdown. And so, you know, there's still that wild card, Jenny.
There absolutely is. And it almost felt like that was pushed aside last week because we had so much else to talk about. And I mean, today has really been no exception. We also have this major piece of news from Kimberly-Clark set to acquire the Tylenol maker Kenvue. So take us through the details on this story.
This is the biggest consumer goods deal of the year, or that I can remember in recent memory. It's huge. It's valued at $48.7 billion. It's likely to close next year. And you're talking about Kimberly-Clark. That's the maker of Huggies and Kleenex. To buy the maker of Tylenol and also Neutrogena, just to name a few things, and that's Kenvue. Now, Kenvue launched here at the New York Stock Exchange in 2023. They were spun off from Johnson & Johnson, and it IPO'd at $22. And while it got an initial pop after that, it's been declining ever since, even before the whole controversy came pertaining to Tylenol. In the meantime, now you have the Kenvue and Kimberly-Clark deal happening here. You're talking about $10 billion brands, $32 billion in annual sales, and really half of the globe the population is using these products. So the deal will likely go through in 2026. We have to wait and see. But that is the big picture. And apparently, Kimberly-Clark really did comb through some of the issues pertaining to the allegations about Tylenol and felt it was a good move to go forward with this. And of course, the one being acquired is soaring. That's up 17%, and that's Kenvue. And the one making the acquisition, as usual, often, is down 12%, and that's Kimberly-Clark. But big news on the day, without a doubt.
And to your point, big moves we're seeing in both those names in pretty much opposite directions, which is not abnormal to see the acquirer company, you know, seeing some weakness, but pretty big moves in both these stocks today. So appreciate it. Nicole Patalides, of course, host for the Schwab Network. But now it's time for the disruptors, and Kevin Green is here with us, senior markets correspondent, to break down the move today we're seeing in ON Semiconductor, which saw earnings this morning. Initially was higher, now is pretty lackluster here on the session, Kevin. So walk us through sort of how you make really sense of these earnings, and of course then, for example purposes, how you trade this name.
Yeah, well, we are seeing the shares down over 1%. And Jenny, as you kind of talked about, the earnings announcement was actually pretty decent. When you're looking at the Q1 revenue, that came in at $1.55 billion. Street was looking for around $1.52 billion. That's around a 12% drop on a year-over-year basis. And the adjusted earnings per share did beat, coming in at 63 cents. Street was looking for 60 cents here. And they did complete a share repurchase up to $925 million worth. That's pretty much 100% of the free cash flow. So that's really where they're putting their money to work at this point in time here. Their guidance moving forward, let's say it came in line with the street's expectations. The Q4 revenue guide came in at $1.53 billion. The adjusted earnings per share midpoint sitting at around 62 cents. Both of them, once again, meeting the street's expectations. Margins maybe a little bit light. You're looking at a range between 36.9% and 38.9%. Just a tad bit light when you come to that particular number here, but they are still seeing very strong sales when it comes to artificial intelligence. We know that the EV business or the automotive business has been fairly lackluster over the last couple of quarters here, and I would say that you're still seeing some pockets of weakness within that space, and that's really where they're driving the majority of their margins, at least for now. Now, their CEO actually did make a mention around this next era, Nexperia shortage that you are seeing. This is a company that's in the Netherlands. It's a competitor of theirs. There's a little bit of a chip shortage that's actually taking place. And he says that they are working with their customers in order to try to find alternatives. So that could actually be a tailwind for this company over the next couple of months. But you are seeing kind of this buy the rumor, sell the news type of event. You're not seeing anything that's really a blockbuster beat to the upside or downside, but you're not seeing anything that's really aggressively weak as well. It's still trying to hold its own at these current levels.
Yeah, even as far as some of its guidance metrics, I mean, I know it wasn't a huge beat by any means, but it pretty much gives you the midpoint of what the street had been expecting. So it wasn't like we saw weakness going forward hugely either. So again, all this to be considered, say you're looking at you're trying to get into the semi space, and this name is not at perhaps as rich evaluations as some of its major tech peers. How do you think through an example trade?
Well, if you're looking at a chart, you can see that $45 or that $46-ish area has been an area for support for this name pretty much since August. So you could actually look at a cash secured equity put, and I'm looking at the November monthly $46 put here, selling that for a credit of $1.05. So the max loss on the trade is if the stock does go to zero by the time of expiration, which is $4,495, with a break-even point of $44.95, and max profit if the stock does stay above that $46 level at the time of expiration, $105. This just gives you an opportunity to position yourself to take on shares if the stock does actually move a little bit lower, and you're receiving a premium in order to do so here. You obviously have some downside risk, but this is a trade that is really trying to kind of set up a long position over the long term here if you are going to see some form of a pullback. So it's still risk defined. You do have some upside potential here, but you also have the ability to actually receive a little bit of a credit, leveraging time value in your favor. So this is actually a neutral to bullish trade to the upside if you are optimistic on this name. And as you kind of talked about, it's been a laggard. It's a cheaper semiconductor player compared to its peers here, and we'll see if the market actually finds some value at these current levels.
Yeah, still off of its highs made, earlier in, basically a year ago at this point, by now 34% roughly in today's move. Not exactly moving the needle a whole lot as far as improvements go. So appreciate that, Kevin Green, for all of the trade help and, of course, breaking down that move today on semiconductor. But coming up next, it's time now for our 360 round. We'll discuss the winners and losers of the Mag 7 after last week's earnings. As we're seeing actually most of these names, with the exception of Apple, higher on the session today. That's next on Trading 360.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays,
We bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Jenny Horn, and it's now time for the 360 round. And for that, let's bring in our panel to discuss the winners and losers from the Mag 7, especially in light of earnings last week. Michael Robinson, Tech Investing Strategies at Weiss Ratings, and Benjamin Conard, Portfolio Manager at Carnegie Invest. Thank you both so much for being with me today. And let's start off with the big question here. Is the AI bubble finally busted, or was it never really real to begin with? And Michael, we'll start with you. I'd like to get your thoughts there.
Thank you so much. It's good to be with you, Jenny. I'm calling this the Mythbuster quarter for AI. Going into this last week's earnings rounds, there was a lot of speculation, particularly in the Wall Street Journal, to a certain extent, investors' business, tell you that we're in this big tech bubble driven by AI. There was no end in sight, and they're spending hundreds and hundreds of billions of dollars at big tech, and no game plan for how to monetize it. And that's just changed abruptly over the weekend. Almost everybody was saying, okay, well, we're not in a bubble now. Why is that? Well, because, for instance, Alphabet showed clearly that AI can be a big driver of new sales, particularly in the cloud. And they had very strong earnings. In fact, earnings across the board among big tech, they all turned in. We haven't heard from NVIDIA, that's in 2 weeks, but they all turned in really great quarters. So that was the winner. Tech AI writ large, that was the big winner. The loser for the week I have is Meta, and that's because Mark Zuckerberg did not do a good job of telling what the exit strategies or how they're going to monetize it. He's using these big terms like super intelligence and things like that. We need to spend more money. That may very well be true, but he hasn't articulated a clear path to how. He could have talked about how it's changing their ad business and making it much easier to sell ads, but didn't really do that very much. So they were the big loser, and you saw that the stock went down. This is the guy who changed the name of his company to Meta, as short for the metaverse. They spent a lot of money on that, and we really haven't seen them monetize it. So I just don't think he had the right message, even though the quarter was strong. They've got a fantastic franchise.
It really was. And so, Benjamin, I'd like to get your thoughts there, just broad speaking on what worked, what didn't. And obviously, I will say Meta, of course, being our big laggard of the group. But I will say that collectively, I mean, the spending that was once a huge, huge benefit to, it seems like, the street, is now being more criticized, more scrutinized of, like, how do you actually monetize this massive capex?
Yeah, I mean, the spending obviously came under scrutiny, especially from Meta. That was the reason the stock went down. But it is interesting because you look at Meta and you look at Alphabet and Amazon, they've incorporated AI into their advertising product, and it's led to better results. The revenue per click for Google was up, the revenue per an ad for Meta was up. I think Amazon has experienced similar results. So they have seen benefits from artificial intelligence investing. I think the street's just more skeptical. Meta is the exception as far as they build out AI. They don't have a public cloud service, so their ability to monetize isn't apparent. And so their spending will always be viewed more skeptically than the others.
It's very true. And so now to go back to, I mean, what was working perhaps last week, and Michael, what are your thoughts here on Apple? And I know it's been really sticking to its guns with its ecosystem, but has that finally proven that it maybe perhaps doesn't need to be chasing these massive AI plans and its strategy could be working?
Well, Tim Cook has taken a pretty conservative strategy, and it's working out very well. I think one of the things that was great about this quarter was it reinforced, there had been this sense that they were basically not on the AI train at all, and Siri is really kind of the dumbest bot out there, right? She's terrible, except for driving directions. But what they've shown is they've got a fantastic tech ecosystem. I went to the Apple store recently, and I couldn't get out for less than $3,000. I got a new phone, a new pad, I got 2 sets of headphones, I got my wife a watch. They have really shown that you don't have to be, look, we're in a 20-year super cycle for AI, but they are not in there. They're using it internally, but they're not trying, like you were just talking about, they're not renting out cloud sales or anything like that, but they have a fantastic franchise, and I think this was an important quarter for them because they proved that Wall Street and Main Street investors alike that if they stick to their knitting and just do a great job and execute, keep coming up with good products, and they're doing great with their services sale. That's a fantastic franchise. So this was a very important quarter for them as a contrast against everybody spending gobs of money on AI.
Gobs of money on AI is a great way to put it. And Benjamin, last but not least here, curious about your real confidence going forward in the rest of tech earnings. I know we still haven't heard from NVIDIA yet, Broadcom. I mean, what are you really watching now on the horizon?
Well, NVIDIA and Broadcom, their earnings should be good, and their guidance should be relatively strong, just because we've seen the Microsoft, Alphabet, and Meta have said they're spending more money. So the tech companies coming down the road, they'll be the beneficiaries of that spending. The interesting thing maybe on Broadcom, do they announce any larger deals with some of the bigger players? It's hard, there aren't that many left. They already have deals. They're working with Google and Meta already. But that should be something that comes out of their earnings, and it'll be interesting to watch for that.
Okay, Michael, your final thoughts here on what you're watching from the rest of the tech trade as we go forward into earnings season.
I really want to see what happens with NVIDIA. You were just making the point there a moment ago. I think we're going to have strong earnings. Now, earnings growth has slowed considerably. When you get to $5 trillion, it's hard to continue growing at that pace. I want to get a sense of how big is the backlog for Blackwell. How well is Blackwell doing? It's still very early in that cycle, but I'd like to get a sense of adoption rate, what kind of backlog there is, what kind of billings they have on the books, because for all we know, they might have 2 years of billings out there. So I'd like to get that snapshot out of this quarter.
Yeah, and I will be very, very much tuned in on some of these major tech names as they come out. I know we don't get the bulk of them as we did last week, but still a lot of these major tech names reporting. So I appreciate it to you both. That's Michael Robinson from Weiss Ratings and Benjamin Conrad from Carnegie Invest. Thank you for joining us on Trading 360. I'm Jenny Horn. Download the free Schwab Network app, available in the Apple App Store. And of course, tune in 24/7 on schwabnetwork.com. Fast Market with Diane King Hall is coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists, streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, and trading activity has been mixed so far as we kick off a new month on Wall Street after a stronger than expected October. The S&P 500 right now has a gain of about 0.25%. The Dow taking a step back, off by about a third, just shy of 1/3%. NASDAQ 100 has a gain right now of 0.5%. While small caps, the Russell 2000 lower by a little bit more than 0.5%. Here's the roadmap for today's show. We'll look at example option strategies for Palantir. That one has earnings due after the bell today. Plus, the team from Lightfolio will be along with sentiment data on Shopify. And Uber has its quarterly report card due, and that's before the open tomorrow. Now that we've got the roadmap for today's trading action, it's time to bring in my co-hosts and trading veterans, Tom White in our Chicago studio and Kevin Haynes joining us live from the CBOE. We've got you covered from exchange to exchange and beyond. All right, so guys, we are not completely in an economic data blackout, right? So we got a new reading on the manufacturing sector this morning showing that factory activity shrank for the 8th month in a row. We will also get some jobs data this week, not from the government, but we'll get ADP. So it feels like more attention will need to be paid to that. Tom, what's your take overall on what we have so far and the road ahead?
Well, yeah, I mean, it's been almost 5 weeks, so we haven't had a lot of data, but these points help the ISM and PMI manufacturing data, but they've been in contraction, as you mentioned, for months and months. So it's not surprising we're not seeing any inroads there. The PMI was a little bit higher than anticipated on the final read, but ISM continues to come in a little bit weaker on that manufacturing side. But that hasn't been really the story. You have to start looking at services, which are still above the 50 level. We'll get those in a couple days. But the blackout, as far as data goes, it doesn't seem to be negatively impacting the markets and the optimism for risk assets at this point. Earnings have been great. That's supported maybe the next leg of the rally that we've seen. But I'm reading, more and more that, November's historically one of the strongest months out of the year. And especially if you have some data from FactSet that said, hey, if we're up at least 15% going into November, well, it's almost always higher in November and December into the end of the year by an average of about 5%. That doesn't mean it's going to happen this time, but the odds are with that type of optimism here, and the earnings are backing it up so far, Diane.
Yeah, so that's a great point about the earnings backing up, because we've had a strong earnings season so far, and though we won't have as many this week, it's still a big week for earnings. Kev, what's your take when you think about the momentum and especially given what Tom said about the historic time period and how it kind of lends itself to be in favor of the bulls?
Yeah, this market has had a really good year, and a lot of people are calling it to be strong into the end of the year. That said, this is not a very impressive day for the markets. I mean, you've got a very small number of names. I mean, you still got 9 of the 11 sectors in the S&P down, yet the S&P is higher, right? That is an incredible flaw in looking at the S&P. But what's higher? Well, consumer discretionary with Tesla and Amazon, 2 big names. Information technology with NVIDIA and Micron and Google, Alphabet, and Meta's up a little bit. And then you got Lam Research and Applied Materials and KLA Corp. I mean, we're having a pretty good day. Palantir's up, I'm sorry, ahead of their earnings. Don't forget to call that one. So we've got a very small number of stocks that are higher, but they carry a lot of weight. And so even though the majority of stocks, the majority of sectors in the S&P 500 are down, this is not a very impressive rally, but it's a rally nonetheless, Diane.
That's a good point. And then some say, well, you need to pay more attention to the price action and the equal weight to, kind of really see beyond these heavyweights like Amazon. And speaking of Amazon, so as you mentioned, those shares are on the rise right now. They're up more than 4.5%. This is coming after that OpenAI deal. They inked this $38 billion deal. So it's with AWS. It's going to access hundreds of thousands of NVIDIA chips. This reminds me of that circle that we talk about sometimes. And Tom, I know you talk about this a lot. And it feels like this is right back into the circle, but it bodes well for Amazon. What's your take, Tom?
Yeah, I think it, that's the question I think everybody's saying. OpenAI has signed over $1 trillion worth of deals. They've got Broadcom, Oracle, Google Alphabet. They've got the existing, partnership with Microsoft, even though that went off where they can use other cloud providers moving forward, and that lines up exactly with AWS. It feels like it's going to help all these big hyperscalers the most, as opposed to helping OpenAI, where they're not making money yet on their ChatGPT. They've got I think it's 700 million people using it on a daily basis. So yeah, not surprising that we're seeing this deal. Amazon has the capacity to allow OpenAI to use their cloud platform right now, and they're already starting that. This is going to last for years. They have the capacity to build out more for OpenAI, but not surprising as the leader in the cloud space that Amazon's getting a portion of all these contracts that they've signed. I think it's $1.4 trillion at this point. So the loop continues, but Diane and Kev, I think, these hyperscalers are going to be the winners because they're, getting these partnerships built for them to use their products, right? But then you have to start thinking about down the line. Is OpenAI going to be able to support all these contracts that they're signing with all these hyperscalers? That's going to be the question, I think. And we might be a year or 2 or 3 years away from that.
Yeah, that's a good point. I got a note from Wedbush from Dan Ives this morning. They've raised their price target on Amazon. Their new price target, $340, so that's their 12-month price target now. Obviously, the trigger for this, or it seems to me it's obvious, it's about this OpenAI deal. They see it as a continued move in the right direction for Amazon as they broaden AI services. When you think about the landscape, Kev, as it relates to Amazon and AWS, what's your take?
I think this is just more deals, and the amount of commas in these deals, it just keep rotating around from one name to another. I think this is great news for Amazon. Needless to say, Amazon's footprint keeps getting bigger. How did we just think of what happened a week or so ago? Now it's probably 2 weeks ago with the outage from AWS and how many people were affected by that. And you see the reach, how many people are using these services. And so OpenAI, I'd like to know more about OpenAI and when they plan to go public. Is this going to be a publicly traded company? Is this going to be just one of these? Because there are so many, it's hard to keep up with all the stories and deals and looking for the names affected, and does it affect the names that you're trading? Today, obviously, Amazon and NVIDIA, it affects those two. But when do we, it's almost hard to keep up, Diane, I guess is what I'm saying. And I don't know. We keep thinking that some, not necessarily no growth, but just a deceleration of growth is what you're watching for, and you're just not seeing it. This one, $38 billion agreement, and then renewable and expandable over the next 7 years. It just keeps going, Diane. You got to keep trading these. You got to keep protecting your risk. Understand that valuations are getting a bit pricey, but look at, some of these upgrades and some of these price targets that they're going on these names, just incredible. What'd you say that Wedbush went on Amazon? That's a big number for Amazon. Remember, this is not a small company, so it's massive moves here. Yeah, you just gotta keep trading these names, keep controlling your risk, Diane.
So just to reiterate the price target, they've raised it to 340. They've got an outperform rating on it. So that's where they see it going to. And it's interesting the point you made about seeing AI or OpenAI rather, potentially the road ahead for it becoming a public company, because there's obviously chatter about that. What I find interesting around that conversation, sort of in the atmosphere, is the fight that was happening on Twitter X over the weekend between Elon Musk and Sam Altman. Really is about the structure, because obviously Elon Musk has some criticism about it not being a nonprofit anymore, and Sam Altman's firing back, defending the shift in direction for the now company. All right, let's talk NVIDIA, you guys. So NVIDIA is, let's see if it's still in the $5 trillion club, because it hit that level. Yeah, holding on. It's got a gain this morning, $5 trillion market cap, after Loop Capital boosted its price target on shares. Tom, what's your take on this one?
Well, not surprising. This is coming into earnings. You see all these deals getting, talked about. TSM's raising prices on chips because of the demand. So the demand's still out there, and NVIDIA is, right there at the top of the heap. Not surprising. Goldman Sachs also raised their price target. It's 240 from 200 or something like that also. So not surprising that we're seeing the optimism, because all these big hyperscalers and big tech companies that reported last week, the demand's still there. They're still expanding their CapEx spend. That's what hurt Meta Platforms last week, that they raised the baseline of what they're going to spend this year in CapEx from 68 billion to 72 billion. So, that's what you've got to rely on, is that demand is still there. These big companies, these big tech companies are, continuing to buy and expand the amount of, money that they're investing in the AI infrastructure build out. And until that ends, Diane, any talk of this AI bubble can be put to rest, because I think until we see these companies actually start pulling back, where, hey, maybe we're not monetizing as much as we're putting in, then, we're probably not going to see the bubble probably pop in AI infrastructure build out until these guys pull back on some of their spending and their expenses. So, that's a win for NVIDIA. Now, President Trump did come out and say that, hey, we're not going to allow like the Blackwell, the high-end AI chips to be sold to anybody else, including China. That might dent Jensen Huang's theory, where he wants to be able to sell to anybody and everyone across the globe. So, but at the same time, all these companies continuing to invest, and that's good for NVIDIA.
Yeah, great point. And so we had Loop Capital, Goldman Sachs also raising its price target. Cam, what's your take on this as it relates to NVIDIA today?
Yeah, Loop Capital goes from 250 to 350. What's the valuation on NVIDIA at 350? That's almost, what's that, a 70% rally from here? So, listen, I still believe that we are in a unbelievably big demand. Valuations don't really seem to matter. I mean, these companies just keep growing, and now they're investing in each other. NVIDIA's, doing a great job. Remember, 16 days till their earnings. How important is that earnings going to be? Although we say that every quarter, Diane, that NVIDIA's earnings are going to be crucial, but 16 days till we get NVIDIA's earnings. I'm not sure. I thought, mistakenly, by the way, that the Qualcomm news about them getting into chips was going to be good for Qualcomm and not great for NVIDIA, and the exact opposite has happened. And NVIDIA just kept going like nothing had happened, even though Qualcomm claims they're going to be be able to compete with NVIDIA. And AMD says they're competing with NVIDIA, and AMD's rallied, but it just doesn't seem to weaken NVIDIA. All these things, you would think some chatter going in would cause some doubt. No way. I mean, the numbers they're putting up now, everyone, we're getting into that within 2 weeks now, soon of NVIDIA's earnings, and man, this is going to be hyper focused on this name, Diane.
Good point. The hyper focus on the name, and the hyper focus happening even before it's got earnings. As you mentioned, how many days we have out until NVIDIA. Guys, let's talk some deal news. So Kimberly Clark, this feels like kind of a knight in shining armor situation as it relates to Kinvu. So they're putting a stake in the ground in the consumer health space. They're buying Kenvue in a deal worth about $48.7 billion. So it puts a bunch of household names in the same, like think of it like our medicine cabinet, basically now Tylenol, Kleenex, Huggies, you name it, are about to come together under one house. And listen, Kenvue has struggled this year, but rallying off this news. Tom, what's your take on this?
Well, not surprising. I mean, it was a good deal for Kimberly-Clark because the stock, of Kenvue has gone down so far this year on the back of those, headwinds created from Tylenol, acetaminophen at this point. But $1.9 billion in cost synergies right away. I mean, that's a pretty good deal. Now, they're still dwarfed by Procter & Gamble, even the combination of these two companies. But as far as distribution, cost savings, that's probably going to be a bonus for both of these companies moving forward on this. And, this is what's been happening in the space in general in a lot of the staples and consumer discretionary names where some company will spin off something and then another company will come in and scoop that up. Here, I think they're getting a good deal because of the stock pullback on this one for Kimberly-Clark, and Kenvue and that pullback that we've seen. So, yeah, not surprising that you're going to see more mergers and acquisitions as maybe costs rise and maybe synergies are able to, get out there immediately, right? Cost savings are immediate on a type of deal like this, especially through distribution and brand awareness.
Okay, Kev, what's your take on this deal?
One of the more fascinating parts of doing this job and looking at these companies is when you find these product portfolios that Kenvue had. And Kimberly-Clark's been looking at them since Johnson & Johnson spun them off. And this is a massive portfolio of products that they're buying. And Tom mentioned the Tylenol news depressed this stock and made this a much more reasonable purchase for Kimberly-Clark. Now, they're assuming a little bit of risk, but not much. They're getting indemnified by a lot of the risk on this. And even though Kimberly-Clark stock is down, the company that they're building is going to be pretty significant. And I think that's what this CEO mentioned today. He's mentioned we're going through the hard work to build this company, what they're looking for the future. And I think this is a great purchase for them to take these because of the size of the product portfolio, Diane.
All right, great points there, guys. All right, let's bookmark that. We got Bull versus Bear coming up. Guys will get their example trades put together for Palantir. It's got earnings due after the bell today. We'll have more Fast Market after this break.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Fast Market here on Schwab Network. Palantir set to release its quarterly report card after the close of trading today. Wall Street is looking for earnings of 17 cents a share on an adjusted basis. Revenue is projected to approach 1.1 billion. The big question hanging around Palantir has been valuation, and most analysts are in the hold camp. The stock has rallied more than 160% year to date. All right, let's throw on the trading glasses and welcome back in our co-hosts, Tom White and Kevin Hinks. It is bull versus bear time. So before we get to the example trades, we got to talk about Palantir heading into its earnings. Kev, let's start with you. I mean, the criticism around it has been the valuation, but listen, this has been a rocket ship. What's your take?
There's the big question. Can they grow enough, put up video game numbers of growth enough to hold the stock price up around this level? A lot of what we've seen in this earnings season is good earnings, but not holding how far these stocks have rallied. And they've got some good news, right? Their consumer, their U.S. consumer, is growing at incredible numbers. Here's the numbers. It grew 93%. And 20% sequentially. So that plays. But that being said, there's still 55% of their earnings comes from government contracts. So they have things coming in from both sides. They're doing extremely well. I don't know if they're doing this well as the stock price is trading. But boy, they've got a popular name. Remember, this company really took off when they were able to take that government service and put it to small and medium-sized businesses. And that's when this stock went crazy. And they've basically doubled and quadrupled the money that they're bringing in. But the valuation, here's the valuation. They currently trade right around 105 times forward price to sales. 105. Cloudflare, 35.5 times, and CrowdStrike, 25. So think about that. They're 3 times bigger than Cloudflare, 4 times more than CrowdStrike. So can they justify the valuation? Those are the numbers they have to put up, Diane.
Can they justify the valuation? That's a good take there, Kev. And then, as you mentioned, the growth on the commercial side. I mean, they've got big names, big name clients as well. Now, Tom, what's your take?
I mean, you look at the revenue, it's supposed to grow, over 50%. And that's what everybody's kind of banking on. That's why you see those big numbers as far as forward PEs. The forward PE above 217 at this point overall. And Kevin mentioned the price to sales forward looking. They're extreme at this point. But that doesn't seem to matter because everybody thinks that this growth rate, which has continued at quarter after quarter, is going to continue. And you start to take a look at Q2 and their highest ever total contract value, $2.3 billion, with annual contract value about $684 million. So the deal activity remains robust, and they're picking up those customers that are actually spending more money. So the commercial side of their business is actually growing pretty quickly, and to rival, the Defense Department contracts and some of their other government contracts. But it seems like this is one of those companies that everybody figures they're going to be the leader as far as monetization of AI with their artificial intelligence platform that has become so popular. So they need to keep these growth rates going because, as Kevin and I mentioned, the valuations are just kind of ridiculous at this point.
All right, that's a good perspective there. All right, let's get into the trade examples. Kev, you're up first. What's your example trade approach?
Well, Diane and Tom, mine is a little bit to the bearish side. I just have trouble getting on board at these types of valuations. Not that I don't like the stock, but just at some point I want to be long it, at some point I want to be short it. So what I looked at here is something that we do a lot on this show. It's kind of in the complex strategy where if the stock does nothing and stays right here, you'd be mostly profitable. So I sold. I looked at the expected move, Diane, of about $17.50, and I went in line and sold the 220, 225 call vertical just in this week's November 7th. Then I used that credit to buy the November 14th, November 7th, 190 put calendar. And so you did that whole thing. It was trading about a nickel, went up to 30 cents. Now it's trading about 25 cents debit. So there, you do have a little bit of risk because you are paying a debit for it. But this is one that you fairly have a good chance to be profitable if the stock stays right here or moves down towards 190, because you're going to be profitable on that call vertical spread. But you know, this one where you'd like to go is 190. The risk on this trade is if it breaks 200 and goes towards 225, you've got basically the $5 within the spread, and whatever you paid for the total package is risk. If you're able to get it out for a credit, then it's less than $5. But if you pay a debit, then it's $5 plus that debit is the risk on the trade. Diane, Tom?
Yep. Let's go the complex trade. Using one strategy to help finance another in this four-legged combination trade. In the November 7th weekly options that expire in 4 days, sell the 220 call, buy the 225 call. There's that short $5 wide call vertical, and that's helping to pay for a portion of the put calendar here, where you're buying the November 14th weekly options that expire in 11 days. You're buying the 190 put, selling that same 190 put in the near term November 7th weekly options that expire in 4 days. As a package, 30-cent debit. Kevin mentioned the risk on this is all the way to the upside, and that's above $225. You've got $530 in risk. You break even to the upside, $219.70. You want it to remain below there, but remember on this type of trade, because you're paying a debit for it, if this stock falls out of bed, goes below maybe 175, 170, you're going to have that $30 in risk. You don't have the short call vertical in risk because if the stock falls, you're just going to have that debit. So it's got two break evens, but far below where the stock's trading. Option market pricing in about $17.70 move either way in the stock. So this is the bearish one where you want it to go at or near 190, but you can see here from the risk profile, even the stock stays in this area that it's currently trading about $205, goes up to $219.70, you can still be profitable on this trade. You just don't want it to go up higher through that short call vertical on this neutral to bearish four-legged custom example trade here. Now, Kevin, I'm going to flip the script a little bit, and we always talk about the vol dispersion, because implied volatility levels in the near-term options that expire in the next 4 days have that earnings event, so those are elevated at this point. I went a little bit more bullish on my example trade. If you think the stock's going to continue to move higher, remember the all-time high it got hit today, 206. If you think it's going to go higher, it has gone higher 3 out of the last 4 earnings events the day after. So this takes advantage of that. Going out to that same November 14th weekly cycle that expires in 11 days, buy the in-the-money 202.5 strike call. And then in the near term, about that 1 standard deviation, in the near term November 7th weekly options, sell the 220 strike call. So a bullish $17.50 wide call diagonal. You're going to pay roughly about an $8.30 debit. It's trading closer to $8.60 now because the stock has moved higher. But the debit you pay is going to be a risk. So if you pay $8.30, $830 in risk on this particular trade. And you can see here that 1 standard deviation move is where this stock apexes as far as profitability, right at or near that 220 strike on this one. Anything above about 205, 206 is going to be potential profitability on this one. So you do need a slight move to the upside, but on a percentage basis, not that much. Kev, your take here on the call diagonal if you're bullish on this name.
Yeah, this gets you along about 26 deltas. You lined up, it lined up almost identical to the expected move, where your short option, the 220 call, is the same short option that I use. Why did those come in the same numbers? Because that's the expected move. All we did was use the tools on the Thinkorswim platform to help you with your strike selection. So the 220 call is what you're short, that's where you want it to go. Buying the 202 that's slightly in the money against it, and you're just looking for a move. And you don't care how high it goes. You'd rather have it go right to that strike, but you're still profitable on the way. The risk on this one is the downside. You've got about a little over 26 deltas on this trade, Tom. So it's the calendar spread with the embedded vertical spread. This time about, what, $17.50 in the vertical, about double what you're paying for the spread.
Yeah, that's a good point because that vol dispersion lowers the entry point. So a $17.50 white call call diagonal, and you're paying less than half the width. And that's why, because you're buying a lower implied volatility, selling a higher, because you've got that event risk in the near-term options. Now you've got some assignment risk on that short option on the 220 strike call over the next 4 days also, so keep that in mind. But the idea here is you want it to go up or near that 220 level, but anything above about 205, 206, going to be potential profitability on this bullish trade. So Diane, there it is. But there is an area where both Kevin and my trade could be profitable on this one also.
I like that this was a true bull versus bear, and I bet some of you all were surprised on who went where with the example trades there. All right, coming up, we've got cash tags. The team from Likefolio will be along with new data on Shopify. It's got earnings coming up as well. Stay right here on Schwab Network Fast Market. We'll be back after this break.
Hi, I'm Alex.
I'm Jane.
And I'm his mom. Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Don't miss our one-on-one interview with Strategy's Michael Saylor.
The future is digital capital, digital money, digital intelligence.
The pioneer of Bitcoin treasuries is on Market Overtime.
The digital form of everything is 100 times better than the analog form.
The need-to-know info on crypto.
The United States wants to be the crypto capital of the world.
Catch my full interview with Michael Saylor here on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
No politics, no spin, just the market from open to close and beyond. Streaming 24/7, any screen, anywhere at schwabnetwork.com.
Welcome back to Fast Market here on Schwab Network. I'm Diane King Hall alongside Tom White in our Chicago studio. Time now for our cash tag segment. For that, let's bring in our next guest, and we've got Landon Swan, co-founder of Likefolio, joining us today, taking a look at Shopify. All right, Landon, it's good to see you at the start of a new week, new month. Let's talk about Shopify. The stock has been an outperformer so far this year. I'd be curious to know what your sentiment data shows about how consumers are viewing this now, especially in light of the deal it made with OpenAI earlier this year, where it's that instant checkout feature. Are you noticing any uptick in terms of how consumers are viewing this one?
Yeah, actually we are. I mean, this is one that's sort of a core conviction investment for Likefolio. This is one that the data just continues to be strong on. And, we're not married to any stock, but if the data continues to be strong, we continue to be in love with it. And that's the case with Shopify. I mean, the stock has gone from, 77 a year ago, ran up to 182, and now it's dipped a little bit to 171 heading into earnings. And the data that we have on it is very strong. So if you look at at just the web data, just web visits, which is obviously very predictive. Actually, last quarter it was plus 30 year over year, and their gross merchant volume came in at plus 31. So we love this metric for this company. Right now, their web data is at plus 45, which is even better than last quarter. And they had a big pop on last quarter. It went from, I think it was up about 20% on the earnings release. So yes, expectations I think are very high. It's a little bit of a pullback, but expectations are high, so I think they've got to beat in a big way. I think they will. If you look at how well they're doing, just web visits versus some of the competition, it's wild. I mean, they are an outlier of outliers here at plus 45%. Everyone else is just kind of hanging on right around even, basically, with some of the weaker names falling off there at the bottom. And like you said, they've got this new partnership with OpenAI. That was a matter of time, and this is what's going to scare Google, and I think, frankly, their entire platforms is also going to scare Amazon. So they're kind of coming after the two of the biggest names out there, and they're doing it with just superior technology. So Shopify is a company that allows you to, with one click, open up a store. If you've got a product with a description, you can open up an online store. They can manage your inventory, identify gaps, churn, look at different campaign performances. They've got all kinds of AI tools to help you make your business better. And they're, like you said, they're getting into AI. So now when it's natural for people to use OpenAI or GPT, Grok, Perplexity, all the others to answer questions. Now that you're going to be able to buy products right in there. So if you go in and say, hey, I'm starting running, I'm looking for some comfortable shoes, pretty soon you're going to be able to just buy right there. And Google's going to be left out. So Shopify is really changing the way that merchants operate. It's changing the way that consumers operate too. They've got the ability to shop across platforms, across websites, where you can have one cart buying from multiple different locations. I mean, it's just a great way to make sense. And when you think about the way that they operate, as a user, I can go to these different websites. I have one cart I can check out. It's kind of replicating what Amazon is. I mean, Amazon, you can buy just about anything. It's from a lot of different merchants. A lot of them are Amazon, but a lot of them are not. And so Shopify is kind of consolidating that experience as well, not just for merchants, but also for the customer. And the data speaks for itself. The consumers are loving this. And now with the OpenAI partnership, they're not just going after Amazon, they're going after Google. So this is one that we're very bullish on, and the data continues to support. Like I said, last quarter they were plus 30 on our metrics, and they came in at gross merchant volume plus 31. This quarter they're at plus 45. I'm not sure if they're going to come in at plus 45 on gross merchant volume. That'd be a huge number, but the fact that it's 50% higher than it was last quarter with a little bit of a pullback puts us in a very bullish position.
About like the competitors in this space, you mentioned Amazon, right? Because that's an aggregator of a bunch of different smaller stores. But then I was looking at some of the competitors in this space: BigCommerce, Wix, Squarespace, WooCommerce. I mean, these are household names. Is that part of the reason that you guys have seen this bullish momentum? Is that whether it's a big company, whether it's a small business, you need this type of technology, right, to get into any sales. And it seems like they're beating everybody because the competition just isn't there at this point, right?
Right. I mean, Shopify used to be like a great way for a very small business to get started. And it still is. But I think a lot of people have the misconception that that's kind of where they stop, and that's not at all. I mean, they're, enterprise and their international is huge. Europe's up 42% last quarter. But overall, it's not just small businesses that are taking advantage of Shopify. Obviously, with the partnership with OpenAI, that's going to change everything. But it's also enterprise customers and the ability to take larger businesses and make them more efficient. So they're competing against some smaller names, and they're kicking their butts. I mean, frankly, the Shopify is just dominating them. So now I think it's who can they set their sights on, and really, it is Amazon that I think Shopify is going to be competing with. And then, of course, with OpenAI partnership, those two combined are going to go after Google search, Google ads, and all of that. And again, it's through technology. It's not just, it's not marketing. I mean, they have the better mousetrap. They have so many different things, so many different tools. I can't list them all, but they have many, many different tools that help merchants and help the buyers of those products shop better and fulfill their customers' orders better. And so it's incredible what they've done. I mean, their one-click checkout plan that they've got, their shop pay is up 65% on a year-over-year basis. And what's really interesting is, they're starting to go direct to consumer, which just screams, hey, we're coming after Amazon. So yes, they enable merchants, but they're also starting to do their own thing as well, where they're kind of cutting the merchant out just a little bit and going direct to consumers. So they're attacking all angles of online commerce, and they're doing it really, really well. The data that we've got, again, incredibly strong. This is one that we think is headed much, much higher. Maybe this quarter. I think it is this quarter, but if not, over the next year we're very confident on it.
So then let me ask you this. As you mentioned, obviously this hinges on how well the consumer is holding up. Is there any insight in your data that shows any pressure or cause for concern as it relates to the overall consumer? Because obviously in your chart, you had, Shopify far and away the leader, right? And then that's followed by Amazon with a small uptick, and eBay. I find the eBay component interesting because, as we know, that's often a secondary market, and people are like buying auto parts there now. So what are you noticing about the consumer as it relates to all of these companies?
Sure. So everything that we've got, and we've been, kind of talking about this for 6 to 12 months now, is that we're seeing a K-shaped economy where, half of the country, half the consumers are up and to the right doing well, and the other half are down and to the right and doing poorly. And if you are, if you're a merchant that sells to that top half, you're doing great. Everything's wonderful. If you're selling to the bottom half, you're competing on price. You're just trying to cut prices, cut margin, and find your way. Think about like fast food and companies like that. So those are the companies that are struggling. And what's interesting about Shopify is I don't have the breakdown of all their merchants.
I'm back.
What percentage are in the top half? Selling to the top half of consumers and versus bottom half, but some percentage of their customers, their merchants, are going to be selling to the consumers that are doing just fine, and those merchants are going to do just fine. The ones that aren't, they may struggle a little bit. So I think that Shopify is diversified because it has merchants that attack every consumer, that serve every consumer. So maybe some of them are going to be struggling because they're focused on the consumers that are struggling a little bit more, but the ones that aren't are going to be doing just fine, and they're going to make all of their businesses more efficient. So overall, still, even though that there's some companies out there that are going to be struggling, Shopify serves all of them. It helps the struggling ones, but it really accentuates the ones that are doing well.
All right, Landon, we'll leave it there. That's Landon Swan, co-founder of Likefolio, with the latest look across Shopify, especially as it relates to competitors. Now, for the trading perspective on all things Shopify, I'm going to yield the floor to you, Tom, and bring Kevin back in here. A lot of insights that he brought. He's obviously still bullish on Shopify. Tom, your thoughts before we get to the example trade from Kev?
Yeah, it's not surprising. The last couple of times we've talked Shopify with them, they kept on getting more.
Okay, NVIDIA got a new high. Oh boy, what a day. Now we're respecting the VWAP on the SPY. Is Randy still here? Feel like I need to start fresh. I'm gonna get me a soft shot of prune juice and I'll be right back. TSM looking good today, had a pretty strong day. NVIDIA. What's PLTR? That's the one we gotta watch. He bounced up our support. Oh, man. We're at a Head and Shoulders on PLTR.
Makes this a losing trade originally, right? But you've got till Friday's close to manage the risk, and remember, you're risk defined, so you'll never have to make a trade.
Manage the risk.
You know what it is going in, and so I think that gives you the freedom to let the stock move. Now, if it is unchanged or moves higher, not much to do. This is going to collapse really quickly. But if it were to move down towards that 160 strike, then you'd have to at least watch it, but you know what the risk is, and you know the overall where your short strike is, and you know where your break even is, Tom.
And it sets up with Lightfolio's data there, which is pretty positive on this one, Diane. Kevin's trade just maybe a little less aggressive, but the stock has run up so far so fast.
Yeah, that's a good point. It has. It certainly had a strong year so far this year. We'll see how it holds up off the back of its quarterly results. Thank you guys. Coming up, we've got the breakdown. We are taking a look at Uber ahead of its earnings. Those are due tomorrow before the bell. We will be right back.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching.
So we got a resistance to break at 68.60. Looks like he was right again. Sure enough, I give you a grade. It's capital A plus. I very seldom give that grade out to anybody. Anybody get stuck in a trade today and want to blame me? Go for it. I know Randy did. Tempting to turn on the air conditioner and cool off a little bit. Oh, that's a low blow. Low blow. Uber. PLTR is about to break the shoulder line. Well, Uber break 100 today. I'll be right back. I'm gonna go get my juice.
You have the ride sharing, and then also you do have the autonomous driving. So you've almost got this snowball effect. So if they can keep up that $36 million trips, as you say, and even build on that, they are going to continue to do well. I mean, if you compare this company to Lyft as well, which is obviously seen as a major competitor, they do say that it's tough to compete with Uber on this front, because there is room for both companies, but they do believe that the game has been won by Uber in this space as well.
And then, so Uber has the bigger footprint, and part of that also has to do with, it's not just about the rides, it's the delivery. And so the question, for instance, for Lyft has been, would it do some kind of deal where it can have a footprint in that respect? And on a personal note, I know whenever I try to, kind of detach myself from Uber One, I'm like, do I really need this subscription? And then they pull you back in. They're like, are you sure?
Yeah,
and then
exactly.
I'm like, no, I'm not sure, actually. I'll keep my subscription. But Sam, great analysis there. We'll have to leave it there because we do have to get to the example trade. That is Sam Vadas, host of Market on Close and Morning Trade Live. All right, let's get the trading perspective on Uber. I want to bring Tom White and Kevin Hinks back in with us. Tom, we got the breakdown from Sam on Uber, the expectations going into it, plus how shares have performed so far this year. So what's your thought on the approach for the example trade?
Yeah, I think you're going to start looking at those gross booking volumes that they report. They're expecting anywhere from 17 to 21% for the quarter. The company came out with that post earnings last quarter. Remember, they also authorized a $20 billion buyback. Also, that actually lifted shares, but they grew revenue at about 17% last quarter. They're expected to do about the same this quarter. They did say that some of the advertising revenue, that's annualized at $1.5 billion now. If they can continue to grow that, remember they've got 180 million users across their platforms. Maybe they'll get some expansion overseas also. So I looked at this pretty straightforward. The option market's priced in about a $6.20 move plus or minus. That's just over 6% move either way in the stock. It has pulled back from its nearly 102 all-time high from about a month ago going into this report. So expectations pretty elevated, just like with the overall market. So I looked at something straightforward that, it's 4 days, it's short-term positioning, November 7th weekly options. We're going to buy the slightly in the money 97 strike call, and then against it, go about that 1 standard deviation. The stock was trading about 97 earlier. It's gone a little bit higher. Sell the 103 call. So bullish $6 wide call vertical that expires in 4 days. $6 wide, you're paying roughly, I've got $2.25 debit on here. That's where it was trading earlier. Trading closer to $2.50 at this point. But if you pay $2.25 debit for it, that's going to be your risk, $225 per spread. Takes your break even to $99.25. If you pay $2.50, your break even is going to be $99.50. But Kevin, you don't need that big massive move to the upside. This sets up, as you mentioned before, with about what the option market's pricing in for profitability, but you're capping your gains on a trade like this, but that also lowers your risk.
Yeah, once again, where a trader is using the Thinkorswim platform to line up his strike selection. About a $6 move, you're buying it slightly in the money, selling one that's about $6 higher, 97.103. Your risk is whatever debit you paid, and the money you can make is the difference between that debit and $6. Very short terms in terms of duration, though, Tom. So you do need it to move, but you don't have any real Vega risk on this trade because it's both in the same expiration. You're just looking for a move. That's what you're playing for here.
Yep, and because the stock is near all-time highs and has moved higher, implied volatility levels maybe aren't as elevated as they typically are. IV percentile rank of only about 33%. So that's why you can use directional verticals like this, and if you get the move up higher, you have that ability to close it maybe ahead of expiration if you get this thing to expand. And you can change the strikes too. The stock has moved back above 98, so you can use different strikes if you want to pay less on something like this, Diane.
All right, good
Uber
stuff
broke
there.
out.
Again, earnings from Uber coming up. Street looking for 67 cents a share on an adjusted basis, and revenue expected to top $13.25 billion. Good stuff, guys. That's going to do it for us today on Fast Market. I'm Diane King Hall alongside Kevin Hanks and Tom White. Download the Schwab Network app. It's in the App Store. Tune in 24/7 on schwabnetwork.com. Stick around. We've got Next Gen Investing coming up.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
The show is built for action. We break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. I'm Nicole Petalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey, and as we do check in on markets here to kick off this week after another record-setting week, frankly, to close out last week's major week of earnings, we're seeing a pretty mixed picture today, which has actually improved a bit as far as the losses, although I will say strength hasn't exactly firmed up either, as we're seeing now the S&P 500 is up about 0.3%, NASDAQ, our leader, up 0.6%. The Russell was down as much as 1% just about an hour or so ago. Now, paring those losses back to around 0.4% exactly, instead of actually perfectly, with the Dow, which is also down at 0.4%. So mixed open this trading week, Alex, but I will say that as far as big tech is concerned, lots of green across the board, with the exception being Apple.
Yeah, this is one of those days, depending on where your investments are and how you quantify strength, you will have a different takeaway. You look at the four majors, 2 up, 2 down. The ones that are down by, let's call it a little bit more, but probably the 2 least important when you think about where market cap is in the case of the Dow and the Russell. That said, even the S&Ps, which are up about 20 points, which is a nice little start to the week, only about 30% of the names are actually higher on the session. So it's again that same old story of a concentrated market rally centered around Magnificent 7, which is up about 1.5% if you were to index it.
Yeah, and that's a very good point. It's oftentimes, I think, important to look beyond just the Mag 7, although that was the bulk of our news last week, as we had a slew of earnings from, of course, 5 of those 7 names, and also NVIDIA hitting $5 trillion for the first time, plus the Fed cutting rates. I mean, there was so much news last week. We were characterizing it at the end of the week as like, it didn't feel necessarily like a winning week per se, but record highs were set. So we'll have to see if we can do it again this week. But as always on the show, we'll focus on a lot of these individual movers throughout the next hour. We have some of these big mega cap names to start off our show today, as well as then charting and trading both Uber and Spotify, which have earnings out tomorrow morning. And then we'll discuss Palantir, as it has played a critical role in AI's revolution, but also in defense. Critical test will be met today, though, with its earnings out after the closing bell. We'll also discuss more on cybersecurity and if we can see cybersecurity earnings specifically recover from some relatively mixed results in 2025. Last but not least, we'll touch on rare earth stocks, as they're falling pretty broadly, as Trump did say China, the threat right now is completely gone. And for that sent shares of these rare earth stocks lower today. So a wide variety of coverage throughout the next hour, Alex.
Yeah, a lot to get through. I think it's only fitting that we begin where we began Trading 360, which is this story surrounding Amazon, OpenAI. If I were to kind of list out like early takeaways for today, this is just another example. It's like another day, another deal.
It's true. And
another day, another deal.
We hear from Andy Jassy hinting at more deals, and I would say this $38 billion OpenAI partnership proves he definitely wasn't kidding. So I at least respect the commitment to what was mentioned on their earnings call last week. The $38 billion deal, though, between the companies, which spans across 7 years.
That's a big deal.
Utilize AWS's infrastructure for various AI workloads starting immediately.
Look at that, I hit my support.
Amazon will provide OpenAI with access to hundreds of thousands of...
Shut up. So I called this trade out at the high and said, let it pull back and hit this channel. Boom. Boom. So when you get into like a straight up parabolic run like that, set the Fibonacci from the bottom of the starting of the move to the top and use this channel as a support channel, and it hit the first one. And that was Amazon off that news. Then I'd look at it to scalp it until it got back up to the top and maybe broke a triple top. 10-4. Jenny, is there any way we can meet up?
Of the deals, Amazon created.
I'll take you out to Chipotle. You know what I mean? I know. I said I wouldn't date a girl that went to Chipotle, but I'll make an exception. Uber wants a $100 bill. Uber. There's Sue. Do you think Sue missed me when I was gone? Probably not.
Back to the Mag 7. I mean, they're magnificent for a reason, which is...
One picks up where the other left off.
No kidding. Speaks to actually our next name today, which is NVIDIA, also tied pretty heavily to this story, as of course its GPUs are a major development within that deal. But trading higher again, as we did see the U.S. reportedly approving Microsoft to ship the U.S. chip giants AI chips for use in the UAE. The company did announce new details of this long-term investment strategy in the UAE as Abu Dhabi and Dubai host primary energy and technology conferences this week. But we've also seen, I mean, this ongoing commitment right now to not only just grow overseas, but also to continue to grow their ties within each other. Like we are seeing, again, this pretty massive deal alongside Microsoft here with, of course, the expansion of the UAE. All that to be said, though, Street is not right now stopping any of its bullish action as it does continue to really generate a lot of buzz from the sell side. We are seeing Loop Capital really saying we're about to begin a pretty substantial ramp of GPUs that will essentially double its unit shipments just within the next 12 to 15 months. And I think that this news of approval to the UAE is definitely only aiding that narrative. Loop Capital does have a $350 price target, which puts it definitely the higher end of those analysts that cover this name.
Yeah, all I really have to say about this is today, this is, it's a decent headline, but it's just another day for NVIDIA, right? Well, NVIDIA is accounting for almost 25 upwards points in the S&P 500. We're only up 19, 20 points. So again, it's another example. If you just took NVIDIA out, which you can't, the S&Ps would be lower on today's session.
That's the exact point we were making last
Oh, you think so?
You know, this has become such a huge company that it's impossible to believe in the overall health of the market without the participation of NVIDIA.
Yeah, what goes up, though, if it does come down, can drag it down. So this has always been the risk when we talked about this concentrated market, and it has happened, right? Like in the tariff, uncertainty, you saw NVIDIA go from like 150-ish down to like 90, and the market, lost like 20%, it seemed like in a couple of weeks. So it's not to say that this is without risk, but as long as the AI story continues to remain intact, and names like NVIDIA are leading from the front. I mean, not only is it leading today, but it's probably one of the best performers in terms of percentage points today in the S&P 500. And let's just be frank about it. A penny in NVIDIA is way more important than a penny in any other company. So the fact that this stock's up 4.35% and there's almost 25 billion outstanding shares, like we were just, oohing and ahhing over the big move in Amazon. Amazon's accounting for about half of that today, 13.5 points today. So it's making a huge outsized impact. But this is, again, just a run-of-the-mill day for NVIDIA, it seems like, and it's up, almost 5% and 25 S&P points.
No, it's such a good point, too. And when you put it in that context, it's astounding, really. We're now in NVIDIA shares about a 0.5% off of those all-time highs hit last week. Haven't touched those levels yet, but we've definitely, at least where price stands right now, breached that $5 trillion market cap level again. So sitting at like 5.1 trillion and some change, which is just so much money. But our next name today is actually our best performer of the group on the year. And of course, smaller market cap, means just smaller swings as well as intraday or day-to-day really volatility. But Micron now up a whopping 177.6% year to date, and up another 285% from its low hit back in April. I mean, an unstoppable force in some of these high bandwidth memory makers and everything related to semiconductors, but specifically for storage and memory storage. And so right now seeing some strength really tied to the fact that strong signals of demand have been seen from some of its South Korean rivals. The company's been looking to see some connection right now with the 11% gain we're seeing in the Korean peer SK Hynix, which presented its next generation product plans, which included several of these AI memory chips at the SK AI Summit in Seoul earlier today. Now, Micron and SK have historically been rivals, but the demand for memory chips has been seen as so high that any advances that are likely tied to SK could also be tied to the industry. And so they did recently say they've sold out to their entire chip production for the coming year. That's at SK Hynix, and that capacity they're only adding to their traditional DRAM memory chip division, which is likely to right now continue to surge because of surging AI demand. We've also seen Samsung, which has temporarily stopped announcing contract prices for some of its memory chip products because of right now the spot prices have nearly tripled. So all that to be said, right now DRAM prices expected to rise almost between 18 and 23% in the fourth quarter. That's a lot of money when you consider how much is being changed hands, but it also is about fulfilling this demand. It's not necessarily just seeing that demand. Micron has to be able to still deliver on expected demand, frankly.
Well, and this expectation needs to be accurate. We have seen this stop happening when you talk Broadcom and AMD and NVIDIA, which are sort of seen as, competitors within the GPU space. Apparently in memory, it's still rising tide lifts all boats, but again, I keep, belaboring this point, but this is a huge move for Micron. It's up almost 6% today, and it has almost a meaningless impact. It's up, it's notable, but it's 1.73 S&P 500 points. So there's still just levels to this, and the level that NVIDIA is relative to Micron, they're playing in different leagues. It's like JV high school versus the NFL.
They are, and they both need each other in some way to coexist. I mean, you need right now this high bandwidth memory. You need, hard disk drive storage. You need all of these various components that Micron specializes in, but definitely specialty is more what I'd consider.
Super Micron
are the cash cow, the really expensive product, and of course the brain of so much of the AI infrastructure. So different fields as far as AI is concerned, which is actually speaks to our next name today and our last name, which is On Semiconductor, which right now has seen a bit
MU's up today too
from highs that actually, or not highs, I would say session highs. We initially saw a decent pop on the back of its earnings, then gave back a lot of that strength today, not selling off by any means, but down about 0.75%. Did see a revenue decline of about 12%. Top line, though, still exceeded forecasts. Adjusted earnings also beat expectations. Revenue from their Power Solutions group, though, dropped 11%. Analog and Mixed Signals group also dropped about 11%, and their Intelligent Sensing group actually contracted for its revenue by 18%. So that speaks to contracting growth, frankly, on a year-over-year basis. Their president did see they're seeing signs of stabilization in their core markets. As for demand for energy efficiency, they're also saying they're broadening their portfolio to really help achieve this performance while using less power. Not overly enthusiastic, especially when you expect, pretty much a lot of what was anticipated for fourth quarter earnings and revenue. I would say that as looking at this report, pretty like a middle of the road, no fireworks, nothing to be concerned of, but also it probably speaks to a more lackluster reaction today.
Yeah, this company is just such an outsized exposure to vehicles and autos and EVs and things of that nature that it's just not a strong part of the economy right now. And so you look at these semiconductor names, if you have the ability to pick and choose the areas, we were just talking about Micron. That's an area where the demand is seen to be getting bigger and better and excitement. It's AI tied, and it's just recently in the last year really joined the party. Well, ON hasn't really joined the party yet, and it's in an area that's struggling, and the company's been struggling for a long time now. Over the last 3 years, it's down 23%. Well, I can't think of a better time post.com to be a semiconductor company. Not acceptable. We've talked about that with Intel. Well, Intel has its own issues, and over that 3-year time frame now, it's up 51% now. So it's really flipped the script in recent weeks. ON just doesn't have the fundamental backdrop or the narrative backdrop to do that just yet.
It doesn't, frankly, and yet when you talk about contracting growth to this extent, I think that also there's a reason why, it's not really the headline mover that a lot of these other peers, frankly, have been, and just, again, seeing double-digit percentage growth for a lot of its individual segments, that speaks to perhaps why we couldn't hold on to at least a decent move off the back of its earnings. We'll leave it there, though, for the top of our show today. Coming up next, it's time to chart and trade 2 names with earnings ahead, those being Uber as well as Spotify, both releasing tomorrow morning.
Okay. These were at 340, now they're at 260. I got to reverse my situation. Nvidia's at 211.34, and Apple had a triple bottom. Kind of got an ascending triangle set up, or a symmetrical flag. Meta just had a new low.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the technicals and some example trades with, of course, our chart master, Rick Ducat. And today we have 2 names with earnings out tomorrow before the open, those being Uber and Spotify. And I tend to link these together as like the next next gen favorites because maybe I'm just thinking my own spending. Spent a lot of money on both of these apps, but obviously both tech focused, both consumer focused, also both have pulled back from their highs. So we'll start off with Uber here, which has seen a very different consistency on the back of its earnings, which has been, I think, really refreshing for a company that's finally gotten its dynamics of its business just really nailed down. So
yeah, they do.
seeing from a technical front.
Yeah, it's a bit of a sideways move during the past 4 or 5 months or so here. And what we have here is a situation where you could draw two different trend lines potentially here. Trend lines are kind of subjective. It depends on the person drawing them. Typically, the ways one would do it would be to start from a high point and then to go across either the closing price or the intraday price. So in this case, you could draw two separate lines. Perhaps the more conservative one would be across those highs here. But if you were drawing it using the closing prices, by that measure we have pushed to the upside here. I think you could also argue that there's another sign that the trend is starting to shift here potentially because we have these highs here. We had
Yes, Randy. Scalping it also. Are you in it? Yeah. I think it's my third scalp. That's about it right now. I mean, I got my originals. Oh, God. $100 is better than what I did. Did you hear me? $100 is better than what I did. Oh shit. Ouch. Ouch. I just feel like taking a nap today and just kind of blowing off trading. But I'm going to wait till the end of the day. SPX has pulled back a little more here. It's getting to position. The PLT tonight. We're at $2 now. There's a 63. Spotify earnings coming up.
Downward sloping trend line here at this point. Our blue falling wedge type shape is what seems to be materializing here, with two downward sloping trend lines converging toward each other, with the steeper one going along the highs. So we can see some horizontal levels of interest as well here. A repeated ceiling recently near about 696. You can also see we had high, low, low, and then low here once again, and then subsequent highs near 670 or so. That would be another upside area to keep an eye on. Then 620, low point here, high point, etc. So around 602 to 620 would be the supportive zone that you could consider to the downside. When we look at RSI, we can see that in this case, we are seeing momentum mostly picking up, but to the downside in this case here. We are slowing down a touch, though. We did not make new relative lows, despite price making on pace for a lower close here. So a tiny bit of bullish divergence here. Once again, I really wouldn't make too much of it as we head into this earnings event, though. That would be something that I think would be not really a very genuine signal here as traders start to slow down when we have earnings coming up. Now, we can also see that our supportive zone lines up fairly closely with our long-term purple 250 two-day exponential moving average. So this long-term source of support
coming down to the 200
line with some of these lower extreme
magnificent
we've seen during the past few quarters or so.
Prepare ye in the name of the Lord.
To look at our volume profile and standard deviation channel studies, this is another time where volume profile not as helpful as it can be in some cases. We have this rather large block of volume.
Prepare ye in the name of the Lord. We got a hammer. Slash ES could hit the VWAP. I'm going to go into the kitchen and make my coffee. I should jump into this at 195. We've got two hammers now at the 63. There's 195 again. Boom! So that's bull flag breakout to double top.
favor as we've seen, I mean, really continual strong earnings and revenue. They've now been able to beat revenue in 8 quarters and 8 of the last 9 quarters. And we've also seen, I mean, right now, estimates for earnings beaten also in 7 of the last 10 quarters, including their most recently reported 2nd quarter. So a lot riding on Palantir today after the closing bell, but we will leave it there for FOMO.
That's right.
Although next we'll stick with our broader cybersecurity and security conversation. We'll dive into overall expectations for cybersecurity earnings and how perhaps we could see a revival in the space that has posted some pretty mixed reports in 2025.
Do 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 do.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
It is the best way.
At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Snap got some pretty good volume.
Schwab, a modern approach to wealth management.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Carl's Way is the
Morning
best
Movers
way.
brings traders the biggest headlines to start the day, from volatile overnight swings
I don't know what they say.
earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Welcome back to Next Gen Investing. It's now time to discuss broader trends we're seeing in cybersecurity, especially with several of these major names still yet to report. So joining us now is Dr. Chris Pearson, the CEO of BlackCloak. So Chris, thank you so much for joining us on this Monday. Of course, we have a slew of earnings coming in the next several weeks, but really wanted to start with your broader thoughts right now on cybersecurity spending. Is this still, frankly, a top priority?
I think absolutely a top priority. Right now, we're seeing enterprise budgets up about 18% this year. And then globally in cybersecurity, overall spend is going to top $280 billion in 2025. We did see some mixed results in terms of some different companies there. But I mean, look, we're still really, really strong. Zscaler up like 79% this year. CrowdStrike about 54%. Cloudflare pulling in some really nice earnings in Q3, up 35%. And Palo Alto and Okta both 13 and 19% there. So I think that we have some really good wins behind us in terms of those different stocks. There's some that are few, once again, mixed results. Fortinet not pulling in as strong, but those companies that are looking for a platform play did really, really well.
Okay, so Dr. Pearson, then if we take that and we tie it into what we're learning and then we try to think ahead, sounds like you're optimistic on how much spending is happening, but you cite a few of these names that are maybe struggling. So is this not a situation where it's equally spread? All these companies are benefiting. Are they starting to separate into winners and losers?
I think that there are some people that are definitely further ahead of the pack. We have some earnings coming out tomorrow. So Rapid7 and Qualys coming out on November 4th, Fortinet Fastly on the 5th, Akamai 6th, and then CrowdStrike on November 25th. But I think that we're seeing some separation here. I will tell you this. The companies that are acquiring other companies smartly right now, the companies that are doing platform plays, so not just single source cybersecurity point solution companies, but are really getting their hooks in there to other enterprises, those are going to be more the people that separate from the pack.
Okay, and so that's exactly what I was going to ask you about, because this concept of like platformization, like Palo Alto Networks for years was sacrificing some of its massive profitability to be that one-stop shop for cybersecurity. So is that now giving it an edge, and we're seeing some of these other companies falling behind, or is this just going to be then further consolidation where more and more of these companies will purchase some of the smaller names in cybersecurity?
Well, it's exactly correct there, Jenny. I mean, the fact of the matter is that folks like Palo Alto that are acquiring other companies, spreading out, becoming a true platform as to, kind of shedding the vestiges of 10 years ago of only firewalls and endpoint technology, they really are showing that they're moving ahead. Others, like CrowdStrike, started differently with an entirely different play of enterprise or endpoint detection response only, EDR only, and then moving in through acquisitions and through smart building, a lot of R&D on the inside, to go ahead and move more into that SIM and SOC and managed services aspect. And they, once again, because they're looking at it from a platform perspective, they're really further moving ahead. And quite honestly, 14 months after the calamity with CrowdStrike, it's a company that just continues to outperform all others.
Okay, so Dr. Pearson, if we start looking at Palo Alto, for example, that is expanding, let's say, more vertically integrated, offering more, kind of following the Microsoft play or the Salesforce, where you can kind of cross-sell, offer more, services to these customers. I think that makes a lot of sense. But if you're the customer, is there some value in diversifying your security providers, because if the one goes down, you're suddenly very exposed?
Well, Alex, you kind of hit the nail on the head there. With the shutdown of CrowdStrike last year, in terms of the global problems that they had, a lot of players, a lot of enterprises said, hey, do we have too many of the eggs in the same basket, and should we diversify? And so there was potentially a rush market of let's go ahead and make sure we're separating out, not put all the eggs in one basket, not just go with one point solution that's a platform play, but have a little more stability there. But I think those times have passed. And what companies want to do is pick the best products, the best companies in that area. And if they could do a platform play, I think, I'm looking forward to CrowdStrike's earnings in the end of November. But I think, really the chief information security officers are looking that way of how can we go ahead and stay with the platform players.
Okay, and you mentioned CrowdStrike. Does anything else, any particular names stick out to you as far as names and events that you're looking forward to? Because I do know from looking at this space as closely as we do, it's fairly competitive and it's also fairly saturated. So real winners and losers started to emerge.
Yeah, so there's some interesting things also happening. For example, Cloudflare, moving away from just being someone that is only focused on the VPN technology, moving more into zero trust, and of course several years ago with the acquisition of Area 1 in terms of email protection. They
coming to the 63 again,
themselves out and have done nicely. I think what we're also seeing, it's about 10 months ago since MasterCard bought Recorded Future for $2.65 billion. But we're also seeing is that large enterprises, strategics, and other cybersecurity companies are saying, what can we pick up that is going to move us outside the four walls of the company? What can we do that is over the horizon? It might be digital executive protection, threat intelligence, but they are looking for things that get them more entwined with the organization, but also push those defenses further out. And that's what MasterCard did with Recorded Future.
Yeah, there will definitely be names on our radar and earnings events that we will be watching, because I do feel like this has been one of the most resilient areas of the entire check trade. So we will be following along very closely, as I'm sure you will be as well. But so appreciate it for your time today. Dr. Chris Pearson, CEO of Black Cloak. Now, coming up next, last but not least, it's time to discuss the move today we are seeing to the downside pretty broadly in these rare earth mining stocks under some pressure following some commentary from the president.
SPX 6870s at 190.
Stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Check, Options Corner, Futures Focus, Technical Analysis. Morning Movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Hot darn, man.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. It's now time to dive into the rare earth stocks, as we're seeing some broad weakness today on the heels of President Trump saying that the China threat is completely gone. So we'll see if that does come to play out. But joining us now is Sam Avadas, as we do host here for the Schwab Network. So Sam, walk us through this story, because I read the commentary from the president. I would have actually initially said that this was a positive catalyst, but shares across the board of these names have been lower today.
Yeah, so this is a very interesting dynamic when we see the performance in some of these rare earth and critical mineral companies, Jenny, off the back of what we're seeing as far as the developments on the US-China trade relationship. So what we're seeing here as far as this pullback in some of these names today is because of this pattern. This trade has been closely linked to some of the fears and the concerns and the worries around these Chinese export controls, where you inevitably have this tightening of supply coming from China, and then the thinking here is some speculation that that would force the US government to double down on their support for the domestic industry, and that they would be called upon to fill that void, even though they're still working on certainly building up some of those supply chains. And so that's when you see China tightening, you see these rare earth material companies rallying. And so what we're seeing is basically the opposite of that. And that comes off the back of the recent developments out over the weekend, where the White House actually came out with this fact sheet. And it's basically what you could call, or at least some are coining, a transactional truce here. So what we're seeing here as far as this fact sheet is concerned, I'll just read you a couple of lines from it, because this is coming directly from the White House. So as far as Chinese
Chinese actions are concerned, what we're seeing these rare earth and critical mineral companies reacting to today is the fact that China is going to suspend the global implementation of the new export controls on rare earths and related measures that were announced back on October 9th. Remembering just before that October 10th sell-off when Trump then threatened China, that was off the back of China actually tightening its export controls on rare earths. So it just gives you a little bit of an idea of the timeline here. You're talking about general licenses as which China gives out for things like germanium, gallium, you've got things like antimony, graphite, all these types of materials for the benefit of the US end users and their suppliers around the world. So they're going to now issue these so-called general licenses, remembering that China has in stages over the last few years actually implemented some of these export controls, particularly around gallium and germanium. That was back in October, I think it was 2022. Then you had the more recent ones in April of this year. So there are a couple of moves that the Chinese are actually going to push forward with as far as this trade truce is concerned, and that's where Trump has sort of come in and spoken to 60 Minutes and said that this threat has completely gone. The other thing that China is going to be doing is going to be sort of rolling back some of their investigations, their probes, these sort of non-tariff export control and investigative type of retaliatory measures that we've seen as well on companies like Nvidia and Qualcomm, etc. And then the US, for its part, is going to actually pause some of the reciprocal tariffs for a year, and they're also going to suspend the further threat of the 100% tariffs that were going to come in November. So it really is a two-way street. Now, what we're seeing as far as the reaction today, so we've got a couple of these names up on the screen for you. You've got MP that's down over 7%. You've got US rare earths down almost 14%. Critical metals down 15%. So why are these stocks down? Well, just remembering, as I mentioned before, they had rallied on this thinking that with China really tightening and putting the squeeze on the huge supply that comes from that particular market, that we would see the US very much doubling down on the support for the domestic industry. That's what we've seen. We've seen, you know, the Trump administration also putting in for these, you know, equity stakes, but a lot of these small cap names really turned into mid cap names off the back of that rally. So this seems to be some sort of unwind that we're seeing, or at least perhaps some profit taking off the back of this most recent announcement, guys.
Yeah, Sam, I think that makes a ton of sense. The big question, I think, for investors is going to be, just because this deal or, you know, this short-term kicking of the can down the road doesn't seem to be changing the plans to try to onshore some of this production, but what are these companies worth? That's the question, and when is it an interesting point to buy in to what's a pretty substantial repricing in recent weeks? But any final thoughts you have broadly on sort of, I guess, the geopolitical temperature coming down in recent days?
Well, that's what it is. It's just trying to avoid a further escalation in this relationship. And, you know, you can kick cans down the road, but hopefully they can just get to a point where they don't rock the boat, where they can see, you know, further sort of, I suppose, progress on their trading relationship. You hit the nail on the head there, Alex. The fundamental fact that the US government has got some sort of wake-up call from the fact that China controls, or at least dominates 90% of this rare earth capacity as far as, you know, this stuff coming out of the ground, etc., has very much forced the US government to actually, you know, really focus on, you know, building up those supply chains here in the US, and not just here. Remembering just over the last couple of weeks or so, we've also heard about the US teaming up with countries like Australia, for instance, to try to tap their rare earth and critical mineral supplies as well. So it seems to be, you know, the US trying to take on China's hegemony in this space with other countries in mind as well, because the thinking here, at least my mining sources have told me, that perhaps there's not enough here. They do have to look elsewhere. And so I think, you know, for investors looking at some of these companies, this is going to be the theme moving forward.
Yeah, and I definitely think that that is something I've heard echoed time and time again. So totally in agreement there, but so appreciate it. Sam Vadas, we're always bringing all of the insight here, host for the Schwab Network. And that will also do it for Alex and myself. For Next Gen Investing, to kick off this week, we do have the watch list coming up next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest.
Up, down,
Tune in
down.
live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Thinking about going laying down for a few minutes. I'm just not feeling it. Feeling too good today.
I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at SchwabNetwork.com. Welcome to the Watch List. I'm Nicole Pedalides. It's 2 p.m. Eastern Time. We're coming to you live from the floor of the New York Stock Exchange. So glad you're with us. We have a mixed bag for stocks. For example, the S&P's higher while the Dow's lower. We have a big show for you today. We'll be joined by Tom White. Will walk us through the recent news on unusual options trades that we're seeing for Palantir ahead of earnings, Intel, Uber. We'll also break down today's ISM manufacturing PMI numbers. The chair of the report from the Institute for Supply Management will tell us more about it. And our panel will talk about the government shutdown, day 34 here. And the markets right now have pulled back some, at least for the Dow. Right now, the Dow's down 198 points, sitting at 47,364. The S&P is managing to pull out a gain here, up 19 points at 6,859. The NASDAQ is up 0.5%, and the Russell's down 0.5%. Oil and gold are mixed. Gold is up $21 while oil pulls back. Oil's at $60.94 the barrel. Gold's at $4,018 a troy ounce. The 10-year bond yield at 4.11. The U.S. dollar 99.68, and Bitcoin's at 107,000, down 2.5%. Kevin Hanks, host of Fast Market here on Schwab Network, is with me. And we've had deal-making Monday, merger Monday, whatever you want to call it. OpenAI and Amazon with a big deal announced today. Good afternoon, Kevin.
Hello, Nicole. You know, after Amazon's big day at the end of last week with earnings, today it's got an announcement up another 4.6% on Amazon Web Services, and OpenAI announced a multi-year strategic partnership that provides AWS infrastructure, to run and scale OpenAI's core artificial intelligence workloads starting immediately. $38 billion is this deal. It's 7 years with continued growth over the next 7 years. OpenAI is accessing AWS compute comprising hundreds, here's where it gets interesting, Nicole, hundreds of thousands of state-of-the-art NVIDIA GPUs. So good news for Amazon, good news for OpenAI, but also don't forget good news for NVIDIA. As more business, as these partnerships seem to grow, the one place that all roads lead seems to be NVIDIA's GPU chips.
Drop to the 200 now.
Both those stocks, Amazon and NVIDIA, higher on the day.
Yeah, it's pretty amazing. OpenAI will be able to run those advanced AI workloads on AWS. And then the other piece of big news, huge news,
My fourth scalp.
Kenvue, caught people by surprise a bit today.
Kenvue was the spin-off from Johnson & Johnson, and it includes things like Tylenol, Listerine, Band-Aids, Benadryl, a large portfolio of products that they have. And once that got spun off, Kimberly-Clark has been looking at it ever since. And frankly, it took some of the concerns about Tylenol and the Trump administration talking about its use with pregnant mothers and those issues that took the stock price down. That made this deal much more attractive to Kimberly-Clark. So Kimberly-Clark announced an agreement under which Kimberly-Clark would acquire all of the outstanding shares of Kenvue common stock in a cash and stock transaction that values Kenvue at an enterprise value of approximately $48.7 billion. And so a big deal. The CEO of Kimberly-Clark admit that it's a big lift for them, but the synergies involved in these companies and the ability for Kimberly-Clark to enhance their product portfolio thinks it'll be a big long-term win for Kimberly-Clark. But yeah, Kenvue, remember, this stock's been under pressure and much maligned since it spun off from Johnson & Johnson because of the problems, the potential problems with Tylenol, Nicole. So yeah, interesting day as Kimberly-Clark kind of comes in and scoops up Kenvue.
Yeah, I mean, these are big deals. The OpenAI deal, $38 billion. This one, $48 billion. You know, we're just throwing the billions around. It's pretty amazing. And this one, the Kimberly-Clark Kenvue, expected to close in 2026 if it doesn't hit any hurdles. Thank you, Kevin Hanks. Great to see you there at the CBOE. Thank you. Let's get a look at the bigger picture. And Paul Edelman's with us, Global Chief Investment Strategist at Russell Investments. Thank you so much for being here. Some of your thoughts on the market action that we're seeing.
I need a rebound.
Equities have been strong here for the past several months, and I'd see at least two catalysts.
5 months, 6 months, baby.
First and foremost, earnings have just been really exceptional here for the past couple of quarters.
Exceptionally great.
I think that's particularly true coming out of that period of risk and anxiety after the big tariff announcements in April. The fact that we're sitting here and we had second quarter earnings growth in double digits, the third quarter earnings season is tracking double-digit earnings growth. I think that's been a key area of positive surprise and fundamental support for the market pushing stock prices higher in the U.S. and around the world, frankly. The second tailwind in just the last week or so is starting to see a push from the U.S. administration towards more trade deals again. Important agreements with both China and South Korea last week, and if businesses can get a little bit more clarity on the outlook going forward,
SPX 6870s at 90 cents.
That really supports that environment of sort of deals and more investment along the lines of what you were just talking about in the previous segment, kind of boosting corporate confidence and giving business leaders the confidence they need to engage and deploy sort of CapEx and acquisitions, such as what we're seeing just now over the last couple of months.
Understood. I mean, when you think about the equity outlook, is there a strategy that may be set up for a win? Is there a way to navigate this? How so?
Well, I think first and foremost, our view is investors should be in the market here, which can be uncomfortable with stocks close to all-time highs. But one really important positive from our perspective is when we go and try to measure the psychology of investors in the market, This looks like a pretty unloved rally. We're certainly not seeing signs of euphoria along the lines of what might have been present in the late 1990s, for example. And so I think that coupled with the strong earnings,
$1.10.
maintaining equity allocations here. Going one layer beyond that,
I could sell it.
focus is really on diversification, both within
Got a 10-cent, $10 spread.
globally as well. So globally, for example, one area of positive surprise over the past couple of months.
That's tightening up.
It's like China and
For a
South Korea.
second.
We've seen important positive trends towards improving return on equity and profitability that have supported a very strong recovery in the emerging markets as an asset class. Actually.
Thank you very much. We got 3 white soldiers. Now, if this candle stays a harmony, we could break the 21, runs that back up. No. 15. Break it. This 21 needs to break. Better I sell them.
Large platform technology names in China. It's also the case, though, that some of the less profitable state-owned enterprises have been benefiting from reforms from the Chinese government and a greater focus on profitability over the medium to longer term. So China is an area of the market that we like. Around U.S. tech, I think you'd have to say that last week was a positive one in terms of what we saw from U.S. tech earnings. I won't go into the individual company kind of perspective here, but most of the names surprised to the upside. We're still seeing enormous capital investment from the large AI hyperscalers. Those numbers surprised to the upside in terms of what management teams are saying for the forward outlook into 2026. So the CapEx story is a positive. And then the advertising story for some of the TMT names has come through positively as well. And so as we look at the tech space, it's been an area of preferred overweight in our U.S. equity strategies. Some of that is software, some of it's semiconductors, but certainly there's been a positive story recently in terms of delivered realized earnings and guidance from management teams.
And then quickly on inflation, I mean, are you worried that tariffs could still stoke inflation, whether it's for a short-lived moment or for the long term?
It's certainly keeping the inflation numbers higher than what would be desirable. Core PCE inflation, which is what the Fed cares about, is a whisker below 3% right now. So that's higher than economists would like it to be. A lot of that's coming from the impact from tariffs onto goods prices. Everything else, though, looks like it's on an encouraging trajectory towards the Fed's 2% target over the next year or so. Shelter inflation has been moderating now for the better part of the last year. That's a view that we think can continue into 2026. And then other service prices that are more exposed to the health of the labor market have moderated and look, roughly speaking, consistent with 2% inflation over the medium term. So it's kind of an inflation story of tariffs and then everything else. Tariffs are keeping goods prices a little bit high. Everything else looks like it's on a nice path down to 2%. And so if the Fed can look through that, I think is at least the baseline
back to a buck
from the Fed leadership, that should support a path towards more Fed rate cuts over time that could support both fixed income and broader asset class performance into the year ahead.
All right, Paul, thank you so much. Paul Eidelman, Global Chief Investment Strategist, Russell Investments. Nice to see you, Paul. Thank you. Coming up next, Options Corner. Tom White is standing by. He'll highlight unusual options trades that we're seeing. This activity that is happening today. Investors are looking to trade on recent news. Of course, Palantir, as we await earnings. Intel, Uber. He's got the details. As by the way, Palantir right at highs, too. We'll be right back.
Three white soldiers to the 63 this time.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Well, we're going to find out if New York is a socialist state tomorrow.
Real-time access, data-driven analysis, from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Welcome back to the watch list. It's time for Options Corner, where we analyze unusual options trades that we're
Petalides.
Tom White, host of Fast Market here on Schwab Network, and we have a few names that you're looking at. Real options trades.
Yeah.
Palantir, of course, in the news because we're waiting on earnings too. You found a bullish trade that you're going to share with us, Tom.
Yep.
Yeah, the optimism continues here for Palantir going into the results after the close tonight. Option market pricing in about a plus or minus 8.5% move either way. Stock hit, as you mentioned,
either way.
record highs into this report. It's overbought at a technical level. RSI is above the 70 level. So, yeah, optimism's reigning supreme here in Palantir. And if you take a look at some of their metrics, they're supposed to grow their revenue by just over 50%, $1.1 billion. They hit $1 billion in quarterly revenue for the first time last quarter. And then the commercial side of their business is supposed to grow by nearly 56% this quarter. It's on a bit a higher growth path than the defense and government side of their business. So they're keep on expanding their footprint as far as customers go too, because in Q2, last report, deal activity remained pretty robust, 157 transactions worth $1 million each. Of that, 66 were valued at $5 million or more, 42 at $10 million or more. So this is those large-scale deals that they're getting done in this AI space and their AIP platform that everybody kind of wants to figure out how to monetize AI at this point. But we did see some bullish activity in here. And this is out in the November 7th weekly options, just 4 days expiration, earnings type play. Early this morning, they bought over 12,000 of the 205 strike calls for an average debit of about $9.50. These are basically at the money right now. So the break even of $214.50 over the next 4 days, that's only about 3.5% above the current share price, well within what the option market's pricing in as far as a move goes in this. But we've seen a lot of call activity in here. Nicole, the stock's up over 170% this year, overbought, and valuation, the forward PE on this one, above 210 level. So it's elevated. So those growth rates better stay intact because on a valuation basis, it's expensive, but a lot of call buyers in here today.
And look, I mean, Dan Ives had picked this a long time ago, up 370+% in 1 year. It's pretty incredible, and as you noted, we could see an 8% swing and at record highs today. Next up, Intel. You found a bullish trade that you're going to explain to us. Tell us more.
Yeah, stocks had a really good year. Not as good as Palantir, but still up about 95% so far in 2025. Down a little bit today. This is all based on the back of these deals that they're signing, right? $5 billion from NVIDIA, $2 billion from SoftBank, the U.S. government taking a 9.9% stake in Intel to help them kind of support their foundry business, where they're going to make chips here in the U.S. These partnerships, Luc Boutin, the CEO, has done a pretty good job. He's slashed costs and gotten rid of some lesser producing segments of their business. So it seems like they're on the path. Now they just have to kind of prove it probably with their next couple of earnings events. But we did see some bullish activity in here also. And this was out in the November monthly options that expire in 18 days. Traded about 9,000 of the 34 strike calls. These are deep in the money. Paid an average debit of $5.84 for these calls. So the break even of $39.84 over the next 3.5 weeks. We're basically right there right now. So they're buying these deep in the money calls when the stock was down a couple percent this morning. But with the expectations that we're going to see earnings here for Intel, they're out there buying some March calls also, some December calls. So yeah, this is one of those cheap entry points on a dollar cost basis, right, to get into the AI play. But now it's almost like Intel's got to start proving that these partnerships are going to start increasing maybe some of their revenue and EPS.
I mean, it was certainly interesting when the government started to really take an interest in Intel and other companies. It was sort of a new way of doing business around here, but it certainly helped things along and it hit this high of $42.
What am I thinking?
As you noted, you found the bullish trade, but it's pulled back a bit. Last but not
I'm thinking we're waiting for PLTR news.
Tell us more about that.
Yeah, they report tomorrow morning, so we'll get some clarity on how they're doing. They're just off of those all-time highs that they set just over a month ago. Option market in here pricing about a plus or minus 6% move in the shares post earnings. Estimates are about 67 cents per share with $13.26 billion. 180 million users across their platforms. They've got all these deals now with the autonomous companies here. They don't have one with Tesla yet, but maybe that's coming down the pipeline because I can't imagine you have an autonomous or an app that has ride sharing and you're not using Tesla at this point because they have the most EVs on the road. But gross bookings are going to be closely watched here. They grew 17% last quarter. They're expected to grow 17 to 21% on a constant currency basis this quarter.
LLY.
If you take a look at the ad revenue, that's actually become a $1.5 billion annual a revenue driver for the company.
Oh,
so
yeah.
That'll probably be watched also, but it's going to be about gross booking value, GBVs at this point. But did see some bullish activity in here. This is a more longer term trade that kind of stuck out to me. This was out in the March monthly option, so about 137 days to expiration. Trader bought just over 2,000 of the March 100 strike calls. Paid an average debit of about $8.95 for those. So that break even of 108.95 over the next basically 5 months or so. It's about 10% above the current share price in Uber. That's a little bit less than what the option market's pricing in, but they've given themselves duration on this bullish position. Call volume about double normal daily average volume, but not surprising going into an earnings report where the bar is pretty high on this one with the stock just below all-time highs.
That's right, and tomorrow morning we'll get the details. Looking forward to that. It's great to see you, Tom White. Thank you every single day with real trades. Options, he's looking here at Options Corner every day, a real trade, and he looked today at Palantir and also Uber and Intel. Coming up next, let's break down at least some of the data that we're getting. We got an ISM manufacturing data, came in below estimates. We're joined by the chair of the report from the Institute for Supply Management to get an explanation here. We got to take what we can get with the government shutdown, day 34. We'll be right back.
Don't miss our one-on-one interview with Strategy's Michael Saylor.
The future is digital capital, digital money, digital intelligence.
The pioneer of Bitcoin treasuries is on Market Overtime.
The digital form of everything is 100 times better than the analog form.
The need-to-know info on crypto.
The United States wants to be the crypto capital of the world.
Catch my full interview with Michael Saylor here on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an educator.
Moving averages.
It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'll go get some water. I'll be right back for a little bit. I'm gonna end up having a red day, I think.
Green, and I track options flow daily.
I gotta make up about 400 or 500 more.
How it's gonna impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Oh God.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to the watch list. I'm Nicole Petalides. We've had a mixed bag as far as how markets have performed, but lots of movers that you don't want to miss. How about Iran, which is soaring all-time highs? It's signing a multi-year cloud services contract with Microsoft. It's part of the deal. Iran will provide Microsoft with NVIDIA GPUs over a 5-year term with a total contract value of approximately $9.7 billion. And Iran also announced a similar agreement with Dell Technologies worth roughly $5.8 billion. And it's worth noting, Iran is up 500%, and Paul Tudor Jones is getting an 8-figure windfall with this. On semi, slightly higher today, despite beating top and bottom line estimates for its third quarter. Semiconductor Mako reported quarter-over-quarter growth in its crucial automotive segment while issuing guidance for the upcoming quarter, above expectations. On Semi's CEO noting the company is seeing continued signs of stabilization in its core markets and positive growth in artificial intelligence. Okay, now we got in October ISM manufacturing PMI. That came in below consensus. And we want to go through the numbers. We welcome in Susan Spence, chair of ISM manufacturing PMI at the Institute for Supply Management. So great to see you. Thank you so much for being here. We value this all the time, and especially now when you have a government shutdown, you really pay attention to any print you get. What did you make of it?
So we were not surprised by the number going back down a half a point. We are at 48.7. That's 0.4 lower than last month. The consensus was indeed missed. We are in contraction in all the sub-indexes, although the demand index is slightly improved, but not enough to push us into expansion territory. We still have our panelists having a weak sentiment for demand. For every positive comment, we've got about 1.5 negative. We have the hire to managing workforce versus, hiring versus not at about a 1.3.4, and overall negative 1 to 1.7. That's positive and negative comments. Over 50% of our panelists still cite tariff chaos as the thing that is keeping their decisions frozen. And our GDP numbers this month, overall manufacturing GDP is down some, 67% last month, 58% this month, but the percent of manufacturing GDP in strong contraction really leapt up from 28 to 41%. 3 of the 6 big sectors are in strong contraction. So we don't see an improvement. We are hopeful that things, as they start to get settled, perhaps China will be the first, that maybe this will start to turn around. But as we said last month, the production blip of last month is now gone. So we had 1 month in expansion. We're back down to where we were before. Until we see new orders trending for several months in a positive way, we don't believe we'll see that goodness flow through the supply chain.
When you have the backlog of orders index was up 1.7 percentage points, the employment index registered up 0.7 percentage points from September's figure. Are there bright spots within that? How do you explain some of that?
So, we want to get excited about it, but we have to temper it by understanding that the index is still in contraction. I would feel better if we had several months in a row where everything was upturning, because eventually that's going to drive the PMI, at least for the 5 indexes that the calculation works for. My fear is that because customers don't seem to be ordering because of a number of factors, that order book is not going to get repopulated, and therefore production won't flow and employment won't flow. So we're in a wait and see type of situation, but certainly our panelists have been direct with us. Until they feel better about what might be a deal, or a deal that doesn't change, or a deal that is not 30-40% tariffs for the raw materials that they use in their products, then they're going to be in this position.
You said that a lot of them are saying that the business continues to remain difficult here at home. Are there a chance for more bright spots? I mean, we keep hearing about that the economy is okay, the earnings seem to be okay, there's a lot of investment in AI, and that's keeping the economy afloat. The New York Empire Manufacturing Index gave us a bright spot. I mean, there have been some bright spots.
I want to remind everybody that there was a strong economy. There had been earlier in the year. So we're in our 8th month of deterioration in a general trend. So there's some ups and some indexes and some down, but in general, it is not breaking back into that 50 area that we need it to. And if there's been interest rate news, certainly the government shutdown news, neither of those two have made it into our comments. Shutdown is at the time of the survey, it was only 2 weeks old. So the panelists have been very, very clear with us, Nicole, that until they see the trade chaos and whiplash, and they're still calling it that, settle down, then they don't really have a good feeling about what's coming. So my worry is that the economy will erode right below that expansion level. And if it goes on for a long, long, long time, I worry that we could start to kind of get toward that edge. You know, we will see, but certainly the volatility and, you know, the not knowing what's going to come next, or if there is a deal, having it get undone just a few months later is still on these panelists' minds.
And, you know, layoffs, we've seen a lot of companies announcing layoffs in the last week or two. So mentally, should we prepare, since you're talking about a trend that's been for 8 months, mentally, what should we prepare for here? I mean, what's maybe a base case in your mind?
Right. I don't see these numbers breaking out until we start to see large deals, or, you know, just large questions being answered. So with the, you know, seemingly good news about China, assuming that there's a reasonable agreement that sticks and doesn't get undone, that's a big step. Then there's more that has to follow from there. So our panelists have to see positive impact. They have to see the positive news, but then they have to believe that it won't change again, because that's been their, you know, what they've been living for 8 months. So I feel like even if next month everything got settled, quote unquote, with written deals, I think it's still going to be a few months before folks maybe start to make the decisions like hiring and backfilling people and investing in capital.
Backfilling people?
Before they feel safe that that's a good choice because things will stick.
We started to hear about somewhat of a manufacturing revolution that can happen here at home because of the administration pushing for that. That may in fact happen, but it takes time. Is that what you're saying?
Yeah, our panelists are reminding us that, you know, those, depending on the sector, building a factory takes a while, opening it takes a while, and right now the conditions aren't good, and not because we have maybe an interest rate that some should feel is lower, it's because not knowing the cost of the product because of some of the, not only just the country tariffs, but some of the raw material tariffs on top of it are really, you know, they're just stopping them from doing what they need to do. And so one of our panelists, either last month or this month, said, you know, the interest rate drop is just not going to be enough. In fact, the tariffs are having an opposite effect in their sector anyway.
And, you know, Lisa Cook of the Fed actually saying that there's more risk to downside employment than there is to the upside for inflation. I don't know whether or not you agree with that at this moment. And maybe a final thought, too, of something we may be leaving out.
Yeah, you know, I am interested in that comment. You know, prices are still increasing. They look like they're starting to settle down, and, you know, you could scratch your head on that. But, you know, the employment, whether it contracts slower or faster any given month, I pay a lot of attention to that sentiment. And we do understand manufacturing employment's only 10% of the total of the country, but we think we see it in manufacturing first, and that is sometimes 6 to 8 months ahead of the rest of the sectors. I don't think we're missing anything. I think these panelists are, and through our report you can read only 10 of the hundreds of comments, they're being very clear with what needs to happen, and certainty is it. If we had had a initial bump in tariffs and maybe a smaller percentage increase, I feel like these companies would have figured out what they can absorb, what they have to pass along, maybe done some supplier resourcing, and then moved on. But because it's an ever-changing landscape, it's hard to make decisions. And customers, on top of that, in certain sectors, just aren't ordering.
Susan Spence, thank you so much. We really appreciate your insight today. Chair of ISM Manufacturing PMI at the Institute for Supply Management. Susan, thank you very much. Thanks for joining us on the show. Still ahead, the overall look for the market. We are seeing some back and forth action. We do have some stock picks for your portfolio. What you need to know, the watch list. We'll be right back.
Well, well. Lily's about to hit my 90233. I got my second win now. Nvidia's pulled back to support, day low, market intraday, not counting pre-market. And AMD's at the 200. Apple has a quad bottom. Working on it in a way. SPX is getting ready to squeeze. Got higher lows, an ascending triangle, kinda. Doo-doo. Well,
sometimes, you know,
there's an article in here that says that the cars broke past 50, new car broke past $50,000. I know they went up a lot during the Biden years. Used cars went up 30%. New cars went up about 15,000. I could get a new car. It used to be about 4 or 5 years ago. I'd get a brand new car for 25,000, 30,000. Now they're 50.
Is with us, and what's interesting within your story here today, you brought us picks and pans because there are some areas that you're willing to shorten the market. It means that you don't think that this is the rising tide lifting all boats. On the contrary, sounds like you got to be somewhat of a stock picker or very selective with your money. Is that where we're at?
Good to see you, Nicole. Yeah, you hit the nail on the head. As I'm
hit
reminded,
the nail on the head.
You know, it's a market of stocks, and the other one-liner, you know, the market's not the economy, and the economy's not the market. As evidenced by the material underperformance of the equal-weighted market versus the S&P. You know, the large cap names, the S&P is really powering ahead. That's no secret to anybody. But just looking at the numbers for October, I think the S&P, which as you know is cap weighted, was up, I believe, a little over 2%, and the RSP, the equal weighted, was actually down 0.9%. So you're actually seeing that. And it also reminds me, you know, I've been through the wars, but back in 2000, when markets were running absolutely crazy, I recall early in 2000 a quote. You always sort of remember certain things that people say at certain times. At the height of the mania for tech in February of 2000, there's a great quote, I have it somewhere. If it's not tech, it's dreck. And that's kind of what the story's been like in recent months, at least in the U.S. market.
I mean, we've seen a lot of that. I mean, we were just talking about Palantir, which today is at a record high ahead of its earnings report. In the meantime, you do still think gold is somewhat of a safe haven. I know it's pulled back off the highs. You know, it came down 10% at one point. Your thoughts on where gold, you know, the investment in gold, should people do?
So, I'm sorry to be boring. I know we've talked about gold the last couple times I've been on, but fundamentals really haven't changed much. The drivers that are moving the gold price haven't really changed. People tend to focus a lot on price. Look, it clearly got ahead of itself. I mean, it depends whether you're a trader or investor. I'm not a very good trader. As the saying goes about Apple, you know, don't trade it, own it. I'm the same way about gold. Gold, it's a safe haven, it's a store of value in a world characterized by tremendous geopolitical uncertainty and continuing printing of money by central banks. It's not so much the price of gold is going up, it's more the value of money is going down. And so I think, that dynamic hasn't changed. People say, well, they'll ask me, so George, what would make you become less bullish on gold? Well, if we had some responsible fiscal policy, monetary policy, then you might catch my attention.
Here's the knife.
The song remains the same, and people want to know how high can gold go. Nobody really knows. But recently I read something from Chris Wood, the global strategist from Jefferies and Company, and he had a really good point. He made a couple calculations. He related the price of gold to M2, and also the value of gold to the CPI. And on those measures, 6,000 is an easy target. Another calculation came up with 12,000. So trying to put a price and a time on it's impossible. I think the direction of travel is what's more important. And you look at the valuations on a lot of the gold stocks. When I say gold, I also mean silver or other precious metals, and it's also spilling over into some of the other metals as well. But you look at valuations on these stocks. I mean, Newmont, which is the only gold stock in the S&P, I think has a low double-digit multiple. It's not the most interesting gold stock, but and that's a current gold prices of 4,000. You start plugging in 5,000, 6,000, 7,000, see what happens. I think there's continued upside, and central banks are going to continue to diversify into gold. And so retail came piling in, the GLD became a meme stock in the month of September, October. A lot of those folks have panicked out now, but gold is up 50% year to date. The GDX, the ETF, is up I think over 110%, and it's handily outpaced the S&P, which I think is up 17%. And I think it's going to continue to that same degree. Probably not, but I think gold will outperform the market, and particularly the gold miners.
So you like gold. You said foreign markets to outperform more. You talked about some of the foreign markets. On the other hand, you said to short names like Tesla, Open Door, and some of the U.S. consumer stocks, including Chipotle Mexican Grill, Kava, XRT.
Kava.
You're saying short. Is part of that because of what's going on in the private equity and credit problems, and BlackRock and Apollo and KKR? Are these sort of intermingled? Why do you pick these as your shorts?
So they're all a little bit different, okay? Everyone's focusing on the positive of them. Look, it's hard to buck the seasonals right now. The momentum is powerful, albeit narrowing. So should one go out and short all these things right here, right now? I'm not saying necessarily, but some of these are one-off names. But the consumer names, for instance, is a theme, right? We all know how the vast majority of the population is being pressured with real incomes, a so-called K-shaped economy. And in particular, if you look at moving ahead, forget about what has happened. Let's look moving forward. It's caught a lot of headlines of late, but you consider what's happening to electricity prices, medical, healthcare costs, the renewal on insurance rates, food prices. I think you can see continued pressure on the consumer.
60s.
Is it enough to cause a recession? It might, but you don't need to have a recession to make these stocks behave badly as they already have. And as you know, Nicole, a lot of the consumer names, consumer staples, or restaurants, you look at a stock like Kava, which has been cut in half, but it's still selling at an egregious multiple with poor fundamentals. Tesla, the stock, may have another move to the upside here ahead of the expected approval of Elon Musk's compensation package. I think the voting stops on November 6th.
The market's going to like that, huh?
It's an automobile. It's not the first time I mentioned Tesla as a short, and I've been wrong. But it's, the market's putting a lot of faith in the future of Tesla.
This was a nice little bounce back up.
And I'm not a believer. And it's, stocks on 15 times revenues, the multiples in the hundreds. Sales are now collapsing. And I think this will be 2026 will be the third consecutive year of declining unit deliveries, and this is supposed to be for a growth company. So when these other businesses that everyone likes to talk about come to fruition, we can revisit. But, you know, I just look at what's happened with FSD. The last 10 years, it's always promises, more promises. And with a $1.5 trillion market cap and a challenged core business, I think it's highly problematic. Open Door, which I mentioned, came public as a SPAC a number of years ago. The stock was an outright disaster. It's basically a house flipper on 10 times book value.
This guy's really a cheerleader.
Its existence. The new management team is coming in. They're having a shareholders meeting or an analyst meeting this coming Thursday. Again, happens to be the 6th. And the hope is for what their new business model will look like. But I think, you know, at 20 times revenues, at least the way I calculate the revenues, and 10 times book value for the capital-intensive business of flipping homes, I think it's a very unattractive stock. Stock, by the way, I forgot to mention, was 50 cents as recently as July. Got up to 10. I think it's now 7 and change. So I think that's an out-and-out short. So I'll put it to you this way. I think overall, I mean, we can all pontificate about the market and get big picture views, but at the end of the day, you know, it's a market of stocks, and I look at, you know, on the positive side of the ledger, how many names are out there that look interesting to me versus how many I have in the sell pile. And my sell pile is much bigger and much more conspicuous than my buy pile.
Right,
so
George. Yeah. All right. We'll have to leave it there. And I know you said you were talking about the deterioration.
Well, that was rude.
Carvana and AutoNation. So more on the sell list for you today. George Noble, managing partner, Noble Capital Advisors. George, thank you. Good to see you. Appreciate it.
So we got a government holiday coming up.
See you later. Sid,
Veterans Day.
How about the government shutdown? We're on day 34. Is there some reprieve to coming? This could be the record longest government shutdown ever. A couple more days and we'll be at that point. What does it mean? We'll be right back.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Regetta
Live
down
coverage
350.
of the close every single day.
This is
Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Damn, Marley, you look hot today.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures
Check my
markets.
phone. I hear it popping.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Coin down 3%. Lulu down today.
Market moves, and Schwab is here to help.
That was on
you
my watch
with
list.
it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k,
Chewy.
saving, spending, or even retiring, you can count on
Netflix.
Schwab for market insights, live support, powerful trading platforms, and 400 branches.
Oracle at
All your
258.
service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it, getting the reaction,
You are.
strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com.
All right, welcome back to the watch list. We're bringing our panel to discuss the very latest in the government shutdown. We're on day number 34. The record was 35. And still the question is, when does it reopen? Will it be this year? Will it be this week? Brian Jacobson, Chief Economist at Annex Wealth Management. Thomas Urano, Managing Director at Sage Advisory. Thank you both for being with us. I mean, there's no question we have some details on how the government shutdown is impacting different particular sectors. But Brian, you know, what's the big picture story here? Does it hit the economy overall, and if so, how?
Yes.
Yeah, thanks for having me. And it does affect the economy, even if we don't notice it right now. I mean, if you think about all the delays as far as with regulatory approvals, that's one area obviously very important for a lot of small businesses. Also, we have all the contractors out there. There's more than 100,000 businesses that have contracts with the federal government who aren't necessarily getting paid. So I think that, in terms of the economic effect, it's really easy to just sort of look at, well, government workers, they will be paid when they come back, and so you can have some catch-up spending. But there is indeed permanent damage that's being done. It might be a little bit at first, but it does grow almost exponentially as the shutdown lasts.
He's right.
Is this a big deal so far? Not yet. When does it become a real story?
Well, I think in terms of economic impact, that's right. This is going to have a cost on the economy. I've seen estimates that are close to $14 billion in cost, so it is a real impact, right? But I think, if you look at the bond market, it's not really panicking as much. I think we've seen this happen in the past. If you put $14 billion in the...
We just hit the 63, 195 to 235, the 68.60s. No. 285 now, 290.
Brian, a final thought here, because, it's certainly a lot of posturing in political theater. And the question is this sort of a way to show that maybe, just maybe, some of these jobs don't need to be happening, some of these things don't need to be paid out? Is it sort of a sign of the times as people are digging their heels on both sides?
Yeah, there is that dimension to it where not only is it about, well, how essential are these workers? If we can classify some as non-essential and some as essential, why do you even have non-essential workers? What are they really doing? And maybe that's part of the game here, and I think that's a good way to think about it. It's politics, and it's all about kind of game theory as far as what's the point they're trying to make. And also, it's kind of an interesting period of time as we're noticing that there's the labor market slowing. We're no longer getting the labor market data. We criticize China for no longer publishing youth unemployment rates. Well, we're not publishing our own unemployment rate. So is there kind of, that backdoor way of getting achieving some other political objectives through the shutdown? It's definitely, the cynic in me does tend to lean that way.
All right, great to see you both. Brian Jacobson, Thomas Urano, thank you very much. I'm Nicole Petalides. Thanks every day for joining me here on Schwab Network at 9 a.m. and 2 p.m. This is the Watch List. Glad to be with you. I'll see you tomorrow morning. In the meantime, keep it right here. Market on Close is next.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com. I'm Nicole Pedalides at the New York Stock Exchange. Live interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
Good afternoon. We're 1 hour from the closing bell. It's 3 p.m. on Wall Street, 2 p.m. here in Chicago. This is Market on Close. I'm Alex Coffey coming to you live from our Chicago headquarters.
And I'm Sam Vidas. I'm coming to you live from the floor of the New York Stock Exchange today. Let's take a look at what is coming up on the show. We'll kick off another big week of earnings, which will begin today after the close with results from Palantir. We'll bring the report and instant reaction to you live after the closing bell. We'll check in on the state of the Mag 7 trade and why you should be on the lookout for the January effect, which could provide opportunities for the majority of yearly gains over a 3-month period. And in Options Corner today, we'll check in on Roku, which is higher today after Piper Sandler upgraded shares to overweight. But for now, Alex, take us through what you're seeing in the market action today.
Yeah, just under an hour to the closing bell, Sam, as we take a look at where the major market indices here in the U.S. stand going into that closing bell. It's a mixed day, and it's been mixed throughout most of today's session. S&P 500 up in real time about 16, 17 points. That's 0.25%. The NASDAQ 100 has been the leader and continues to be the leader, up about 0.5 percentage point. And of course, the Russell and the Dow have struggled throughout the session, both down just under 0.5%. Taking a look at some of the other futures products.
my timing's not right. Go back to the 200 EMA. I'm getting older day by day. Think I'll get ready to jump in this trade, run it up to new highs. Break the sky. Let me see. So if this market does die, we've got an adverse head and shoulders. Hold back, you see. We're sitting at the 200 SMA. Washboardjim is not himself, so he's taking his time out. It's the first red day I've had in a long, long while. The day's not over yet. I'll still get another trade in. I'm gonna jump in this SPX and run it to the top again. We need to break 68.58. That shouldn't be too hard. I'm sitting like a frog on a wet log. It's about time for it to break, for heaven's sake. I did hit a milestone this last week. I went to church 40 weeks straight. Let's break to 68.58. That sounds awful great. Jenny Horney is about to speak. I look into her eyes and watch them tweak. She got them hot lips. Jenny Horney. Thank you very much. I think it's getting right where we want it. Beautiful words. I'm getting better. I've always been great. What are you talking about? Oh, yeah. Here's the knife we need. We've got a Head and Shoulders. We talked about Willis It's hard to call this one, so I'm going to do two lines. Yeah, it's definitely in this channel here. Still waiting. Right now, oh, it's power hour. Oh, no, yeah, it is. Post power hour. So let's go over the watch list real fast. Apples that support. Oh boy, these things are $1 something. $1.45. Get ready. Randy, we're at the shoulder line. I'm going to go for it. I'm going for it. We're at the head and shoulders. Inverse head and shoulders. Inverse head and shoulders. Every trade I've done today has been risky. So let's put that in the books. Oh. I know. I know. I went over it this morning. PLTR is the big one. Okay, the crowd's going wild here at the Sports Winner. We're at 155 right now from 140. Come on, baby. Come on, baby. Hello, my name's Jeannie Horney. Okay, we can't go much lower than this. or I'm going to have to get mad again. $185. This could be the big payday. This could be my big payday. I'm at 170. Jim, you're up $150. Have you ever thought about selling? No, I can't. I could. I have 5 contracts at $1.40. The crowd's going wild here at the sports arena. Jim has an inverse head and shoulders right here. Uh-oh, $2.10. I waited all day for this trade. Oh, don't stop. What the fuck? The big delay going on here today. We're trying our best. Yes. Randy, today has been a tough day. I could have sold these at $2.10, and I didn't do it. We got back to 140. I will be after this trade. If I can get out, I will be after this trade, I hope. I'm not green right now, no. I'm down $400. There's 205. Now I'm green. Let's go. Let's go. I want everybody to walk away today saying that the fat cats want to pull back. That's all we've been hearing. Now we're at $2.20. If I can get to 40, I'll be up $500. And I have a green day right now. I should sell it because this has not been an easy day for me. Very challenging because almost every chart, it's just been a hard fight. But this one, I waited for that right shoulder line, and we're getting ready to squeeze any second. It could go either way, but if it pops, oh, the funny guy's up. I haven't heard this guy makes me laugh.
More than 5% of one position, and so on and so on. And here we got NVIDIA, 8% of S&P 500. So many money managers, and I look at our members who are money managers, are underweight in NVIDIA. And
I'd like to do a criminal background check on this dude.
up. And then Max 7 overall is now of S&P 500, and the same concept, managers who prudently diversified are underweight in Max 7, and they're underperforming. So going into the year, they want to catch up with the indexes at least, if not beat them. So they're going to buy NVIDIA, they're going to buy Max 7 stocks, anything that dips, like Meta has now dipped after earnings, I expect it to be bought.
Exactly.
This seems like something that might be shocking to many at home, that it's even possible some of these names could be underweight in portfolios. These seem like career-breaking decisions, but as you said, some of the charters or the prospectus of these different fund managers just simply don't allow them to carry positions that big. So not to push back, but how could they grow those positions? If anything, aren't they going to be selling them to get back to their 5% cap or whatever that cap would be?
Well, from what I see is, at least what we see with a lot of our members is, they have NVIDIA like 3%, 4%, that's what I see. So they might be able to go another 1% or 2% up. And then they're going to buy some related companies, right? Why do you think something like Micron, MU, memory maker is running up so high? Because the managers, if they start running into their caps, they're looking at stocks.
We're at $2.10.
Very highly correlated with Mag 7. So that pushes the whole market higher.
None of these are level.
Does well.
Yeah, that's always interesting,
question,
right?
though.
Because it's like you're diversified, but you're diversified with high correlated items.
Definitely the 200 resistance.
Conversation for a different day. Let's talk January effect. I know it's November, but we know the market's forward looking. And there's a reason that there's this whole concept. For those at home who maybe haven't heard of it, do you want to walk us through what you mean by that and why it might be time to start thinking about it already?
Sure. So Alex, it used to be a long time ago. I've been doing this for a long time, 30 years ago. You went out and bought what I call general effect stocks in last week of December, and you made 20-30% in a month. But as people have learned, more people have more information, so this starts happening early and early. And now I expect November is the time to buy these stocks for general effect. So let's talk about what general effect is. So two things happen at the year end. One is investors have a lot of gains, like we have this year, and investors are looking to, especially if they sell something, they don't want to pay taxes, so they're looking at the stocks where they have losses, they want to sell them. So the stocks that haven't done well get artificially sold because of tax loss selling, somewhere in November, early December in this period. And there are down spikes, and you will see some days there will be big down spikes on stocks that have been that haven't done well. And the second thing is, as we start getting close to the year end, so money managers, after a year, they're going to send out to their client, their letter. This is what we were holding at the end of the year, and no money manager wants to show their clients, we were, holding the worst performing stocks. Nobody wants to do that. So they start selling. So these stocks come under tremendous pressure at this time of the year. And of course, when the calendar turns, two things happen. One is that selling pressure lifts. And the second thing is what I've observed, how it starts, is that Wall Street professionals get very big bonuses. And what I've seen is Wall Street professionals tend to look for bargains. They don't tend to go for the high flyer stocks. So they are looking for bargains, and they're saying, oh, well, let's look at these stocks. They have been really, really sold. So let's buy them. And once these stocks starts moving, then, they start forming formations, technical formations, like a double bottom and so on. And the crowd that follows the technical analysis say, oh, these things are bottom. They start jumping up and start buying these and so on. So what happens is you kind of, from the trough to peak, trough sometimes in November, peak sometimes in mid-January to early April, you start seeing, as much as 30%. In some years, we have seen 50% move up in many of these stocks. And on an annualized basis, these are just superb returns. Now, some points of caution, you don't want to buy one or two of these stocks. You want to buy a basket. We just published a list of 26 stocks. So you want a basket, you want to be well diversified, because some of them will not work. And then some of them will have, 50% return, 100% return. So you average out to about something like 30%. So that's how it kind of works out. We've been doing this for 30 years, every year. About 80% of the time it works great. 10% of the time, well, we don't lose money, we don't make money. About 10% of the time we end up losing money. So those are pretty good odds.
You can kind of see how these two things work together too. You were talking about the chase. Now you're talking about the January effect and how that's driven by tax loss harvesting.
Okay.
Selling of window dressing, I guess, would be the term people like to say. And so let's talk about that basket strategy. You got about a minute, 2 minutes here. High level, kind of the way you approach this at the Aurora report to kind of reduce that risk. You walk through some of those probabilities of success over time, but how maybe making those baskets improve those odds in your experience.
Yeah, so we talked about diversification, right? So on one hand, we're going to see a chase on these big Max 7 AI stocks, right? And then the other technology stocks that people are buying are really correlated to them. But now with this general effect, what you're doing is the strategy is totally uncorrelated. You're buying the stocks that have not done well, right? So they're not correlated to NVIDIA or Microsoft or Google or anything like that. So that gives you a very, very nice diversification in your portfolio. And but again, these are not long-term holds, right? You're trying to hold them for about 3 months typically and take your money and run.
Yeah, no doubt. Excited to see where things shape up. It's been such a fascinating, not only last year, but last 2-3 years as this AI build-out continues to roar on. But we got to leave it there. Always a pleasure. Thanks again to Nigam Arora of the Aurora Report. We're going to send things back to New York and Sam Vadas.
A very interesting man.
For that, Alex, well, coming up next, we'll look at the trends in the investment advisor business and the role played with ultra-high net worth clients. Market on Close will be right back.
He calls it baskets. See, again, I didn't sell it when I was up. Should have, and then I bought the dip cheap. I really do think the fat cats are trying to bring us down, but it could be just one of them Mondays. This is the hard part. I got 32 minutes left in the market. You would think the way the market's going that PLTR is not going to do too well. Because I got mixed messages about it. Just because it's up so freaking much. $4,000%. We got a double bottom on Meta. I might do a chart on Meta tonight.
Don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Bartis, live from the floor of the New York Stock Exchange. Let's jump into the world of registered investment advisors, or RIAs, with our next guest, Jack Ginter, who's the CEO and founder of our Callan Family Office. Thank you so much for your time, Jack. So you deal with ultra high net worth individuals. Just give us a snapshot. I mean, here at the Schwab Network, particularly as we look across these earnings, we're constantly talking about this bifurcation, this bifurcated consumer, this bifurcated stock market. Just give us a sense of what that portion of the population it represents, and can you put a dollar figure on that?
Yeah, Sam, so it's great to be with you.
Yep.
When we think about ultra high net worth clients,
They were freaking out when it was at a 3 trillion market cap. Now it's at a 5 trillion. NVIDIA. Soon it's going to be at a 6 trillion. Why? Because I'll never forget what the CEO said last week. He's going to make America great again. And you know that had to piss off a lot of them progressives. He really, I can't believe he said it. I'm still shocked, but, and then I watched the CEO of PLTR tell him that he's a patriot in their latest interview. The CEO of NVIDIA. Yeah, I'm going to sleep this off tonight. Tomorrow I'll come in make threefold of what I did today to the green. This has been a fucking shitty day. I can't believe I'm getting almost every one of these trades.
Hear of higher income earners having to trade down in this sort of environment. What is the biggest question that your family office is fielding right now?
Yeah, the biggest questions that we're really fielding right now, so you're right on when you talk about, where is the economy right now? From the April lows, we've seen a run up of roughly 35% on the S&P 500. And so there is an expectation around volatility. What's different about the clients that we're fortunate to serve is they have a level of wealth that will outlive them. So we're talking about multi-generational wealth.
On PLTR
today in Callan Family Office is on average over $100 million of liquid assets that we're advising on. So they're really thinking very long term around their portfolio. So we're actively talking to them about private market opportunities that are available to them and getting them access to the best opportunities that we have in the marketplace. And so it's a very different conversation. They're certainly concerned about the economy where we are right now, looking at the economic data, looking at the resilience in the economic data, but also some of the challenges. But we have a different consideration set when we think about managing wealth over literally 100 years for some of these clients and families.
Oh, that's interesting. I just wanted to sort of get an idea then from you. I mean, you mentioned private markets, where some of the opportunities are then sort of when you're thinking a bit more longer term, because obviously we're seeing a lot of changes and sort of paradigm shifts as to even, how the US is thinking about things, even like a reindustrialization of manufacturing and onshoring, etc. I'm just thinking, what sort of themes are you sort of advising or thinking about right now to offer clients?
It's a great question. One of the great benefits we have at our firm is our strategic partner is the independent consultant Callan LLC. And so literally they're advising on $5 trillion of institutional pools of capital today. And what they're able to do is give a global opportunity set to the clients at Callan Family Office and give us access. So it wouldn't be a surprise to you. We're really focused right now on technology, on AI, on venture opportunities for some of these clients. We really think, from a portfolio standpoint, that's the area, and thematically, that's what we're looking at to make some investments literally right now.
Great, it's all about AI. Jack, it's been an absolute pleasure. Thank you so much for joining us here on the Schwab Network. That is Jack Ginter, who's the Callan Family Office there. I'll send things back over to Chicago with Alex for now.
Coming up next, it's Options Corner. Rick Ducat's going to join me here in studio in Chicago. We're going to be taking a look at Roku after an upgrade. What's next on Market on Close?
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast, and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started,
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charts like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. Shares of Roku are higher today after Piper Sandler upgraded shares to overweight from neutral and raised its price target to $135 from $88. The firm said platform investments across advertising and SSD are beginning to shine, and it's more confident that momentum can continue into 2026. I'm Alex Coffey. Joining me here in studio, lead market technician for the Schwab Network, Rick Ducat, is here. Rick, always good to catch up. Give me an overview of Roku here and just where you see it relative to some of the other, asset classes, sectors, things that it's tied to.
Right, so Roku doing pretty well during the past year, up about 62% here. Compare that to the XLC communications sector ETF of about 23.5%, and the broader S&P 500 only up about 20%. So
look at Disney today.
Doing quite well. If you
look at all my
compare it,
woke stocks.
Names in this streaming space, well, the comparisons are a little more muddy here. I mean, you do have these other names like Warner Brothers Discovery, Netflix, Paramount, Disney, Comcast. But many of these companies have their hands in so many other businesses, it's kind of a difficult comparison. I mean, Comcast is a telecom, but they also, have Peacock and et cetera. So either way, though, doing rather well here, versus the broader communication space as well.
Nike looks interesting.
Names here. And as
for Christmas.
Said, analyst news was positive. We had earnings last week, came in pretty strong. Guidance was good as well. Piper Sandler was the most notable price target change and upgrade that we saw recently. They raised their price target to $135 from $88, like a 53% increase there. So perhaps a bit behind the curve there, but better late than never, I suppose.
Yeah, it's interesting. I don't know how I would if you would have really asked me, like, which names do you compare to. I almost think of Roku as an aggregator, but what other charts you're looking at? Because this is, this is options corner, but you're a technician, so I'm sure you got some technical takeaways.
Sure, just to explore our yearly chart here for Roku, the first thing that we can see, 105, this red line here, the intraday highs came in just below that 105 level. That's about where we topped out a second time. Then earnings gave us a big push to the upside. However, we didn't, hang on completely to those highs that we formed just below 117, but still managed to close above that 105 resistance level. Today, things are continuing to the upside more. We're a bit off the open, but still notably up from our previous close here. For the most part, price remaining within this upward channel type shape in white here. You can also see a supportive area, 95, old highs, subsequent lows there. That was around where things started to stabilize in terms of closing prices, at least in that area. If we were to look at a few of our other studies here, we can see that our volume profile here shows that a substantial volume node was about where we had our springboard point where we stabilized and then recovered from. So that area near
Walmart.
95, 96, 97, that general point.
I didn't look at Walmart today.
Traded volume here. You can also see that was around where we saw our moving averages and our linear regression line, our line of best fit. So that was a important supportive area to hold on to.
All right, as promised, it is Options Corner. You got your eyes on some of the activity that we're seeing within the derivative space here for Roku. What stood out?
Sure. So if we were to look at our expected move for the November expirations,
Meta new low.
18 days that
Unbelievable.
that happens.
I don't get it.
9.7%.
I don't understand why Meta is so low.
Purple shaded range here. And if you were to kind of assess that versus some of our other technical levels that we discussed here, the lower end lines up with many of the things we pointed out earlier. 98 is where that lower end would come in, right around this confluence of supportive areas here. So that stands out as a notable boundary to the downside here. To the upside, our +2 standard deviation.
Well, I do get it. I know the market wants to sell off.
Meanwhile, the upper end of that range comes in around 119.60. So
it validates my
general area that many
thesis.
would have their eyes on for a potential resistance point or consolidation point there. In terms of the overall options market, about 16,000 options changed hands today, 63% calls. Notably, this is a light day. The sizzle came in at about 0.75, which means it's about 75% of the 5-day moving average of options volume here. One interesting trade I saw, now this is a bit of a smaller dollar amount than we typically talk about, but this was the biggest volume trade for the day, plus 430, November 21st, 120 strike calls at a 188 debit, so about an $80,000 debit paid. It looks like it was an opening trade. The volume was almost all of the open interest for the day. There were no corresponding trades in the past, so it seems like it would have been a bullish opening trade. Break even 121.88, about 12% to the upside. Expected move only about 10%, as we saw, a little under 10%. So that trade would need a bigger than expected move just to break even.
Yeah, a couple things. I love the ties in of the technicals to the math, which I believe, the options market is the math of the market. And so you realize the more you do this, that it's not just lines on the screen. And then also that sizzle probably skewed a bit from the earnings activity. But Rick, always a pleasure. Great breakdown. Tons to look at here in Roku. So we send it back to New York and Sam Vadas.
Well, coming up, we'll zero in on the big news of the day, and that is Amazon's deal with OpenAI. We'll discuss what it means for both businesses coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
How's it going? First day, so. Sometimes, Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Stay connected to the markets with Schwab Network.
Jim gives up.
24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services.
Schwab Network, available anytime, anywhere, on any device for free.
Welcome back to Market on Close. I'm Sam Vadas, live from the floor of the New York Stock Exchange alongside Alex Coffey in our Chicago studios. So let's discuss today's big deal between Amazon and OpenAI with our next guest, Nathaniel T. Bradley, CEO, Datavault AI. Thank you so much for your time, Nathaniel. What do you make of this deal?
Well, thanks for having me. Well, I'll tell you what, you can't say it's the Three Stooges. I think that NVIDIA is a tremendous company from a semiconductor standpoint. There's nothing you could say about that company other than they're approaching perfection. It's a great company. But the two others, literally made for each other, two peas in a pod. OpenAI is an abomination. Their logo looks like it's eating itself, or like a dog eating its tail. It's pretty appropriate. OpenAI is true to its name. Was meant to be open source, but it's no longer open. It's for profit, and it's there to learn you, so it doesn't need you anymore. In terms of Amazon, classic company that's famous as a fast follower. OpenAI better be careful, because there's going to be Amazon AI, and they'll get rid of OpenAI at some point. But
Oh, you think so, huh?
These two companies, make the Chinese blush about the way that they operate. They take people's data, they take information, and they build companies. There's a concept in AI, success will kill you. If you're a Ford Motor Company and you use AI, systems, to manage your meetings and manage your payroll or any other aspect, you might be surprised to learn that you gave up the blueprints of how to build an American machine, how to have a system that's proprietary to your own, and have even your brand name protected. So I think these systems are terrible. I think the investment is late to the game, and the Mag 7 doesn't include IBM for some reason, but to me, that's your leader. That's the company that said, there's going to be proprietary stovepipe pipes, and we're going to make AI in agentic forms where we're going to connect agent to agent. But these are no different than apps and other mechanisms that companies use. OpenAI takes this approach of, well, no, we're not open anymore. No, we're not for-profit anymore. But we're going to take everything you know and do and pretend to be a service, like a Facebook in disguise, and get all your information. And when we have it, we don't need you anymore. So that's what I feel about it.
Nathaniel, in your notes, you talk about compute power and data being inseparable assets. How does this deal reinforce that, if it does?
So there's no question, follow the money. The AI systems and the data systems, the systems designed to monetize data, and I'm no stranger to the space. I mean, I'm the CEO of Data Vault AI, and that's our mission. Some of these companies lack the proprietary freedom to operate. Others simply don't have respect for the value of data when it belongs to others.
It's a fact.
And we have Bloomberg as such a great example of data sovereignty. And he pays for data.
I'll say this day just
he's like basic cable, and probably one of the most brilliant Americans.
burning money.
And what we see is now a next generation that can feast on that invention and bring it into
I had it coming to me.
Capability. So organizations like your broadcast organization, organizations like mine, technology-based, have a ton of...
It sucks. It really does. Nothing. Every trade I got in was just like almost a disaster.
Floor in the deal. If we start looking at some of the rare...
I'm glad I didn't trade a lot.
...elements around us and start to use AI and data to perfect our world, there's no question this is occurring. Here's two parasite companies that are always late to the game and don't really have our best interests at heart. And we've seen that from these two organizations, both in their work conditions and how they treat their employees, how they treat the general public and their customers.
Yeah, that's a word that I can't.
Data sets. Amazon is a taker, and I see
I can't pronounce.
Is their accelerated AI peer, and NVIDIA is held harmless. That dog will hunt. That's the best product.
Ecclesiastic.
UK.
Ecclesiastic.
US.
Ecclesiastic.
UK.
Ecclesiastic.
Ecclesiastic. Ecclesiastic.
Ecclesiastic. Ecclesiastic.
Ecclesiastic.
They're about the same.
Ecclesiastic.
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 Aren't they the same?
Ecclesiastic.
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 First time I heard it, it didn't sound like it.
Ecclesiastic.
Ecclesiastic.
Ecclesiastic. New low on Meta. New high on AMD. Double top. Six more minutes and I'm glad this day's over.
Of people's estimates. If you look at NVIDIA, that's a great example of
Oh, boy.
how processing power has outpaced memory, how it's outpaced operating centers and NOCs and all of this power consumption. Now, don't forget the coolant.
Oh, you want to hear the Narcissistic song?
Today about putting supercomputers on the moon because he needs coolant. And so there is both the coolant and the energy that lacks the centers, and then the equality. This is a rich man's game, a rich company's game. If you're in the top 3 rich people in the world, you're talking AI and the ability to play in that game.
I'm talking about shutting your mouth up. Is your son around? Okay, get ready. Here it comes.
Narcissistic Jim, with his ego and his wit, doesn't give a damn what you think of him one bit. The market takes a dip, SPX Jimmy will buy. Bitching at Molly Carolyn, still the apple of his eye. Burp it up, Jim, let it fly, let it roar, let it roar. Stocks tend to rise with a fart from his core. Narcissistic Jim doesn't care what you think. He'll burp and fart out loud until his room stinks. Candles on his screen bounce like titties in the night. Burps get so loud the neighbors say jam. Let it fly, let it roar, let it roar. Stocks tend to rise with a spark from his core. Narcissistic Jim doesn't care what you think. He'll work from far out loud till his room stinks. Lots of fun he has, his ego's ablaze. Burps and farts collide, the room is so amazed. Narcissistic Jim, the legend, the king, playing his own mind until that closing bell rings. Narcissistic Jim. Narcissistic Jim.
Yeah.
To the green, really nice bounces if you're looking at Bank of America and some others within this space. And that's another sector that you really want to see outperform. There has been this chatter, Alex, and I'm sure you probably saw all of this on maybe some YouTube videos over the...
Well, I don't think there's a trade in here I want to go through. I really don't. This was probably one of the worst days I've had all year. I would say it probably was. So tomorrow we come back in and I do it threefold, maybe fourfold. Can't wait to see what PLTR's earnings are going to be. Oh, very good. The way they've been pumping PLTR, there it goes. It's going up. It's the best software company, and it's not even close, says D.A. Davison Gloria. Here comes the chase. Somebody got some insider information. I think Vegas had a target of 210. Somebody sold it for $1 cheaper there. Well, I'm going to get out of here. I don't even want to talk about trading. Come in tomorrow with a brighter future. No, it wasn't. Well, instead of being narcissistic, I was more or less. What do they do? Oh, I'm looking for the perfect word. Reality, put in my place. Humbled. Is that the word I'm looking for? I was humbled today. That's what they would say when you were getting beat up in boxing. Well, there goes all your cockiness today. You had the skinniest guy on the team knock you out. It's just unbelievable. Well, all I can say is thanks all. We'll see you tomorrow. Ain't that right, livid goose?